Thank you all so much for joining us this morning. We're really thrilled to have you at the Global Blockchain Business Council's Blockchain Central UNGA. My name is Marcina Tilleman. I'm the Chief Operating Officer at GBBC, and it is my pleasure to introduce you to Dave Treat, who is our board chair and a senior managing director and global lead of Accenture's blockchain business. So without further ado, Dave.
Good morning. Welcome to day two. I'm horrified at the before and after vision you have on stage right now of pre-COVID and COVID, but it's a pleasure to be here. I had some phenomenal conversations kicked off from yesterday's conversations, and today is going to be no different. The focus today, a fantastic lineup. I'm really looking forward to hearing some old friends speak, and of course the topics of digital identity and carbon markets and financial inclusion and all of the killer use cases that have emerged from our technology innovation wave and our ability to take these technology change triggers and turn them into the valuable businesses and social impact and humanitarian outcomes that, of course, the SDGs we've been all working towards over years. And this is one of my favorite weeks because it certainly marks a continuous reinvigoration of that focus. And this community in particular has always been, I've found, one of the most action outcome oriented communities. And so I love this week for that purpose and these conversations and that opportunity before us to engage, to share our ideas and progress and make connections and drive forward with a renewed set of outcomes and potential for the coming year. I just wanted to share a few thoughts around our focal areas and where certainly I would love to engage with all of you around our agenda and how we're applying it to help drive the SDG goals forward. We've organized around our view around three killer use case areas that this suite of technologies trigger. And it is a suite of technologies. It's not blockchain as a maybe little b blockchain as a topic for a variety of architectural patterns, the relationships and integration with things like extended reality and AI and everything that goes from the base metal of the technology through to the end points and the human end of where technology actually changes our human experience. And so we organize around the future of financial infrastructure, the digital currency and digital markets, and much of our collective focus around rethinking the nature of who does what. And when we think about the technology's ability to help us drop the orthodoxies that we've been living under for the past decades around how things have always worked and break free from incremental innovation to really think through what does a digitally native currency look like and what can it do? How do we thread that needle in between the notion of course, the digital world is unbounded by geographic limitations. It is by definition unbounded in that context. And yet we still need to be pragmatic about how does that operate within the national, legal, societal choices that we want to make within our local communities around how we want to live and work and be with each other. And so digital currency, digital markets, the reinvention of markets, underpinned and partnered by digital identity. And again, that premise of the hybrid systems that are emerging between the national identity systems, which are core and key, the federated systems around communities that want to organize around their collective identity, and the self-control that is emerging in the technology pattern to be able to manage your own identity and choose with whom you want to share how much for how long. And that last part being the coolest around actually you could revoke access to aspects of your identity. And then what this means for end-tier supply chains. And I use the word end-tier because this is the rethink of order to cash, procure to pay, logistics, trade finance, the entire set of things that we've looked at individually that have held us back because we've looked at those as individual domains, and the potential for us to actually much more in a much more connected, fair, way connect those original producers in small communities with the value that comes out of the supply chains in our consumer world at the other end, that divide is just so massive today, and the basis for so much inequity and lack of access. And so these technologies between digital currencies, digital markets, and supply chain reinvention through this suite of technologies gives us the framework to then actually drive real change, and not incremental change, not have made a little bit something 10% better, but fundamentally rethinking our systems. And how much fun is that, right? So I'm self-critical. I tend to live in the exuberant side of what's possible, and pull myself back to the practical realities, which we can all do together. But I'm really encouraged by what this technology can trigger, how we collectively can actually lean in. And Elisa just reminded me of I'm going to get the quote wrong, but the notion that it is Mead, right? The notion that a small group of people have only been the ones to ever drive big change. And so that's us. When I look around the community that we've assembled within the Global Business Blockchain Council, Sandra and team have just done a phenomenal job at curating such a high quality community of people who don't want to just talk and don't want to just write, but want to actually turn it into action and outcomes. And so what a great opportunity. I'm looking forward to interacting with all of you through the course of the day. We've got a phenomenal lineup of speakers. And have I bought us enough time I'm on time. All right, excellent. So want to welcome you to the day. Let's all connect. Let's all get inspired around what the reinvigoration of what it is that we can do, and let's trigger a whole new set of progress, outcomes, engagement through the course of the next year. So with that, I think I'm handing it to who am I handing it to? For Robert? Back to, okay. No. So thank you. Look forward to connecting with all of you.
Thank you so much, Dave, for kicking us off. We all have our mandate for the day, day 2 of GBBC's Blockchain Central UNGA. I'd like to introduce Robert Opp, Chief Digital Officer at the United Nations Development Program. Thank you, Robert.
Okay, thank you very much. Thanks, David, for the welcome. Thanks, Sophia. It is great to be here. It is strange to be here, I have to say. This is the first time I've been speaking in front of a crowd for a good 18 months or whatever it's been. And so it's a pleasure to speak with you and try this format, which is partly physical and partly virtual. My name is Robert Opp. I'm the Chief Digital Officer for the United Nations Development Program. And I'm going to speak a little bit this morning about how the blockchain and other digital technologies feature into the work that we do, which is international development with 170 country partners worldwide. So I think we have to start the conversation with the elephant in the room, the COVID pandemic, and the impact that that has had on human development, which is significant. In fact, UNDP, which produces every year the Human Development Index, saw last year, for the first time since it was created in 1990, a decline in human development. And so that means that we have quite a lot of work to do if we are going to achieve the Sustainable Development Goals by 2030, which was the target set for us. And so we have a significant setback when it comes to the Sustainable Development Goals. And the question is really, where are the acceleration factors going to come from? And, you know, even before the pandemic, UNDP believed that technology and digital approaches were really one of the accelerants that we could use for the Sustainable Development Goals. And we believe that even more now. In fact, we've done a little bit of modeling to look at how the impact of COVID works on extreme poverty. Extreme poverty is living below $1.90 a day. And so we did some modeling of what would happen if just things more or less just stay the same. And that's the COVID baseline line here. And that, following that line, by 2030, we would actually have 40 million people more living in poverty than we do today. The green line and the red line represents a kind of a worst case scenario of problem after problem compounding, and that ends up in a place that none of us want to go. But the green line represents a sort of modeling of a number of selected investments in key areas of economies like green economy, social protection, and digitalization. And with that, we can actually see that we could end up in 2020 with 100 million people less in hunger than we have today. And so that's what we're shooting for when we come to accelerating what we're talking about. Now, the UNDP is the development arm of the United Nations system. We are working in 170 countries and territories with 18,000 staff members, and we have a fairly broad mandate, and we work across areas like climate change, governance, renewable energy, and other things. And so our mandate writ large is poverty reduction, but we do that via these kinds of programs. And the reason why UNDP has a chief digital officer is because we are undergoing our own digital transformation. And this comes as a result pre-pandemic, thinking that digital technologies really are an accelerator for international development. And in order for us to be able to maximize the use of them and the impact of them, we needed to launch a systematic digital transformation, which has as a vision to be a thought leader and a practice leader in digital development. And I'll explain a little bit more about what that means. But we had sort of kicked off our kind of digital transformation effort for about 6 months when COVID hit. And that is when we realized just what a digital accelerator COVID was itself. And so we were starting to be able to see in a very fast time period how digital transformation or digital infrastructure could actually assist COVID response. And so one of the things, some of the insights we got out of COVID were that, for example, countries that had invested prior to the pandemic in digital infrastructure were able to respond much more quickly than those that had not. And so I could use the example of Pakistan, which had put in place some digital foundations in digital identity systems and social protection systems before the pandemic. And when the pandemic started to affect Pakistan, they were able to scale their program by 7 million people. They added 7 million people in 2 weeks. And that kind of scale and speed is not possible if you're not leveraging technologies of some kind. So that was really one clear insight. But there's also some issues that were raised. And so I think all of us noticed that in the course of the pandemic, if you were connected and you were able to keep working online and connect to services online, that's great. But for those in the world who are not connected, that digital divide is devastating. And so there are still about 3.5 billion people, 45% of the world's population, that are not connected. So that is something we need to fix. We also know that as countries rush to use digital, it wasn't always an equalizer. So partly because of the digital divide, but partly because if you're not being intentionally inclusive about how you design your systems and how you design your approaches, you actually can leave more people out. And so that's another thing that needs to be addressed. And then lastly, we all saw, I think, the proliferation of misinformation through digital platforms. We see other issues around data privacy when it comes to the conversation around contact tracing, and other risks, including extremism and hate speech, which were there before the pandemic, but they were exposed as being real challenges. And this is why at UNDP, we take a holistic approach. We support countries worldwide in all sorts of digital projects and responses. And in the wake of COVID, we saw hundreds of digital responses being used. But what we're trying to discuss with governments now in the work that we do is how to take a whole of society approach, a whole of nation approach to digital transformation. One that really looks at infrastructure from a kind of component, interrelated component point of view, so that you see that if you are trying to use, let's say, we're here talking about blockchain technologies today. If you're trying to use blockchain, but you don't have the sufficient regulatory structure or the people skills or the business ecosystem to do it, you're really going to struggle. So we try to have that strategic conversation with our partners about how to put those components in place. Now, we are here to talk about blockchain. So Let's switch to that for a second. So, in this kind of tapestry of whole of society digital infrastructure, we do definitely see the value of blockchain technologies. And UNDP in one form or another has tested use cases in all of these areas. I'm going to deep dive into a couple of them in just a second, but they range really from kind of those foundational layers of society of kind of the digital infrastructure side of things to linking suppliers to consumers and that sort of supply chain work. So I'm going to deep dive into a couple of examples of the things that we've been involved with. And then I'm going to give you an example of an idea that's on the table, and we're looking for partners. All right, so the first one, David just mentioned in his introduction, sort of the track and trace use case. I think this is not going to be news to any of you. We are currently working with argan oil producers in Morocco. They're usually produced by small women's collectives in Morocco. The price of oil in Europe is about 250 euros per liter, but the producers only get about 25 euros per liter. And we know that if you can introduce more visibility, transparency, and verifiability into supply chains, you can actually command higher prices. And so the producers in Morocco often have already a sustainable certification, but they have no way to prove the veracity of that. So the platform that we're building together with some partners, Convergence Tech and some others, we're looking at how we can really improve that provability, the traceability, so that the buyers in Europe will actually give more value down the chain to the producers in Morocco. So fairly standard in terms of a use case. We've also done this with cashmere wool in Mongolia, with cocoa production and chocolate in Ecuador, spices in India. So this isn't definitely an area that we think can deliver value. The second one is also something David mentioned about this sort of digital identity. And I know we talk a lot about that, but Sierra Leone, a nation of about 7 million people, actually put in place a blockchain-based digital ID system. I see some nodding here, so you're aware of the use case. This was done by the Kiva, nonprofit working in financial inclusion, together with the UN and Hyperledger. So this was implemented in 2019. This work has really made it possible for those who are in the informal sector to enter the formal sector of financial services. So by combining the digital ID with financial services, essentially the people in Sierra Leone are able to biometrically prove identity and therefore the KYC requirements within seconds. That used to take 2 weeks, and now it's like down to 11 seconds or something like that. So this is pretty powerful, where we start to see at a national level these kinds of platforms emerging, and I think it's really only the start of it. And the last idea I want to put out there is just an idea that we're exploring at the moment. And we're looking for partners, and that is around, you might call it carbon trading, but in the Paris Agreement, Article 6, there is a provision for countries to work bilaterally with each other on carbon offsetting activities. And so this isn't being done in a kind of a piecemeal way right now. And we're, as UNDP, we're actually working with a few countries to match the kind of interest and needs. What happens is, so for example, it could be that France needs to purchase some carbon offsets. They can do that by, for example, funding a tree planting project in Mali, something like that. So Mali is able to sell that carbon offset to France, and it's kind of a win-win in a sense with development. So what we have been doing is working already with countries to do this matching, but it's not very standardized. And when it comes to the authorization, the issuance, the verification of the transactions, this is very cumbersome right now. So we're looking at how we can standardize that. And we think that given that there will be hundreds of different transactions put together with many different buyers and many different sellers, we think a distributed ledger platform could be actually a really interesting use case for that. So we're looking for partners, and if you think that you've got something that that we can work together on, we'd love to know that. Last thing I'm going to say is just a couple of thoughts about as you go through the day and the work that you do. A few kind of observations. No question, I've already said it, we believe blockchain, distributed ledgers. I haven't talked about it, but also digital currencies. These are going to be important features of development of the future. We 100% believe in their value. Some challenges, though, are that they're very fragmented still. Even, just the little use cases that we've talked about, they're very fragmented and difficult to kind of pull together in that sort of cohesive digital architecture that we're talking about, a whole of society approach. And that's not the problem of necessarily private business, that this has to be done at all different levels. And that's why we also work with governments on this and civil society groups. If we're going to piece together a coherent digital architecture, then we need interoperability. And that's one thing that I know is a big discussion in the distributed ledger community. We have to work toward that. And to that end, digital public goods, of which we're talking about open source technologies, open data sets, open models, and things like that. We believe that those really are a great way to accelerate digital transformation. And let's face it, a lot of the blockchain platforms out there are based on open source and are essentially digital public goods. And we want to encourage that in terms of being that sort of interoperable architecture. And the last thing, I've just talked about carbon offsetting activities, but we have to fix the energy consumption issue. And again, I know that this is nothing new. We've talked a lot about it, and there's new technologies coming out every day on how we're going to do that. But before we could enter in a big way into some sort of proof of work platform, we would need to be able to prove that we're not actually reversing gains by energy consumption. So with that, I want to thank you for your attention. And it's really, again, I want to thank the Global Blockchain Business Council for having me. I hope you have a great day.
Good morning, everyone. So great to see many familiar faces, some new ones. I am here as Sandra Ro, CEO of the Global Blockchain Business Council, to introduce our next keynote speaker. And she is very dear and special to us because she is also our host. And I want to thank Donna Parisi. Did Donna just walk off? Oh, there you are. I was like, where did Donna go? Donna is going to give a few remarks. I want to thank Sherman and Sterling, not only for the continued support given to the GBBC and our mission and our efforts, but also overall, Donna is a tour de force in the financial services and fintech sector. She is truly trailblazing across not only legal spheres, but how we then connect technology with business and bringing multi-stakeholders together. So with that, Donna, thank you and welcome to the stage.
Thank you, Sandra. We're really delighted to be here this morning and host you all and of our partnership with the GBBC. So we're honored to host because we believe in the work the GBBC does, and we share your enthusiasm for the potential blockchain technology to advance the UN Sustainable Development Goals. It feels extraordinary to be here with you today. The last time this event was held in person 2 years ago, and it's worth reflecting for a moment on how far we've come since that time. 2 years ago, we were talking about the potential of blockchain technology to disrupt financial services, and it seemed that the general public was just starting to become aware of fintech and the potential of blockchain. Nobody was talking about COVID-19, and much of the world's attention was on the US presidential race. The price of Bitcoin was hovering just above $10,000. 2 years later, the world has changed in immeasurable ways. Blockchain and digital assets have evolved from a novelty investment to an established asset class, and from a potential disruptor to an essential partner in the financial services sector. Digital currency now represents $2 trillion in wealth, with most of that value being created in the past year alone, and the world's largest economies are actively exploring how to create their own CBDCs. This is happening in the context of a COVID-19 pandemic that has changed the way we work and live. In many respects, our global community is at an inflection point. From economics and politics to technology and environment, we are in the midst of what we call the fourth industrial revolution, where our society is transitioning from an industrial economy to a digital one. Collectively, we have spent a lot of time thinking about how blockchain technology can help us meet this moment. And there are many use cases. We've already heard about a few this morning, and some that are just emerging. There'll be more to be explored in today's sessions. This is an exciting moment in the evolution of blockchain technology and its application because it shifts the way we think about traditional paths in our society and its application. So consider this for a moment. In 2017, there were 1.7 billion adults worldwide without a bank account, but roughly 2/3 of these people had a mobile phone. 60% of the world's population now has access to computational power at their fingertips that was unimaginable a few decades ago. Some of you may be familiar with Kathy Mulligan, who is a member of the UN's panel on digital cooperation and the World Economic Forum's Blockchain Council. She wrote an incredibly insightful article in which she talks about the way blockchain speaks to a deep human need of being able to trust other people, organizations, and companies. Blockchain technology requires a community of people working together, and as Kathy said, the call to inclusion, trust, and multilateralism that blockchain attempts to address from a technical perspective is one that will continue for many decades to come, and one to which we must find new ways to respond via governments, civil society, academia, non-governmental organizations, and international organizations such as the United Nations. So less than a mile from where we stand is the UN, and heads of state are meeting with the intention of working collectively to solve our global problems. But I believe that the people in this room and the wider community and ecosystem that we represent have just as much potential to shape the solutions to our global problems. Blockchain technology has shown us the way. It's given us a model for collaboration and creating bottom-up solutions to problems that we face as a global community. As we have heard yesterday in today's planned sessions, blockchain technology has direct application to the majority of the UN's Sustainable Development Goals. Sustainable Development Goal 1 is to eradicate poverty, and this is an area where fintech and blockchain technology are making a real difference. Most of us are familiar with M-Pesa in Kenya, the financial application that has lifted an estimated 194,000 households out of poverty, which accounts for about 2% of households in Kenya. This model has been successfully replicated elsewhere by companies like Mojaloop, which is an open source global platform supporting digital payment systems across the developing world. This platform uses blockchain technology to integrate seamlessly with bank accounts, customer wallets, and provide a secure connection between the buyer and seller. Many of the most interesting and groundbreaking innovations are happening in countries that aren't members of the G20. In Estonia, the government is running a digitalized e-government system on blockchain, which ensures the security of government registers covering everything from healthcare and patient health records to digital IDs, property records, and even a digital court system. This system supports SDG number 16, supporting justice and strong institutions, and SDG number 3, promoting good health and well-being for all ages. Every day in every corner of the globe, more creative blockchain solutions are emerging. Underpinning all of this potential is a relatively new technology that's not well understood by the masses, and that lack of understanding is an impediment to our future success. In order to realize the full potential of blockchain, we need to educate people about this technology. More than that, we need to provide resources, support, money to entrepreneurs and founders from groups that face the most obstacles in our society. And this is where GBBC and all of us here in this room come into the picture. As leaders and pioneers in the blockchain space, it's our responsibility to support the next generation of entrepreneurs and change makers. GBBC's hackathon is a great example. Over 2 days, developers and strategists teamed up to build creative and innovative blockchain solutions to advance the UN Sustainable Development Goals. And the 3 winning teams each received $10,000 in seed capital to start them on their journey. One company that grew out of a similar hackathon is AgriLedger, which was conceptualized in a 2-day competition. AgriLedger went on to be the finalist in Kesney's Top Female FinTech Founders Competition, where they received mentoring, business advice, and access to resources across the FinTech ecosystem. These programs help AgriLedger build a seed-to-customer blockchain-enabled platform that allows transparency and traceability in the supply chain by tracking agricultural products as they move from farm to the supermarket aisle. Using blockchain technology to track and improve our food supply chains could be a transformative endeavor. 1/3 of all food produced for human consumption in the world is lost or wasted before it can be eaten, according to the UN. So improving the efficiency of our agricultural supply chains is one of the best ways to reduce global hunger. Right now, AgriLedger has a pilot program in partnership with the World Bank to track the fruit supply chain in Haiti. For example, a buyer can scan a QR code on a crate of fresh mangoes that will tell them which tree it came from, where it was packaged, how it was transported, and the costs incurred at each stage of the value chain. The transparency and accountability that AgriLedger provides, something that blockchain technology makes possible, is empowering farmers and local communities and giving consumers the tools to make responsible, sustainable decisions. That is our responsibility, and that is our challenge. And working together, we can continue using blockchain to advance the UN Sustainable Development Goals and help make our world better and more sustainable. I want to give my special thanks to Sandra Ro and the entire team at GBBC who organized this conference. We're so glad that you're here today, both in person and virtually, and I look forward to a great day ahead. Thank you.
Hi, everyone. I'd like to welcome our first panel of the morning, the future of capital markets, up to the stage.
Let me first welcome you to Sherman and Sterling, echoing Donna's remarks. My name is Rina Sani. I'm a partner in the Financial Institutions Advisory Group here at the firm, and I'm really excited to be moderating this panel today on the future of capital markets. So let me just start by introducing our panelists, and I'll take it from my left forward. We're joined by Michael Morrow, the CEO of Genesis Global Trading. Next, we have Jim, I think, yes, Jim Toffey, CEO, LiquidX, Brendan Howe, the Vice President General Manager for Blockchain at VMware, and Patrick Leary, Senior Vice President and Regulatory Analyst, Innovation Research and Development at Wells Fargo. So thank you all for joining us today. I commend you to their full bios, which are in the materials for the program, but let me just start by saying they're all extremely knowledgeable and experienced on the topic that we have, which is a really interesting and important one. And just building off of what Robert was saying earlier in terms of the potential for blockchain and digital distributed ledger technology to innovate and impact the global capital markets. So before we launch, just one quick logistical comment. I think we can take questions as we go from the audience. But certainly we'll have time at the end if people have questions as well. With that, let us get started. So the topic is the future of capital markets. What do we mean by the next generation of capital markets? And maybe just broadly, let me ask the panelists, starting with Michael, what role do you see blockchain and digital distributed ledger technology playing in the next generation of capital markets?
Sure. Hi, everybody. Good morning. Pleasure to be here. So my primary area of expertise at Genesis is more on the public blockchain side, so Bitcoin, Ethereum, kind of the cryptocurrencies. And while this discussion, I think, will largely be about sort of the enterprise, private, sort of blockchains, Genesis is also an SEC and FINRA registered broker-dealer. So lots of sort of the traditional securities challenges and how they might evolve into sort of the distributed ledger blockchain model I think is of extreme interest to me, kind of like personally, and I do think that directionally, that's kind of where the future is definitely going. So as it relates to the kind of the future of capital markets, I think I think it kind of comes back to why distributed ledger technology, why blockchain, and how is that better than kind of the existing systems that we have today. And I think one of the first things that kind of come to mind is around efficiency, doing things better, relying on one set of data and records for transactions and settlement and bookkeeping effectively, without each independent party having to maintain a database of their own. And number two is about inclusion. And being able to broaden the number of participants within the ecosystem. So I do think it's about efficiency and accessibility, and I think the evolution of capital markets within sort of the blockchain distributed ledger technology is definitely an opportunity to accomplish that.
That's great, and I think those themes of efficiency and inclusion are certainly ones that we'll continue to touch on over the course of this conversation. Maybe I can ask Patrick, as the representative on this panel from the traditional financial institutions, when you think about blockchain and DLT, what do you think about in terms of the role of traditional financial institutions in evolving capital markets?
Thank you. And my name is Patrick Leary, and I'm a senior vice president with Wells Fargo, where I focus on distributed ledger technology issues. I do need to say that the views that I represent today are mine and do not necessarily represent those of my employer, Wells Fargo. That being said, I am a regulatory analyst in this space, and I do see efficiencies, as Mike is saying, as being very important to the large traditional financial institutions, and allowing us to do our work faster and provide our customers with better service and expand our offerings. I also see, though, that in the future, I do see regulation. I think this is something we talked about before, that for the large traditional financial institutions to really dig into this space, to go all in, we're going to need regulatory clarity. It's just a lot of things haven't been defined yet. It isn't clear yet as to what we might think something is simply a commodity or it's a currency, but actually it's a security. So we need clarity on that, because if we have to, there are financial institutions that are too big to fail. I mean, a failure by a mistake by a large financial institution could have a big impact. That being said, I do see regulatory clarity coming. Right now, we see some regulation by enforcement, but we do see, like in the United States and overseas, various governments coming to the table to put together clarity so that large financial institutions can move forward with this new technology.
That makes a lot of sense, and I think one of the things that regulatory clarity it presumably can help is to make the markets even more deeper and stronger and more accessible. So in some ways, sort of helping with the development of the markets, not just sort of limiting access to them in other ways. Brendan?
Thank you. Can you hear me? Yep. I have to confess, I do have a tissue in my left hand. You go a year and a half being behind a camera with Zoom. First time I've been out in a year and a half, and I get a bloody nose 5 minutes before we come on stage. But I can't turn the camera off on this one, but I'll take this problem versus the other anytime. I think the whole notion of, let me take a step back. VMware's in the business of providing private permission blockchain technology to the enterprise, to companies, with the goal of improving the way capital markets are operating, the reach of capital markets, and so forth. I think there is a lot of solid evidence that the traditional markets have to come along on the journey. I don't think you can have a disruption that wholesale replaces everything, that all the infrastructure that's been built over the decades. But one way to think about it might be capital markets of the future may be thought of in two different ways. One is the structure of capital markets, which is essentially the process and players in the regulatory approved approaches to how trade and settlement actually function. And those processes involve issuers and exchanges and custodians and all kinds of well-known approaches. Those are probably slow to change because they represent such an enormous volume of the worldwide economy today. It's not trivial to just completely re-architect those things. But that said, the technology underneath those processes is actually in many cases quite outdated and still involves a lot of manual steps that are highly disruptive or can be disrupted. So I think the role of a DLT and blockchain technology in this space is to actually be an enablement for processes to be expedited and redefined, at the pace that would be appropriate for the scale of the business and the scale of the reach. But the fundamentals are essentially data sharing in a much easier way, purely decentralized architectures that allow multi-party arrangements that have never been allowed before, reach that we've never seen before. So the way we like to think about it is the technology can enable a lot of structural improvements. And I think there's every reason to believe that the major financial services companies, the regulatory environments, will be interested, open, and aggressively pursuing that rate of change as it becomes more accessible to all.
Thanks for that. I think it's interesting to hear about sort of the themes of inclusion, efficiency, sort of the infrastructure. Jim, maybe if I can turn it to you to talk about some real world use cases, what your LiquidX is involved in and how you see that, in terms of the capital markets and access.
Sure, great. So all the themes that have been mentioned so far are real and they're happening. And what excites me is when you think about the future of capital markets and in the context of what Robert was talking about before is how can it extend and accelerate development around the world and extend capital further downstream. And if you think about it in what we see at our firm, we are building an online digital network to connect people who need capital with people who have capital. Now, if you think about that, that's a capital market, that's a credit market. And they're very mature capital markets in the credit bond market where I've also done business all the way through commercial paper, all the way down to trade finance. The further you get downstream, the more challenging it becomes because the further downstream, what is that asset? It's a piece of paper. Well, how do I know it's real? How do I know the other side knows what you know? How do I know your identity? So I think the themes we're talking about around digitizing the asset so that both parties can be linked and show that they agree to that asset. Digital identity so that the two parties can be KYC'd real time, tying those two things together. And then where you go is to say, who wants to lend money against that party, right? In today's world is very expensive. You go to one bank, you knock on the door, you say, please lend me money, here's what I got. And if you get rejected, you got to go to another bank and another bank. Well, in an online capital market, once you have your identity, you have your digital asset, you can, in 3 minutes, present what you're trying to do to a group of lenders and let them offer you a quote and an agreement, and then the transaction can happen. So you create an online network or marketplace to lend to different parties in different ways. And this is very expensive. I think the other point, though, is the Wells Fargos, the real institutions will still have a very significant role to play, but it won't be as bilateral. It'll be more of a network community, where in many cases, Wells Fargo and other banks will ask as sources of capital, but also provide through their network links to other players who they may not need to lend to, or they're maxed out on credit, but they can syndicate with other players. So you can see what's going to emerge here is this digital network. It's already happened. I mean, some of the cool things that I've seen is, large credit lenders have lent money to entities they would have never met before and never done the due diligence on before because it was just too expensive and time consuming. But if we do all the work as the platform and they have to just come on and say, they don't have to worry about the things they traditionally worry about, like, is this a real asset? Does the other party know? Is the entity? And I can just think about it from a credit lending perspective. That's going to facilitate, I think, a lot more credit getting pushed downstream, more accessible to more undeveloped countries.
That's great. And I think that's really in line with the theme of we're talking about in terms of access to capital. You mentioned a few things that you think sort of effectively would have to undergird the system. And I wonder if I can turn it back over to Brendan to talk a little bit more about those aspects of it, both in terms of the technology and then Patrick in terms of what the content of those requirements are. So things like digital identity, things like AML, KYC.
Yeah, there's a lot of infrastructure pieces to the puzzle for sure. I think at its very basis, you could think of the technology as a much, much broader, more efficient data sharing platform. So if you start thinking along those lines, you have the ability to have verified, trusted data sharing that's available to a much wider community than otherwise would be, right? So that would be a starting point. You could layer on top of that the whole notion of privacy in the environment where it's multi-party, decentralized. So it's an enablement of really a exchange and marketplace type of opportunity with verifiable, trusted data sources made available to all, right? So that's sort of the underpinnings. And you can do that in a way that can actually be very robust and reliable. You know, the other side that folks like us spend a lot of time with is as you're going in and augmenting existing environments, you have to remember that there are use case elements and environmental elements that need to be robust and reliable and deterministic in nature. So the notion of a private and permissioned environment assumes it behaves every bit as reliably and from a scale perspective as the environments that have been built over the last decade. So there's a lot to that puzzle. The challenge as you start opening up the environment to multi-party, fully distributed, is it becomes a challenge of who's involved and how broad can the reach go. So identities, sort of federated identity and having technologies that can solve that are a big part of it. You have the whole notion of verifiability. And you know, when you have distributed data, how can multi-parties validate that they are of the same view of a transaction? So you have new technologies coming like zero knowledge proof technology that can do that in responsible ways to abide by privacy and security guidelines that are in place. So this reach and stack becomes actually very comprehensive. It's more than just the fundamentals of blockchain. It actually is really a transaction platform, and it'll require a lot of interoperability, a lot of multi-company participation, and I think the opportunity for standards definition and standards development will be a big part of how this becomes readily available to all. It won't be an environment where it'll be productive to have closed proprietary single source solutions. No one entity can keep up with the pace that is going to be required here. So we envision that there'll be a lot of multi-party integration and multi-party cooperation as part of the technology development here.
You mentioned sort of common standards and the need for accessibility across multiple platforms and different kinds of sort of a federated identity. Patrick, I wonder if you can speak a little bit to what you think sort of the regulatory response to some of these challenges and what we see kind of coming down the future. I know you mentioned at the outset sort of the need for a more comprehensive view on all of this. What do you think is likely to happen, and then what role will regulators play in this sort of platform going forward?
Certainly, and I should say that while the large financial institutions, the traditional financial institutions, aren't in the news about trading Bitcoin or trading the latest and greatest, all of the major financial institutions are looking very carefully at the underlying technology and seeing how to use it. There are pilot programs going out everywhere. This is public information. How they can use the underlying technology to expedite transactions, just clear away inconsistencies. And I think every major financial institution in the globe has issues with KYC. the anti-money laundering onboarding. There are some financial institutions where a customer will be onboarded within one area of the bank, and then they want a different product, and they have, two parts of a financial institution don't necessarily talk to each other, so they have to be completely onboarded into the other. Just getting over that hurdle, and then getting over the hurdles that we've been talking about before, where maybe there's a token where somebody's been onboarded once in one central area, and then they don't need to be onboarded to 6 different banks, again, through a lengthy and expensive process. That's something that the financial institutions the major financial institutions are looking at, and the regulators are also looking at, because it's going to be a partnership effort, because there are a lot of concerns and a lot of requirements and a lot of regulations that have to be modernized in order to address that. And it is happening. The traditional financial institutions are not going away. They are evolving, though, with this technology. And as Gary Gensler was in front of the Senate Banking Committee this week, speaking again about, he spoke about a number of factors. One of the factors was a need for additional regulatory clarity in this space. And there are a number there is regulation through enforcement right now, but it's coming. And once that clarity is received or is out there, we will be moving faster in that space.
Yeah, I think that's a really interesting observation, right? The point about, we talk about whether blockchain and DLT will result in some type of disintermediation, and really how far is that going to go? Will we have complete disintermediation, or will we have sort of a different kind of intermediation than what we have today? Michael, if you have thoughts on that.
Yeah, ultimately, I think a lot of some of the efficiency that I kind of mentioned earlier will come from, less middlemen kind of in the process, and how much does kind of technology enable you to cut those middlemen out. While I'm in perfect agreement that, Wells Fargo isn't going away here by any stretch of the imagination. I do think that as in kind of this perfect world where this whole thing works and everything's on the blockchain and whatnot, it's really like, how does DTC play into this from a market infrastructure perspective, and how much of kind of the traditional settlement clearing functions can be put into a smart contract, right? Where you don't need some of the intermediaries to kind of ultimately play a role. And again, maybe DTC is the one enforcing the smart contract where the legal entity ultimately doesn't go away. But in theory, that is an efficiency. That is a way to kind of take some of the kind of the burden out off the companies that ultimately operate in the space. And I do think that if this whole thing is able to work, I do think that one of the other things that can come out of this is just, I think, systemic risk goes down. When we had the financial crisis, obviously in 2007, 2008, I think Lehman Brothers were about to teeter, and I think every bank in the world was trying to scramble, what's my exposure here? And you're trying to tally up every single database and whatnot you have out there to figure out, okay, here's my exposure to Lehman, here's my exposure to Bear Stearns, et cetera. If ultimately all of this stuff was on the blockchain and mark-to-market valuations and things like that are running properly, I do think that you're able to gather exposure on a real-time basis, where all the banks can see what the exposure is to each other. And ultimately, as a regulator, if I'm the Fed, I get a real-time snapshot of what the risk is at any kind of given point in time. And I do think that at least that visibility and transparency, even at the highest level, has really the potential to reduce at least systemic risk that exists in the financial system today. Now, I'm talking about utopia here. This is the perfect world scenario, but future of capital markets, I do think directionally that's one of the benefits that can come out of all of this.
Yeah, I think that's super insightful on the point around, what's the impact on financial stability? Because obviously there's a lot of discussion around, what is the potential impact of sort of disintermediation or, sort of distribution in the way that we're talking about. But the idea that it can actually contribute to financial stability is I think an important one. I guess we've been talking about sort of the infrastructure. We've been talking about asset types, bringing it back to sort of the impact on borrowers and sort of the marketplace. I don't know if the panel can speak a little bit to how you see really the efficiency benefiting ultimately the customers, and in what ways that might happen. Maybe Jim, start with you.
Sure. So, when you think about the economy, it's all about supply chains. And over the last year, I've never seen the word supply chain in the news as much as it's ever been, right? Because now we know what it means when they get disrupted. But they really extend very deep. We work with companies that have 10,000 in their supply chain network. I mean, just massive numbers. And when you think about the connectivity around that one supply chain from that one company, any disruption can have a ripple effect, and all of a sudden you get a bunch of cars just waiting for a bunch of chips. So what does it mean from a credit standpoint, though, right? It means that there's many suppliers way downstream that need credit and capital to provide goods and their end product to the next person up the food chain. And there are many ways to finance that: supply chain, AR, inventory finance, many transaction types. But at the end of the day, it's about extending credit. The key word here is credit, and getting the credit to the people that need it from the people that are willing to extend it. And what I think, when we keep coming back to the theme of the UN and the future capital markets, what I see is a much deeper connected credit network that connects the natural people who want to extend credit to those that need it. And all these things we've talked about here are pieces of the puzzle that you talked about that will facilitate that. And that then when that happens, you then get a deeper, richer, more liquid net market, reduces systemic risk. And if the credit starts to undergo a question, rather than to have to go out and find somebody else on that same network, they can sell to another participant. So it's not just one-to-one, it's one-to-many in this credit network. So I think that's ultimately what happens here from a capital markets perspective, and we're already starting to see the pieces come together. But it is a puzzle. It's not just one piece of technology, it's all of it coming together.
Just a quick comment, all good comments from Jim. I think if you extend that thinking even further, what's interesting about that train of thought is it's well beyond the traditional financial services capital markets view. It's actually a worldwide supplier view, and I couldn't agree more. The potential is there. The other aspect of improving the reach, a lot of the focus is on improving the efficiency of the existing environments. Understandably so. There's lots of opportunity there. But one of the biggest trends that's going on everywhere is the digitization or tokenization of unusual assets, right? And these might be illiquid financial assets. They may be non-financial assets, but it greatly broadens the opportunity to extend the reach of exchanges to folks, organizations, people who otherwise would have no opportunity to participate at all. So the reach is a technology reach to some extent, but I think it enables a much broader definition of capital availability, and therefore represents a lot of new, economic and really beneficial use case models for a wide variety of businesses and people across the globe.
That's a really interesting point. I guess it sort of leads into my next question. We've been talking about sort of, to Michael's point about the utopia, where it might be, the future of the capital markets in sort of a perfect world. Do you, for the panel generally, and I'll start at the end with Patrick, do you see that as being sort of a gradual evolution or really kind of a leapfrog? And is it going to be geographic based? Will it be based on, sort of industry sector? How do you envision or foresee that evolving? And what are some of the challenges toward, to that sort of utopia being achieved, if you will?
I see utopia being achieved gradually, and it would be nice if it would happen immediately, but it is happening, and it's already happening. There are so many test pilots, so many organizations out there pushing forward, like GBBC and others, like pushing this forward and in areas like trade finance, in areas swaps, and so many other areas, that DTCC, of course, and others that are, from what I'm seeing, it's happening gradually. And the things that have to come about and are happening gradually as well are changes in regulation or changes in laws to provide clarity so that some of the larger players can enter this space with more confidence and more capital, and you'll bring in more people and more. So.
Yeah, I think it's early days for sure. It's not a statement that nothing's happening. It's not a statement about the state of technology. I think it's just the enormity of change is a long journey. It reminds me a little bit of the early days of the internet and web commerce. And if you think back on that, the same types of discussions were going on about whether the regulatory community would ever approve of such type of behavior and whether it was okay to disseminate news on the internet and music. And it just seems as though companies figured it out as the advantages became obvious. It feels to me like it'll play out the same way here. There's no doubt different appetite for evolution and change depending on the geographic location, depending on the type of company, depending on the type of business that folks are in. Just our traditional business, which is a subset of this whole discussion, there are pockets in the world that are much more aggressively adopting the technology than others. And I prefer not to comment on who. I think they're obvious, but you can figure that out. But I think in general, it will be, I think, as rapid as a mature industry can go in the case of traditional finance, as rapid as a new and emerging and disruptive technology can go, which is happening very fast in a lot of sectors, and eventually they start to stabilize and normalize into a more common approach. I would think that would be the way it would play out.
So I've been doing this for 30 years and the innovation of different capital markets. And at the beginning, it always seems like it's never, you talk about it and you talk about it and it seems like it's never going to come. It's never going to come. And then boom, it comes. And then you hit this inflection point, and a couple of years later, everybody's saying, what was it like before? Because I can't remember. It just happened. We're not at the inflection point yet, but I think we're close. I think we're a couple of years away, which in relative time is a relatively close period to hit that inflection point and then to really accelerate, because all these pieces that we've been all talking about are coming together. So I can really see over a 5-year period a really dramatic shift in the capital credit network of trade and trade finance and insurance, and he brought it in a really positive way back to this theme of what does it all mean at the end of the day? Well, you get all these efficiencies and all these great things, but back to the bigger theme, it allows credit to be extended much quicker, further downstream, to create a deeper credit network, which allows development and allows commerce. So I think we're a couple of years away.
Yeah, I guess, just on that point, one of the things that struck me when we were talking about this issue was even in a more near-term sense, things like same-day settlement can have a real impact on borrowers, and that can, sort of help towards this point about how do you get credit to companies and to borrowers more quickly. Michael, maybe I can ask you the same question, but in particular, what do you see as sort of the role of the U.S. in this? Is U.S. able to lead? Are we seeing other people sort of taking the lead in terms of the capital markets and how they'll evolve?
I'm going to give the hedged answer of yes and no. I think a lot of the capital will come from the U.S. It's obviously got kind of the biggest startup, economy in the world, and the amount of money that's been pouring into kind of the Bitcoin blockchain space, especially kind of on the venture capital side, is enormous, and so I do think kind of U.S. leads the way on that side. On the implementation side, I don't necessarily know whether the U.S. will lead, especially kind of in the securities side, in stocks and bonds and things like that, kind of away from Jim's market of trade finance and whatnot. Because back to Patrick's point from earlier, I'm a little bit more pessimistic around speed of regulatory clarity in the United States. I do think the ecosystem and companies, especially kind of in my crypto world, have been asking for regulatory clarity for years, and we're still waiting. And Patrick also mentions the regulation by enforcement, and it is one of these things where a lot of the individual firms are having to try to apply the Howey test on whether or not something is a token or security, when in effect what we think doesn't matter, right? Only what the SEC thinks is what ultimately matters. And I do think that regulatory clarity kind of on that side is going to take a little bit longer than we'd probably like, which will prevent kind of the biggest banks in the world from playing in the space, which will deter and kind of hinder the actual implementation of kind of big market participants in the ecosystem. However, my view is I don't think US necessarily has to lead. I do think you'll see other countries around the world kind of take the lead on this, whether that's in Singapore or Switzerland and potentially in the UK. But my view has always been that like US has the most to lose here, and so they don't want to do this wrong. And so I don't think it's ultimately like a bad thing for US to learn some of the lessons that some of the other capital markets around the world are going to be learning over time, and then trying to learn from their mistakes and errors and incorporate ultimately best practices into whatever is ultimately implemented in the US, because, there's a lot of, it's a much bigger capital markets market here. So I do think that it's important that we as a country get it right.
Great, thank you. Well, I guess with a couple of minutes we have left, let me just see if there are any questions from the audience. It's been a really interesting discussion. Yes, please.
My question is, are you all confident that our regulators can actually regulate blockchain? Like, could we be inadvertently introducing systemic risk? For example, they do create a new asset class, digital assets, but then they create a central clearinghouse where we put all of Ethereum, or even 1/3, which could. And then let's say dystopian, utopian future, our infrastructure does run on something like Ethereum, but then we put it all centrally on a clearinghouse, which kind of introduces maybe a nation state vector of attack, for example.
Yeah, I get it. Thanks, Jim. So I actually, I'm of the view, and I could be wrong, that like none of this stuff is going to happen on a public blockchain. I do think that they'll create a separate private enterprise blockchain that's fully permissioned and fully AML, KYC'd and whatnot. And so, while I'm with you, I do think that if you created something like this on a public blockchain, I think it actually becomes harder to potentially implement than if you created, a separate blockchain, a private blockchain that's a permission one, specifically for this purpose. But yeah, that's my view.
If I could just say, I do believe that this is something that can be regulated, and it's an advance in technology that can be addressed, and it's we are at early stages still, and it's going to come gradually, but I firmly do believe because it is happening.
Great, thank you. Another question?
Real quickly, at least in KYC, how do you KYC people who don't have legal access to legal documents? So that's one of the big questions I had in 2018. Folks are legal. How do you KYC investors?
That's a great question.
That's a question that you could. That's a conversation that can be had even outside of distributed ledger technology. It can have nothing to do with this because you deal with that today. I mean, it's the whole banking the unbanked. I know what that means, and I think that's great. But there are certain people that, if they have no way of proving who they are. Right. So yeah. So right now that needs to be, I think, a joint effort between the regulators and also the financial institutions that do want to bank them to figure out a way. And again, that could, this advance in technology can help that. But like to your point though, that issue exists whether or not you're doing blockchain.
The panel is represented by traditional financial markets and digital/crypto markets. Do you believe that there is some degree or a high degree of regulatory arbitrage going on right now that needs to be fixed? I know that's a tough question for late in the panel.
Can I? Well, I think Mike's got it right now. I think there are, rather than regulatory arbitrage, I think there are regulatory gaps. I think there are areas that maybe haven't been specifically identified yet as being under the jurisdiction of the CFTC or the SEC or Treasury or the Fed or whomever, and that's something that I think is happening now, gradually. So, I mean, the regulatory arbitrage. I mean, I think I see gaps actually more than an actual arbitrage.
Yeah, Michael.
It's funny. I do think it's a little bit certainly of arbitrage, but at the same time, I'll share an experience that we had a couple of years ago when we were just starting our lending business, where we lend crypto and dollars to like high net worth and hedge funds to kind of help put on their trades, traditional sort of prime brokerage type activity. We started calling state, money transmitter, FinCEN, all of that stuff as it regards to, hey, we want to get into this business. We have this $100 million hedge fund that is wanting to borrow Bitcoin, but it's located in your state. What licenses do we need to be able to kind of do that? And the regulatory agency said, what's Bitcoin? If it's not dollars, don't call me. This does not apply to you, right? And so it was one of these things where, yes, arbitrage ends up existing because a lot of the regulatory bodies don't like regulate kind of the lending of Bitcoin to hedge funds. And so we didn't have to get a license to be able to operate because there is no such framework to be able to ultimately kind of do that. Whereas if I worked in the fiat world and I was lending dollars, I 100% need to get a money transmitter license in Florida or California, whatever state ultimately is. And so I do think that because there's sort of gaps in what's regulated within each state, you do end up with licensed entities and unlicensed entities. Even if the unlicensed wants to get their license, they'll tell you, you don't need this for this particular activity. And so, have a nice day.
Question here in the front.
Yes. So question for the panel. Do they think that Brian Armstrong is a fit and proper person to be CEO of Coinbase, given his recent utterances about securities lending or borrowing?
Me again, I guess. So I was actually chatting with Rena prior to the panel. I do think that his comment, like SEC regulates me as a FINRA broker dealer. I would not have done that. Certainly embarrassing regulators and kind of airing of public, airing of grievances typically does not bode well for companies that end up being regulated by them. So, I think it's just a matter of one, I think there's still a transition period to going to a publicly reporting company. And two, it's funny, like there's two sides. The whole, the legal compliance or like Brian should get his Twitter account taken away and whatnot, right? But the crypto side loved it. They loved the fact that they were like, yeah, let's not hide this stuff. This is unfair. We need more like awareness of what's happening. And so it really is like a complete two different sides to the story. But I think Coinbase is in a better position? No, I don't think Coinbase is in a better position as a result of the tweet storm.
Well, I think that's an interesting note to probably tie this up on. We've heard some great themes today around efficiency, transparency, inclusion, and I think Patrick has put it best in some of the prior discussions. The future is regulation. So there is plenty more to see and note in terms of the development in the space. But I appreciate very much the panel taking the time and sharing their insights and experience with us. Thank you very much.
Thank you to everyone here and to everyone who's joining us online. I hope you're enjoying programming thus far. Our next panel will be on closing the gap on financial inclusion. I'd like to welcome our panelists and moderator up. Thank you.
Good morning. Can everyone hear me? Hey, good morning, everyone. Welcome to our panel. My name is Andrea Tiniano. I'll be moderating today. Before we get started, just a little bit of housekeeping. Sorry for my scratchy voice. We'd love this to be a real open conversation. So we're going to have a conversation, but you have ideas, you have comments, questions, please raise your hand and we'll bring you right in. You do not have to wait to the end. With that, I'd like the panelists to please introduce themselves, and let's start from the end here on the left. Can you hear? Is your mic on?
Hear me? All right. Welcome, everyone. Looks like you might be falling asleep, so we got to wake you all up. No. I'm Nina Tannenbaum. I'm at Algorand, which is a decentralized blockchain, layer 1. And I've been in the financial markets for 20 years and now in financial markets within blockchain.
Hi, good morning, everyone. I'm Simon Chantry. I'm a co-founder of BIT. I've been in digital currencies since 2012. Previously was in engineering, and very excited to be with all of you today.
I'm Justin Rice. I'm the VP of Ecosystem at the Stellar Development Foundation. Stellar is also a layer 1 blockchain that is geared towards asset issuance and cross-border payments. SDF is a nonprofit organization that helps support its growth and development.
Hi, my name is Benjamin Tsai. I'm one of the founders and president of Wave Financial. We're an SEC registered investment advisor with $1 billion of crypto under management. I'm also a professor at UCLA teaching crypto finance.
Thanks, Ben. And just a little bit about me. Andrea Tiniano. I'm a Delaware attorney. I'm the chief legal officer for IOV Labs. And in 2015, I started the Delaware Blockchain Initiative that led to those blockchain amendments many of us know about. I think we have a video introduction I've just heard. So.
Hi, it's great to be here with you speaking at this event alongside the UN General Assembly meetings this week. I'm Alpen Sheth, Senior Technologist at Mercy Corps Ventures, where I lead our blockchain and cryptocurrency initiatives and advise our global humanitarian and development programs. I'm also a member of the Social Impact Advisory Board for the DM Association and a member of the World Economic Forum's Global Futures Council on cryptocurrency, where we're working with regulators and technologists trying to address some of the same challenges we're discussing here today. It's certainly been a very challenging year for many across the world. I've gained important insights from my fellow Mercy Corps staff who work in over 40 countries day to day with people facing severe conflict, disaster, and other crises, whether that's in Haiti, Venezuela, Lebanon, or Afghanistan. I actually met Sandra Ro, who's been a tremendous leader and voice in the blockchain community as CEO of the GBBC, through an initiative we're both engaged in response to the current crisis in Afghanistan. In that country, we're all seeing how fragile the current banking and financial infrastructure is in so many parts of the world, and how precarious people are left, not only from losing financial access, but from losing their life savings. So keeping that in mind, I'm honored to be able to talk about how we can work to close the gap in a way that will benefit vulnerable populations for the longer term. Given the tragedy of financial exclusion and the persistent challenges and inequalities around financial access, the key question for us at Mercy Corps has been, how can we radically improve the kinds of financial tools and services that people can access when they really need it? For today, I'd like to focus on two themes that I think can really help us meaningfully close that gap. The first is to promote a better understanding of financial technologies such as cryptocurrencies, central bank digital currencies, stablecoins, and the like. We believe that education is going to be a critical factor for people on the ground trying to make the best decisions for themselves and their families, as well as for policymakers and regulators trying to navigate how to protect people and businesses in their economy and ensure responsible innovation. The technology innovation that underpins cryptocurrencies and similar types of digital currencies creates new resources for addressing some of the challenges of financial exclusion, and I'll cover just a few of them. First is mobile-based wallets. We are just beginning to see what it means to lower the cost of opening an account to zero for millions of farmers and remote rural populations. And in our current work with refugees, we are also finding that software-based, or what are called self-hosted wallets, are a game changer for those without government-issued IDs and no physical addresses. And this is something that the current financial sector takes for granted, but actually affects over 1 billion people globally. Second, cross-border value transfer using stable and other digital currencies are crucial for remittances, which we know are a lifeline for most poor households and can be life-saving for people when they need it the most. At Mercy Corps Ventures, we're currently working with refugees and migrants who are using these specific technologies to send value instantly across the Colombia-Venezuela border. And while at the same time, they're able to choose which currencies to hold their balance, whether that's bolivars, pesos, or dollars, something that has been inaccessible to many low-income populations previously. Third, we're seeing that microtransactions are opening up new economic opportunities for youth trying to join the digital economy, as crypto-based networks reduce transaction costs for any amount, large or small, globally and in real time. And perhaps one of the most relevant data points is that current adoption and use of these technologies show significant rise, particularly in the places that have high rates of financial exclusion. And I think that this suggests that there's something here we need to better understand if we really want to close the gap. The other major theme I wanted to discuss today is that of systemic de-risking. Worldwide, many people who are excluded from formal financial services live in parts of the world that are regarded as high risk by banks. Banks are choosing to avoid and limit transactions in such areas, cutting off hundreds of millions of people through no fault of their own, in the name of meeting compliance requirements. In many countries, you cannot open a mobile money account or a financial services account or even a SIM card unless you can prove to someone who you are. But many people in lower income countries, in particular, lack identity documents. These people often carry small value accounts where the risk is very limited from a money laundering perspective. And the World Bank, among others, is starting to look at the unintended consequences of standards that we set up to prevent money laundering and other types of abuses, which have a negative effect on the poor. What we're actually seeing as a side effect as well is that people are being pushed back into the informal system. Again, one thing that I'd like to remind and draw attention to is that the technologies that underpin cryptocurrencies, central bank digital currencies, stablecoins, and the like actually provide regulators with better monitoring tools than the ones that they currently have. And what we've known in the past, I think, is that having a more inclusive and innovative approach to KYC and AML and CFT compliance is actually at the root of the success of mobile money platforms such as M-Pesa in Kenya and other countries. These technologies, if implemented in an open way, can actually provide a stepping stone and a base layer for those currently excluded to eventually adopt digital identities and credit histories. As policymakers begin to grapple with the challenges and opportunities of blockchain and cryptocurrencies, the United Nations and its related agencies and networks, which are focused on financial empowerment and the needs of the excluded and vulnerable, are a powerful counterweight to regimes that focus more readily on financial compliance regulations, such as the Financial Action Task Force, whose rules often come at the price of diminished individual privacy and financial inclusion. As someone who's been involved in the evolution of financial technologies, I think that there's a clear opportunity for us to leverage these new resources and ensure that the most vulnerable are at the center of their design and not just an afterthought. I look forward to working with partners like those on this panel to move in that direction. Thank you.
Okay, great. Well, we got a nice setting of the table by Alpen in that video. And what I'd like to do is just jump right in and ask on my left to Nina. There were a lot there. Self-hosted wallets, stable coins, the identity issue, the standards. What are you focusing on at Algorand, and where do you think we need to go with this?
Yeah, there's a lot to digest there and so many salient points. So basically, Algorand, has anyone heard of Algorand before? If you haven't, you will. We were created by Silvio Macaulay, who I like to say is the Da Vinci of our day, because he's architected this amazing, efficient, carbon negative, scalable, decentralized blockchain layer one. And our vision, or his vision, was to create a world, this is what we're driving for, a world where everyone creates and exchanges value efficiently, transparently, and securely. So that is the foundation.
Okay, so we're going to get there, though.
Okay, so to the point, I totally agree with Alpen's, one of the problems we can all solve in blockchain and in crypto is providing financial access to people that don't have, identity cards, they may not even have a permanent address.
Yeah, but how?
This is what we have to work on is, one, you have to balance the KYC, the know your customer, of like, you don't want to be banking, criminals and terrorists and things like that, but you want to provide inclusion to people that for some reason don't have access. So I think it all starts with collecting better data or giving people access points to provide their real data.
Ben, how do we do that? How do we get better data without infringing on people's privacy? Is there a zero knowledge proof solution that is being developed that's out there that can address that question?
Yeah, I mean, I think watching that video, I really thought about it in a very different way. I think a lot of these emerging market problems didn't originate from emerging markets. They originated from developed markets with a lot of the AML KYC type issues. Those weren't in existence there, was put on them, and therefore we're now trying to solve a problem we've created.
So you're saying that the regulations are, people can't, there are too many regulatory obstacles for the swath of underbanked and not banked people together.
And they're not even their regulations, it's our regulations, right?
Right.
So we are, we're kind of putting this on them. I mean, one specific point with, should we be regulating small dollar, transactions using, developed market rules? And I think that's a very big point that, I got out of that video thinking about that. So I think we're the developed markets, and we included, are investing in businesses that are trying to work through a lot of these regulatory issues.
When you say we, you mean you have an investment company.
Wave Financial, we have VC investments. We invest in companies and platforms that give access to this. We work with partners like the Cardano guys, and we work with them, and they are actually very active in the emerging market space on identity solutions and also payment solutions.
I want to say that, like, if you create a common ledger where assets can interoperate, then you can actually create access points on and off that ledger that are local and that are regulated by local regulations. By doing that, you actually make it so that in places in emerging markets that require different regulations, that they can develop their own KYC standards, they can develop their own necessary proofs of identity to actually access the ledger or put value onto the ledger. And therefore, you're not actually necessarily applying, say, developed world standards to the developing world.
You're anticipating that and contemplating that sort of public-private, that the government is going to be working with tech companies who have in mind this notion that there's an issue, and then willing to develop a solution. And I think, Simon, you can speak to that because you're involved in a project just like that, right?
Sure, I think, and Justin, it's a great point. I think, like, speaking broadly, the public permissionless crypto networks that have emerged over the past decade, they are accessible just by virtue of having an internet connection and a smartphone or a tablet or a computer. And so I think that offers everybody the opportunity to access a certain type of financial services. Now, when it comes to satisfying regulatory requirements, just for context, BIT is a CBDC service provider. Our solution is currently deployed in 6 countries, and we were just engaged by the Central Bank of Nigeria to digitize the Naira. What I'm seeing commonly from central banks is that they are looking to implement lower KYC requirements for wallets that have minimal transaction capabilities and holding capabilities. So wallets that would have that wouldn't be problematic or a concern from an AML compliance perspective, they can remain either anonymous or close to anonymous. And I think this is one of the ways that Justin's point of giving the countries, the regulators in a particular country, the ability to impose, limits that are suitable for that region.
Well, but this assumes a lot, actually. So this assumes that we have a group of people who have financial literacy, they have the technology, they have the cell phones, and frankly, that they're not, that they have access to even certain, that they have access to get to a way to get their fiat currency into a digital format. And I think that that there are a lot of folks that can't overcome those obstacles. I'm going to get to you for 1 second, but we have a question from the audience.
Yeah, hi, my name's Viola Llewellyn. I had the pleasure of sitting opposite you at dinner last night. Simon, this is a tangential question. Central Bank of Nigeria engaged you to digitize the Naira, is that what you just said?
That's right.
Do you think that in that activity you're about to assist them with, does blockchain have a role in redressing the inequalities between a lot of the African post-colonial currencies, where for those of us in the lay space, we see how it takes thousands of a unit to equal one of, let's say, the French. Another, will blockchain eventually bring those economic parities where we have these heavy forex issues?
All right, let's do one question.
We were just talking about that.
Yeah, I think that you raise a really interesting point, Simon. You want to take that?
Yeah, that's
to the best of your knowledge, given that could probably be like a whole seminar for a whole day.
Yeah, exactly. That's quite a rabbit hole, and I think look, a lot of that is free market forces, right? And how do the forex traders value a particular currency over another one? I think the emergence of crypto, of Bitcoin, and these decentralized permissionless assets, they will play a role in establishing new value, I think. And given that Bitcoin's hovering at $1 trillion market cap, it only took 10 years to get there. There are disrupting forces in terms of how people assess value, especially in currency-like technologies. Whether or not you want to classify different cryptocurrencies as a currency, is a whole other rabbit hole. But to level the play, I do think the technology is meant to level the playing field.
Here's how, because I've been in
the
please let us derivatives financial markets here, so we're talking about this. So the biggest issue I've always had in investing and providing capital to underdeveloped areas is the currency exchange. And it's that will solve it. In the traditional financial markets, it's so expensive to hedge out that exchange that you can't do it. That's where blockchain is going to solve this, because our transaction fees, at least ours, are so minuscule. We will
and fast, and it'll settle.
Settlement. We will eliminate all the barriers
and the counterparty risk as well, because you won't have that.
We don't have the answer yet, but we're confident we will get there, and that's what I believe.
Thank you. I know.
And I want to say,
please.
well, I'll just sort of continue where we are here, right? I also think that one great thing about blockchain is that it can actually make the markets more efficient, which can start to solve some of the issues in Forex by making liquidity provision available to everyone. You don't necessarily have to have sort of all of the experience or all of the capital to make markets. If you can use things like automated market makers, like Stellar, for instance, the blockchain that SDF supports, it has all of these built-in capabilities to allow people all over the world to participate in liquidity provision. And by doing that, it sort of engages an ecosystem of people to actually make markets more efficient, which can solve some of the problems between currencies.
Thank you. Ben, I want you to address something, because NFTs are in the media right now. People are talking about non-fungible tokens. And what Ben had a really interesting take on NFTs as a way of bringing more people either into the financial system, or those who are underserved have a way of actually creating new value without necessarily having to rely on TradFi, traditional finance. Could you speak to that, please?
Yeah, sure. So we held a panel and we were speaking about the specific topic. We actually had an artist on that panel that was talking about how he was a poor artist until he started creating NFTs, and the NFTs have a residual stream. And that residual stream, he's continued to make money as his art is getting, more transactions ongoing. And, we were joking about Picasso's owed a lot of residual because he never really got paid out of the subsequent sales and so forth. So I think that's a very interesting angle. And separate from that, having all of these things on the blockchain means that he's basically in a slightly different financial space where he has access to having the stream automatically come into him. And I think that that's all very interesting.
So,
we were
but
talking
where
about
is
this
he? And it's
before.
not necessarily, that income isn't necessarily coming into a bank account, right? I mean, it's.
No, it's not coming in as a bank account. I think a lot of the transactions are done either in Ethereum or some of the other currencies, and he gets his 10% cut of every transaction directly deposited into his wallet. So
And when you say every transaction, I mean every time the art is sold to another artist?
Every time a buyer and a seller has a transaction, 10% of that transaction volume actually slips to a third stream, which goes into his wallet. And this is automatically set up as part of the contract of the NFT. So.
Thanks. One of the things, and I think it's germane to what we're talking about here, is the last mile. The people who live in a part of town where there aren't tellers or there aren't bank buildings. How do they get their currency into the digital market? How do they benefit from all the great work that everyone on the panel is doing? Simon said something. You said something like, people know how to make things happen if they have to, or something. So could you elaborate? I really want to hear what everybody else is thinking in terms of how do we make sure people get their identity? How do we make sure they are able to get their traditional, their fiat currency into stable tokens or into any other crypto that are going to help them hold on to their value, save, have secure savings and payment systems?
I think it's the mobile networks, because there's greater mobile penetration in many even.
So they have their cell phones.
Yeah.
But what I'm talking about is you've got a worker who is selling whatever they are on the street, and they've got their pesos, or they've got whatever other currency they have, and now they want to be able to save it, or they want to buy. Yeah, please.
I'll throw in a generic example.
Yeah.
I think a lot of emerging markets in Asia that I travel through, there are a lot of people that sell prepaid phone cards because that is the currency for them. That gives them access to phone system, to the data system, and they trade that between cash.
And that preserves the value.
It preserves the value because it's in data minutes and so forth. And that is kind of a more almost analog way of thinking about the system. And people figure that out. I think there's a big education component. But with that said, if other people have, access the phone system through their prepaid cards, and then you said, oh, I want to do that too, and then you go and buy prepaid cards, and that's a way to get into a network of some sort. I know that's a very low level example, but I think that's
and we're
the
trying
start.
to raise it up. Yeah, absolutely. It's a good example.
I mean, I think that with open networks, people can create all different kinds of on-off ramps, and that's the great thing about an open network, is that an ecosystem of companies can build on it. And so companies can do things like actually have cash in, cash out points. They can partner with locations where you can put cash on the barrel and actually
And you're doing that, aren't you?
Yeah, there are companies building on Stellar that are doing that exact thing. And in addition to those companies that basically interrupt our work with sort of more traditional actual brick and mortar storefronts to accept cash in and cash out, there's also peer-to-peer cash in, cash out that exists. And this was something that we were talking about outside. I think Simon brought it up with the local Bitcoins. There's also a company called RTM that's building on Stellar that does something very similar. But you can actually have peer-to-peer cash in, cash out, as well as sort of traditional brick and mortar cash in, cash out.
Yeah, and that's what I meant by people will find a way to cash in and out of the system. And in the early days of Bitcoin, a site called localbitcoins.com, I'm not sure if anyone Sandra's nodding, localbitcoins.com sprouted up. And in every major city across the world, you could find buyers and sellers of Bitcoin. And they would list the payment mechanisms that they were willing to accept or they were willing to execute on. And so people will find a way. I think it's particularly interesting. The merchant case is really interesting for central bank digital currencies. And if you think about central bank digital currencies, it's like central banks taking elements of the open source technology in the crypto movement and then applying it to their own digital currencies in a compliant manner. It is a challenge because it's more frictionless, to Justin's point, to access a permissionless network than it is to access a CBDC. And so balancing that will sort of dictate, how quickly the adoption happens, I think, anyway.
Do we have to be concerned, though, as countries start establishing CBDCs, that they're designing their CBDCs to grab private data, financial data of the individuals, especially those, let's say, that haven't been part of the financial system before. They may be reluctant to want to use that if they're concerned that, maybe they were involved in a cash business and now all of a sudden they've got. How do you create that confidence or the assurance on the part of this community that is already going to be skeptical?
Yeah, absolutely. I think this is one of the biggest risks for CBDCs. Now, how the systems are currently being set up is that any personal identifiable information is segregated from the CBDC network itself. So you consider the CBDC network as a transaction network that's operated by a central bank in partnership with a company like BIT. But similar to crypto networks, all you see on that network is public keys and balances, and then the balance is shifting from public keys to public keys. Now, even access to that data should still be very privileged, and there needs to be safeguards around that. And we're developing standards. A lot of people are coming to the forefront now, especially as the Fed starts to make movements towards the CBDC. People are realizing how important that data is and how accountability and privacy are extremely important for anybody who has close access to that data. Now, in offering that CBDC network to the general public, payment service providers and financial institutions can integrate into it and then offer payment services applications to the general public. They are responsible for KYC verification, for transaction monitoring. They're the ones who grab that KYC information. So it's still segregated.
You have the permission to access to the network,
Right.
but it's held confidential.
And I feel like there's two components to that, right? There's the technological component, which you're enabling by allowing these systems to create the segregation to share information only when necessary. And then there's the policy component, right? It is also about how central banks choose and governments and regulators choose to allow central bank digital currencies to exist. And that is something that, obviously they have to both protect privacy and allow, thwart bad actors and create a situation where consumers are protected, right? So there's these conflicting, values, and the goal is to find a policy balance. And I think that to do that, it requires all of us, everyone here, right, to actually engage with policymakers, with regulators, and try to build a world where regulation is tuned to the new technological possibilities.
Ben, is this doable, Ben?
I think it's doable. I think we're all working on it. As I'm listening to this, and I'm really having conflicting thoughts in my head, and I don't want to distract from the main topic of financial inclusion of this panel too much, but there's inherently potentially a conflict between what the global standards are versus the local regulations from country to country. In certain countries, we're helping them do certain things. In certain countries, we're helping the local people access currency that the governments that they can't access. You can call that money laundering. You can call that, a holy mission.
Wait, Ben, let's not call it money laundering.
Oh, okay, yeah. But that's a country. It's a view.
No, I think you make a really good point that there are conflicting policy issues. On the one hand, everyone here, we're here because we're committed. We are passionate about financial inclusion. On the other hand, you're right. There could be a direct conflict between this drive, this trajectory, and global standards. And I think that's what Alpen was alluding to. How do you find that happy medium?
Yeah. But I think it's good that we're having an open conversation. We're allowed to have an open conversation on this topic, and I think that's a value.
So I'm looking at the audience, and a lot of you are still looking at me, which is really good. And because we want this to be an open conversation, I would really love to hear your comments. We're all saying things on this panel today. Does it sound right? Are we on pitch? Are you hearing something a little different? Somebody's smiling here. Maybe.
What are your hot buttons?
What's? Yeah, you. No, really, we'd love to hear from the group. Good. We have someone in the back.
Okay, to your point, the discussion was talking about differentials in regulation around the world. China has no privacy control. So they technically can have very easy and seamless and frictionless lending because they can grade everybody. The government grades people on their political and economic score.
So that's one end of the spectrum.
That's one end, and we're at the other end. And I think the problem is going to be finding a happy medium, and maybe they're going to be happy mediums.
I think it depends on the culture, right? There are going to be different cultures and different values, and they're going to design their CBDCs to reflect what is important to them, right?
One of the tools that I'm particularly interested in, I spoke before about the importance of accountability and privacy for the stakeholders at the central bank and the regulators who have access to this data. Even though it's segregated, there's still ways to piece it together by virtue of subpoenaing these different PSPs and whatnot. So that's a top-down approach. The bottom-up approach is sovereign digital identity. And I'd be curious to see, is anyone in the audience working on sovereign digital identity? Yes.
Ooh,
yeah,
excellent.
I'd be very curious to hear from yourselves on how you think that fits in.
And we have
to
time.
financial
We have
inclusion.
time for 3 of you to share your thoughts.
Please.
Or your project. 1, 2, 3.
Not all at once.
Not all at once.
Should I like walk around with my microphone?
We don't. Yeah, please stand up. Yeah. Yes, you.
Sorry, I missed the discussion earlier, so I just didn't get the context.
No, that's okay. You just raised your hand when he said if any of you are working on identity projects.
Yes. So I'm from Industria.tech, which is offering digital identity solutions. And what I believe that, as I mentioned yesterday, that digital identity is the way to go. Sooner or later, it would be adopted. And I feel the sooner we adopt it, the better it would be for getting digital identities to as many people as what even Robert said, like 16.9 SDG growth is digital identity for all by 2030. And that's what I think we should all try and take small steps. It's not necessarily take big steps, but just take small steps and make it work.
So it's an important goal, and it sounds like, and it's integral to, if you're going to have financial inclusion, you need to have a digital identity solution.
Just say this identity is the gateway of any transaction. Even if you go order pizza online and go to pick up, you have to show your identity card to pick up your own pizza. So it can get as basic as that. So I do feel identity has.
Simon?
Yeah, no, I think maybe to contextualize it further, the challenge of creating a digital identity, it seems like the best approach will be distributed in the sense that if there are trusted entities that can validate an existing identity, and then those entities trust each other to respect like that verification process, perhaps because some of these issues you play them through and the easiest answer is, oh, well, maybe we need a new body for that. Maybe we need a new, and that's not what we're here to do. We want it to be distributed. We want to leverage this sort of distributed architecture. So I'm really interested in that creation process and how that's going to be solved.
So you've
Oh no, I was very similar to Sumaran. We wish we had known what we know now back 8 years ago.
Of course.
When as we're a trade tech innovator. Blockchain keeps on sticking its nose in our business, and we've not been able to avoid it. And luckily, a few years ago, it became very important with identity for the African market. For us, our approach is to also link that to ethnicity and culture and how that impacts, because people's identities actually change.
That's a good point.
But
the person doesn't change, right? But you're right. What the information, right? The information that you're associated with, it evolves. But on the blockchain, you have your points of truth, and then they evolve over time. Questions?
The information becomes important in explaining why.
In the back, please.
Yeah, this isn't digital identity, so if you're still doing that.
Please speak up. We can't.
Okay, so the prior panel was represented by large financial institutions, mainly that are using agreed upon technology. Much of it goes back to COBOL and things like that, but it's agreed upon technology the entire financial industry uses. You guys are representing a lot of, state-of-the-art protocols, building new protocols.
New tech.
Yeah, one of the issues I see is that there's so much new technology, but there's not any agreement, there's not any centralization within the digital world.
That's the whole point.
But it's the point, but it's also making it extremely difficult for any type of larger institutions, whatever it happens to be, or anyone to basically make a commitment and move.
But it will come. I guess, if you think back to the beginning of the internet, it was the same issues. And now, however many 30 years later, you've come to more common protocols. Players have been weeded out.
And there are bridges being built.
So we're like 1990 right now for with the internet. And so we will get there. I'm confident we will.
But I do talk, what I kind of do is I speak to Sandra and the GBBC about some of the benefits of traditional versus the benefits of digital. And the good in one is the bad in the other. The centralization does a lot of things. It provides benefits in netting and settlement and stuff, but it slows everything down.
My friend
Right,
has a
so
question.
we got to get that.
Yeah, no, your point well taken. I didn't mean to be flippant.
Yeah, and I feel like one of the questions, or I think the internet analogy is a great one. Like, I feel like if a group of people iterate over the same problem enough times, you do end up with like sort of a core consensus about how things might work, right? It might not be just one single way, but you end up with like this sort of set of standards that is created by iteration. And I feel like we're at the beginning of that process, that iterative process.
And that's the ultimate in financial inclusion. That's what I love about this world we're in, is that it's totally open source, it's totally international, everyone can contribute, and that's why we're going to get faster to the answer than anyone in the old world that I came from and you're in right now.
So fewer walled gardens.
Yes, but you had a question.
All right, we're coming to the end and we have chaos. Okay. What do you
I
mean?
don't want to kind of steal that, that discussion, but just answer this point very quickly. The whole point of this distributed ledger technology is not centralization. And also the idea is not to create a global standard. The idea is have solutions and make them work with each other rather than
That's right.
creating
Composability, have different group. Yes, absolutely.
Yeah, just last comment from me. I think part of that is a little bit democratic. I think it will end up being whoever is being used, right? The users get to decide. It's kind of like the VHS versus beta discussion. A lot of companies do both. It's the same as all of your media conversations and everything else. In the end, the people that aggregate towards the business ends up being the decision-making one. And it may not be the superior platform, but it's the one that people end up congregating with. And that is kind of to a certain extent, a very decentralized way of thinking about it.
That's interesting. A little fatalistic, but it's very
No, but it's true. And that's why I like where I am, because we're also the most sustainable. So you have to get there efficiently, scalably, securely,
and sustainably. Okay, we have last few words.
We're carbon negative.
From the
Who else can say it?
last few words from the panel. Ben.
Sure. Yeah, I think I've
those were your last words.
Those were my last words. But I think at the end of it all, I think all business and technology, they go in cycles. There's kind of the bundling and the unbundling and the bundling and the unbundling. And we're at the beginning phases of blockchain. Everybody's trying every single direction. And over time, some directions I think people accept will not work. And we're aggregating to the ones that do work. And then the users decide which platforms they want to be on, what are convenient, and so forth. They may not be the best. I mean, a lot of times the best UX wins, but that's still it's a solution. So
okay,
words. I feel like it's not even a choice of a platform. It's actually about all these different people coming together, the different technologies coming together, and finding a way to interoperate. Through that interoperability, it will sort of emerge some sort of set of standards, set of protocols, set of ways of doing things that connect the world's financial infrastructure. And because we're starting with open networks, that's a possibility. So we won't recreate this sort of walled gardens. We'll have this interoperable world, and that's sort of the promise that we're hoping for that will lead to financial inclusion.
Okay, Simon?
See, this is why I'm excited to be working with Stellar, because I fully agree with your points, Justin. I think it's going to be a collaboration and a cooperation between public and private. And a lot of new protocols will emerge and standards will emerge. There's plenty of standard setting bodies that are working on this now, but it's also happening organically in the open source software development movement as it does. So just very excited to be a part of it.
Super. Nina?
Sustainability.
Okay, good. I'm really optimistic. I have been for years, and I think it's very exciting. We're on a great trajectory, and it's just picking up motion and energy. So I see good things ahead. I want to thank my panelists for being here today. I want to thank Sandra and GBBC, and I want to thank all of you for being involved in this conversation. So thank you so much.
Thanks, everybody.
Do you know what a singlet is?
Yeah.
No one knows what a singlet is. I need a singlet.
Oh, you need an undersinglet. Yeah.
Oh, do I want inside? It's a tanked. Yeah. Anyway,
Great. Well, thank you all for staying with us. I feel very privileged to have the opportunity to moderate this next panel about carbon markets and how we can couple them with blockchain and other emerging technologies. So we have a good crew. You guys want to join us? Everyone has a mic? You have a jacket. Great. So climate change is undeniable. Its effects are being felt globally, and the human cost is increasing. I think we've all experienced, unfortunately, increasingly warm weather. We've seen an increase in floods and fires and extreme weather. We have these viral events which are exacerbated by climate change, as things like COVID are able to travel more quickly. And unfortunately, it's likely just the beginning of an increasing trend. We hear a lot of these terms surrounding efforts to mitigate climate change. We hear about carbon markets and ESG, but I feel very privileged to have people on stage with me who can actually explain what some of that means. And so I want to start right there with this idea of carbon markets. For those of us maybe who don't know, tell us, what does that mean and why should we care about it? Marley, do you want to start? Kick us off?
How long do we have?
Not long enough, but we will try to do our best.
I think probably the best way to talk about it is that we can start with we can talk about ESG and corporate ESG, environmental, social, and governance goals. And we've seen over, since 2020, a rash of corporations around the world making sustainability pledges. Most of them are carbon-based, meaning they want to be net zero. Everyone's heard that. We made a commitment at Microsoft to be net negative by 2030. That means our total effective emissions will be a negative number to do that. So that's essentially, we set these goals, and every corporate sets those goals. But what does that really mean? How do you get to net zero? Well, the first thing you have to do is figure out, well, what are my emissions now? If you've spent any time in emissions, it's not a very simple thing to do. There's 3 different categories of emissions. There's scope 1, 2, and scope 3. 1 and 2 are direct and indirect, mostly tied to your business, and those are more easily measured. Scope 3 is the difficult problem, and determining your scope 3 essentially is the emissions that you inherit from your supply chain downstream, and those add cumulatively to your carbon debt. So if we look at the corporate's carbon footprint, that is essentially how indebted they are. So when we say what your balances are on the debit side, when we talk about carbon credits, typically in the voluntary market, Microsoft, for example, is not under any regulatory regime that says thou shalt be, your carbon footprint can be a little bigger than this, and we have to go buy allowance credits. So this is a voluntary thing for us, and we're doing it for ESG purposes because sustainability and investors and investment funds are looking at corporate ESG progress and rating their progress, and that will affect your stock price. So that's why boards of directors are interested in, how are we achieving our goals? So effectively, for us as Microsoft, we calculate what our effective emissions are, and then we set our goal. So if we say we want to have our emissions goals be 15 million metric tons of CO2e, all right, that sounds like a very complicated thing, but it's essentially how that's our carbon footprint for a year. So we might, I'm making these numbers up. We actually do the accounting on that, but to give you an example. But if we say that's our goal to be at 15, but we then calculate for 2021 and say our actual emissions were 17 million metric tons, then we have a 2 million metric ton gap that we need to go offset, that we need to net down. So we have to go buy carbon credits in the market that we can then purchase and then essentially retire or burn. Those of you in the blockchain space, we're retiring them, and we're saying we're going to burn these credits we bought in the market, and then we apply them and reduce our carbon footprint to meet our goal. That's essentially what the ESG goal and establishing it is. So that's the overall ecosystem, and I'll hand that over from an ESG perspective. Why that's important, not only for Microsoft, but all these other corporates. It's not a simple answer, but that's the starting point.
No, that's helpful. And Yuval, do you have any other thoughts on just kind of defining the landscape in terms of the carbon markets and ESG? It all seems very voluntary to me, which is, I know there's an impact on stock prices, but if individual corporates are responsible for monitoring all of this internally, it seems like there's a lot of room for failure there, but I'm interested to hear your perspective.
Yeah, I was going to exactly talk about that. So I think that when you think about carbon credits, unlike any other asset, so if you drive a car, you get to a gas station, you buy gas, and it's your gas. You are going to use it, and you know when you're using it, unless someone, of course, siphon it out of your tank. But traditionally, when you buy assets, it's very easy to prove ownership and consumption. The problem in carbon credit, although you burn the credit, you don't burn the tree that created that credit. And for the most part, those trees or those facilities that create those credits are not in your control. So one of the biggest challenges in the carbon markets is how do you prove the authenticity of these credits? How do you prove that if Microsoft just bought those 2 million metric tons, nobody else have bought those same 2 million metric tons? And that problem becomes very challenging. Another problem in the carbon market is that for the most part, these assets are in different countries a lot of times. So take an example, when you think about rainforests, you have Brazil, you have Indonesia, and you have Congo as like the biggest rainforest in the world. So Congo, for example, would probably be a net exporter of carbon credits. So how do you prove that these carbon credits that have been created in Congo through trees haven't been sold to 30, 40, 50 countries? And that's one of the biggest challenges in what you call voluntary carbon markets, is that there's a lot of fraud. And that's why a digital asset, we believe that blockchain has an immense opportunity here, because immutability, the ability to prove that something that was burned hasn't been reused, hasn't been double spent, is a key component of carbon credits. And that's why we believe that the technology with this specific problem is a big opportunity.
And I know governments and other entities are trying to create new and better tools to monitor these things. But who is actually governing all of this activity?
So there are government programs, and those are usually for their local markets. But when you start thinking about global markets, there isn't. And that's why standards and why IWA now under the GBBC umbrella is extremely important. We talked earlier about all these different initiatives that are on different technologies, and someone, I can't remember exactly who, mentioned that what's important is not that we're all building the same technology, but it's these intersection points, these touch points have these standards. Because what would be really unfortunate is if Congo, in my previous experience, created a lot of carbon credits, digitized them, but in a shape and form that other countries don't recognize. And unfortunately, the reality is that we're lazy. We like to consume things that we understand. So one of the most important things for these markets to be successful is to have some kind of a standard that if Microsoft wants to buy these carbon credits from the Congo, it is in a format that they understand and they can consume, and it's on technology that they trust. So unfortunately, there isn't any global organization that enforces voluntary markets. And a lot of the initiatives that we're participating in is how to create these standards that at least there is that trust cross-border, cross-organization to actually trade these things globally.
Mercy and I want to add to that. So the first question about how do we define or what a carbon market is, I didn't really have a great answer to that. 2 months ago, 3 months ago, and then these two guys and Sandra asked me to take on a project called the GSMI Green Initiative. And I looked at it from a technology point of view, and I said, can this really be solved? Is this too difficult to solve? And then I went to Marley and said, hey, Sandra asked me to do this paper. And he said, hey, that'd be great for you to do. Why don't you just do that, you know? And I knew nothing. So I'm going to come at this as a very noob, as they call him today, I guess. The first thing we had to do is really understand, like, what is a market? What is the marketplace, right? And so it's the green marketplace, but holistically, there's a lot of different players in that space. And so we'll release our paper in the fall, but this idea that it's you've got the financial services, you've got the government, you've got consumers. There's a big marketplace that is looking at, or maybe not even aware of this problem. And then kind of that second point that you've all brought up, when you have a conversation about sustainability, you have two polarizing points of view, and then maybe a little bit in between. And what we have found in doing this project is that when you put some standards out there, a common language of the token taxonomy rather, people can start talking somewhat the same language on what we're trying to achieve. So I think standards connect those markets, and then we can start having a profitable conversation.
And because I think it's new to a lot of people listening, can you talk about the Interwork Alliance and the work that you're doing on the task force? I don't think that many people are familiar with it.
The founder should answer that.
Yeah, I'll let Marley.
I'll give you a practical, this is a real world reason why we use the Interwork Alliance. So, real story, Microsoft, when we made the commitment to, be carbon negative, one of the things that our team did was saying, it's no longer enough. We can't get to a negative position by 2030 by purchasing credits that are only reducing the amount of carbon that's being done. So the over 90% of the carbon credits that are available today are reduction or avoidance credits, which are sort of Kyoto level sort of things. We're not going to get and meet the MDG goals to do that. So we have to shift to removals. So we said that will make our math work if we purchase removing. So we're not just reducing, we're actually pulling carbon out of the air and storing it in the ground and soil, forestry, so nature-based solutions and technology solutions. And we went to go try to purchase these kind of carbon credits on the market, and there weren't enough verified credit. The key word there is verified, right? There weren't enough for us to purchase on any market anywhere to satisfy our needs. So we had to issue an RFP. Now, what other commodity do you need to go issue an RFP for these days? No, there are none. And you run an RFP, it's like a circus, right? And we had 190 different responders come to us, and they're all using different sort of language and things like that. And the fire alarm went off, and our team was brought in to say, we don't even understand this. And I looked, and there was no defined process for how voluntary markets, a life cycle, how do you create a carbon credit? Is there a definition? There's not. There's like 10 different ways to do it. So we used the Interwork Alliance and said, hey, we can pull a bunch of constituents together and define the roles of the participation in that ecosystem, the flow, basically how you go from cradle to grave, creating a credit and retiring it. And then what is that common set of data that each of the constituents along that life cycle needs to add to that? And then what are the attestations along the way so that there's trust and confidence when we go to purchase something on a marketplace or an exchange? We trust that the integrity of that carbon credit we're purchasing is an actual removal, and we can evaluate it on its face value and not have to go through an RFP and due diligence all the way to the source, which we're having to do today. We're having to do that again this year. So the IWA was the forum that we used to define the token specifications for that life cycle as we go from ecological claims to the claims processing to end up with a carbon credit to then trading that credit, consuming that credit, retiring it. And then all along the way, we're collecting demand signals through a smart contract ESG companies go in and put in, hey, these are my goals for next year. I would put my actual side by side, so I give a quantity of the demand signal, so I know how much I'm looking to purchase the market. But then we also need to get specific on that demand and say, of my quantity, I want like 80% to be nature-based, 20% to be technology-based. Of the nature-based, I want 30% to be ag and 40% to be forestry and so on. I can get very descriptive down to, I want my carbon removals to be sourced from Colombia or Nigeria or wherever, and be able to then go to the market and find those credits using those attributes. But also that demand signal will route financing to projects in the future that will create credits that I'm likely to buy. So that ecosystem is defined. We defined that in the Interwork Alliance. It took about 6 months. We have token specifications for carbon removal credits, or CRU, core carbon principles tokens, for those of you that are steeped in sort of the task force for, there's a big TSVCM acronym out there that we align to there. And all of that now is under the GBBC, which is really, really exciting because we get to scale this. And we, not just Microsoft needs to scale, but everyone, we have to all row in the same direction to meet these sustainability goals.
Yeah, if I can add to that, I think that what's important is that that whole work is not specific to a technology. And I think that that's actually the key. That specification is technology neutral. So on the previous panel, there were multiple, to some extent, competing platforms. They can all specify these tokens on their own technology stack, and Microsoft will be able to treat them as the same type of assets. And I think that that's really the key, because swimming all in the same direction doesn't mean we all need to implement the same technology, because that to me is not realistic. It's really just having a shared understanding of how we talk to one another. In financial services and other industry, if you think about supply chain, EDI, everybody uses their own technology stack, but we know how to talk to one another. In payments, so many different solutions, we all send SWIFT messages, fixed messages. So it's more of this language to make sure we understand, as Marley described, instead of this RFP of us doing discovery work and really understanding what you're talking about. It's really just the common language rather than common technology, which is very important.
Yeah. And to build on that, the work that they have done is now put into a project called, well, it was the Interwork Alliance with 3 main frameworks. The first one, and the most important one that's really gaining brand presence in its own, is our token taxonomy framework. Now, the work that they have done has been put into this, or has been built through this framework and kind of fed into it. But the great thing about that is now it's open source, and our partners, our members rather, we are a nonprofit, are using that on some implementation that you'll be seeing, or they've done press releases on it now, probably about 10 partners right now. And that's really cool to wake up one day and say, well, this stuff we've been working on, or you guys started it, but to come in one day and they call us and say, hey, we want to do a press release on TTF. And that was, wow, that's fantastic, because your heads are down, you're doing the work, right? And then something clicks, and that was it. TTF really got people nodding their heads, because we can take a use case, define it, put standards around it, fed by the marketplace. And then kind of that next step, once we get a lot of more mass, which is why we are so thankful to merge into Sandra's group, is to scale that. And then to scale it for a reason, so that we have some kind of certification model out there. So there's, to your points, consistency on how things are produced back and forth. So that's kind of the first level of what the Interwork Alliance does. The next level up, we'll be distributing more work on that in the next several months, is our smart contract, or our Interwork framework. And then above that is our analytics framework. And those are the pieces that these guys and their teams have helped really put together, that we can take to market now, that really make a lot of sense in the conversation.
So this work is clearly needed, and it's interesting to see that it's being industry-led, not forced through regulation, what is the role of government in all of this, and how are you planning to work with governments to make sure that there is additional scale and cooperation between what you're doing and regulatory action?
Yeah, I think, the main thing is when we looked at this, we knew that we had to start to push the industry to move to removals faster, with haste. We had to move quickly, and we have to essentially, not wait on the regulators, but let's do something in the voluntary market, because it isn't under any regulatory regime. We can lay out this process and this workflow on these open standards, build infrastructure, and then use it and show how it works as a reference model for the regulatory agencies that will come in. Then hopefully that infrastructure and those standards can scale out, and we can absorb and start to provide solutions for NDGs and countries to come to agreements and contracts to be able to make sure that carbon credits can flow across national borders and get accounted appropriately, and not duplicate infrastructure. The goal for the holistic goal, and it might take years to get there, is to have the voluntary and the regulated markets work together so that as any organization, big, large household, nation state, you can participate in open and voluntary markets and consume those, and those will count towards regulatory guidelines and limits and also contributions that you have to make. So that's the end goal, but we had to start sort of focus on removals, focus on the voluntary market, make progress there, show how it's done as an example, and then make sure you do it in the light of day so everyone can see what you're doing. So you'll see more and more of that happen over the next calendar year. More and more of these implementations roll out.
So as in regards to how we work or how we will work, all of us collectively with government, there's two choices: do nothing and let chaos and massive regulation destroy the marketplace, or be proactive. And so on the voluntary side, once you get a common language, we can then share that. And the conversations we've had with state and federal regulators and government is, one, just educate us. We need to know what is going on, and we really don't understand it. And some of this stuff is happening, and we might understand it. So give us more detail. But when you give detail up here, you feel like you're not talking the same language sometimes, or everybody walks away thinking they have it solved, and then nothing is resolved. But when you can talk specific framework, language, taxonomy rather, they get it. People start nodding their heads. It's really cool to see it. And then we can start having a meaningful conversation on regulation and some of the other things that are going to impact the business or the industry in the decades to come.
Yeah, and maybe to start from where is maybe the end goal. I think the end goal is for government to recognize these carbon credits from an accounting standards perspective, from tax perspective, tax credits, getting to a place where in Europe, for example, there's a lot of mandatory, and those are the non-voluntary credit markets, and maybe to allow the voluntary carbon markets to be part of those restrictions. That's the end goal. The reality, and that's not a negative statement about governments, is that governments cannot move at the same pace of the private sector. So I think that the opportunity for us is actually to innovate, to move ahead. And I think that one of the things that got me excited, so Microsoft and us started IWA and just recently merged into GBBC, that the great opportunity there is actually the membership of GBBC, which has a lot of governments. So I think that we should not be waiting for regulation to take place, for these things to take place, because we don't have time for that. But at the same time, we should not be waiting on educating them along the journey. And that's why GBBC is a great place to do both of those things.
Yeah, and largely like regulated markets are mostly stick. We think voluntary markets could be lots of carrot. because you're, especially in the removal space, you're trying to create a standardized way for rural agricultural farms to have sustainable farming practices, and those practices then turn into carbon removal credits as they sequester carbon into the soil or into preserving forest or do reforestation or afforestation, and reward those by making those as standardized products that can be sold around the world, not just in local markets. The goal here is to be able to have countries, big and small, farmers, big and small, go in and use these frameworks to create carbon credits that can be sold and consumed around the world, and those credits can then count towards sustainable goals both on the voluntary and the regulatory space.
And Marcina, to add to that, so what is government's role, or what is our ask, or what do we recommend? We'll talk about that more in November when the paper comes out. But what we've heard, I live in Seattle, and we work with the state of Washington, on with DFI, and we pull our startups in, and then we pull larger businesses, Microsoft and Amazon in. And a lot of the feedback is, give us some kind of a sandbox to work with. Just give us 5 years. Give us time to innovate with some guidelines. So that is one big thing we ask a government, figure that out on a state level, so startups can, businesses rather, can attack this problem. And you don't have to do it for every industry, but pick ones that we're aligned on is how we're positioning it. And then, state to state, there's got to be some handshake. And I think once that starts happening, we'll see a lot more support.
So I have understood everything you've said, which is a great testament to the level at which this conversation has been brought down to. So I appreciate that. But to be honest, when we get into standardization, the token taxonomy framework, it can sound incredibly wonkish. And I think a lot of people's eyes glaze over. They have no idea what you're talking about. And it seems like something that is very focused on corporates. Is there an opportunity for individuals to participate in carbon markets and the work in which you're engaged?
Well, I like to use the analogy of monopoly when you think about what a token is. And the other question of how a token would work is you have to look holistically at the market and say, what's the supply side? What's the demand side? What are the rules? And how can that transaction be made more efficiently? With that being said, there are many ways that different people can play. I mean, my simplest answer to that is it's not legal in a lot of countries. It's kind of a ICO, right? You're buying a token for a specific reason that has a value to it, and you're supporting that whole ecosystem, and you're going to stay involved with it. So NFTs are going to start doing that, or are doing that. So I think consumers will see the value and buy into it. Brands are going to start adding NFTs to their message. You'll see P&G and others do this kind of work as instead of reward points, it will be some kind of a iteration of that around NFTs, that you're buying into that idea, that vision, that passion that you have. And it's been done before. It is being done now, but in a different way. And I think being able to monetize it or give them value is not too far down the road.
So I'm gonna bring up a company that has nothing to do with GBBC or IWL out of Sweden, which is called Donna. And what Donna is doing, they're working with credit card companies, and they have patented an idea, a formula, how to calculate the carbon footprint of consumer-based goods. So when you get your credit card statement, you would see the carbon footprint of every one of the items that you purchased. And by doing that, you will actually have also the option, eventually, to offset those things. So generally speaking, humans are relative creatures. What I mean by that, there's this whole theory why you should always have 3 prices, because you compare them. eventually, I think that as this thing becomes more and more popular, you will understand that if I fly to London, what is my footprint? If I purchase jeans, what is my footprint? It will become this economy that we understand, right? You wouldn't necessarily need to understand the entire supply chain because there's no reason for you to understand. You will understand the impact of what you are doing by your activities or your purchases. And then if you combine it with these other activities, like Marley said, you could now take your personal opinion. If you are in Italy and you want to support sustainability in Italy, you'll be able to do that. Or if you have an affinity to a country somewhere else in the world or a different industry, now this relative activity that you can quantify, you will have these means to offset it with direct impact. So I definitely think that consumer will have part in this activity.
Yeah, I think, that's the thing, is we have to make it's a data attribution problem that we are tackling broadly from both. If you think about it, everyone here can use the credit card analogy, use a credit card, but it's going to be a carbon card, and you're going to be using that carbon card every time you purchase something. You're building up your carbon debt. And first step is to understand what that carbon debt is at a personal level. Very difficult to do, but then that has to roll up to household to company to region, and so on and so on and so on. But we need that math and that accounting framework to work on the emission side. The offsetting side, the crediting side, how you pay down your debt is by purchasing. In this case, we're really trying to get the shift to go to removals, so that you can then, as you're purchasing this, using your carbon credit card, you can purchase products that already have bundled into it an offset, so that you're buying a carbon neutral product. And that could be natural gas, it could be fruit, it could be a pair of jeans, what have you. So as soon as we start to get that alignment and that infrastructure laid, where not only is it just because everyone goes and shops and you see like, all natural, no preservatives used, no antibiotics, and you're like, okay, how much do I really believe that? We need to have a lot of trust in that, so we have to have that set of standards across to let those two frameworks line up so we can get to that level. It's going to take a long time to get there, but these are the first steps in getting there, standardization.
I like it. Sugar-free, fat-free, carbon-neutral yogurt is the next step.
Sounds disgusting. To pose what is perhaps the most obvious question of this session, why blockchain? Why do you need it to do what you're trying to do? And could you realistically do it without blockchain?
I think that from a technology perspective, you can. There's no reason if someone and all of us agreed to have one centralized database that will host all of this information. Yes, you can. The issue is that this is a global market. And Marley used the word trust many times. And I think that at the core of blockchain is decentralized trust. And I think that that's really the key here. It's this immutability and the decentralized trust that is core here. It's no different why capital markets are not all sitting on someone's centralized database. That's just how we operate. And that to me is just the very simple, answer to the question is we are we're global citizens. We want to trust each other, but we're not willing to put all of that information and power into just one organization. No, we should, should we do that? Because there's today technology solutions that allow us to have this decentralized trust that effectively give you this central source of truth, but in a decentralized way. So that's really why blockchain is needed for this.
And how do your efforts contribute, or how do you hope they might contribute to more circular supply chains generally? Do you think that the frameworks and the standards that you're creating will better equip companies to envision these more sustainable circular supply chains?
Yeah, it's all about the first thing that, again, you have to have awareness as you're consuming in your supply chain. You need to be able to have the data available to you when you receive goods from your partners. as to what are the attributes, what's the carbon footprint, what is the water footprint, what are the human labor conditions and those types of things, and how do you sort of evaluate all of those things into a supply chain? So, first you have to say, this is the data I'd like to see, and then you need to then understand, okay, where would that data originate from, and who do I want to also attest to it, so that when it lands on my dock and I'm taking it in as commodity from a supply chain, I trust that what's on the label is true. And that goes back to sort of the decentralized role and the multiple parties of attestation. One thing blockchain does allow you to do is it allows you to create, levels of, I can't say infeasible to commit levels of fraud that you couldn't do, that you can probably get away with in centralized systems that are very difficult to do in blockchain systems. So that building of trust and confidence when you're consuming these things is really empowering. That's what ultimately adds value, and that value will then cascade back upstream so that they're rewarded for collecting that data and putting those attributes in where they're needed, and then attestation to come down and flow through the supply chain. So without any of that infrastructure, we're not going to make much progress. So
yeah, and why blockchain? I mean, maybe we don't need blockchain. And a lot of things that we talk, that the buzz is around, but a lot of the comparison comes up that this is like the internet of the 90s blockchain, and in some respects it is, and I was there right in the middle of all that. But the biggest difference is this intrinsic value in the technology that weaves through all the use case, and many of you know that more than I do. But at a use case level, at a tactical level, that intrinsic value is going to only get bigger as we figure out what these solutions look like. So I think that's one of the most compelling parts of a blockchain.
So we only have about 5 minutes left, and I don't want to close on a really dire note. So we're going to answer this question quickly, and then we'll do one afterward. We've spoken about carbon markets, about all of the tools that you're working to deploy. And I'm curious if it's enough, if you think this incremental progress is actually enough to make any sort of meaningful difference in terms of the environmental effects that we're all experiencing.
I can go further. You use the word incremental, which I think is correct. So it means that it's not enough. But I think it's a critical path. Is more how I would define this effort. If we want to create a global economy of carbon credits, there are going to be roadblocks in some areas. So this common language, standards, ability to talk the same language to one another, to me, is more of a stepping stone. It's a critical stepping stone, but that's not enough. Marley talked about the technology, all the different solutions. So if we're going to create this common framework, infrastructure, common language, but then the technology that will bring these voluntary removals are not going to come, then this infrastructure will sit idle. So critical, but not enough.
One of the things that excites me, it's hard to attain to what we would hear, the last 10 years or so, that we're going to be carbon neutral in 100 years. And I just kind of tuned out. When I talk to Marley and others, and they're talking about 2030, and then you have the Paris Agreement, talking about 2030, 2025, these are attainable, tangible goals that can be reached. Will they or not? Well, one thing is at least it's measurable. Like, did I do it? Well, no, I didn't, but why? We have a lot more detail when you shorten that time frame of what that goal is going to be, and that's what's really encouraging. The other part of that is, I think, having, I don't know how many countries are involved in the Paris Agreement, but having that alignment alone is beyond. I mean, we could barely do that with Corona guidelines, but I think there's enough pillars in place that it can be measurable.
So we've spoken about industry-led efforts, certain behaviors by governments, which will hopefully encourage better behavior on the part of industry and others. But I'm curious, how consumers play a role in all of this and whether we can engage the average consumer more effectively to drive progress. Microsoft is clearly committed. There are others who are also committed, but it's not enough. I would posit it's not enough. So how do we engage active consumers who are invested in this space to help drive additional action?
Well, just awareness is probably, putting the data in front of people, and where they can and see and understand, what their impact actually is, and that will make people generally will make better choices, especially when you look at your kids and and the kids are starting to grow up and they start pointing the finger at you for not getting a handle on this. So. I think, the biggest challenge, the best what we can do is put the data in front of as many people as possible and let them make a rational decision based on that. Now, there are people that will look at data and not trust it and all that good stuff. We can't really control that. But what we can do is do our best to present the truth to people and say, here's what your carbon footprint is, for example, and let people make and provide them the options to make different choices. And that's about as much as we can do without getting into regulatory issues.
And when you talk consumer, you start talking about segmentation. And I think when you look at the different segments of the market, like I have two 12-year-olds, and they're a lot more socially aware than I was, that I even am. And in fact, when I started working with IWA, I sat on a conference call and my daughter said to me, "Do you care about this green stuff?" And I said, yeah, but kind of not really convicted of it. And then we were on an IWA conference call and we kicked off our sustainability work group. And I said, come here and listen to this, which was way over her head. But it said, we are going to make an impact. And now I feel like we can make an impact to answer that question. Yeah, I do care. And here's how I care and here's what it means. But I think, socially, when you segment that market, there's a different communication, there's different messaging. In the schools now, they're having those conversations that we never had. So I think at the consumer level, there's going to be, there is already, you can see the difference.
Any final thoughts?
Yeah, I think that I want to double down on what Marley said. At the end of the day, I think that until we have some of these, or this infrastructure, some of these technology solutions that are accessible to consumer, it's education. But I will say that already today, the economy I mentioned, there's a ETF company in Australia called BetaShares that are actually saying their ESG ETFs are their most popular and asset under management are growing the fastest. And again, it's education. I think this generation and the younger generation really cares about it. And I think if you educate them and you actually show ways to have positive impact, you will have good result. And as technology evolves and these things get developed, you'll have even more tools to create impact.
One other thought I have is from a consumer point of view to make that impact. I think when the technology and the buzzwords go away, blockchain is in the background, all this technology starts to fade, then we'll know we made a difference. Going back to the internet analogy, people are saying it's HTTP / there's a dot forward, so I don't remember. But I mean, remember those days, if you do, like people don't care about that anymore. They know what the technology is for, but they don't care about the technology. And I think when we get to that point, it'll be consumer friendly.
I'll end with, if you're interested at all in learning about this, you can read the Oracle Alliance Voluntary Ecological Markets paper today. It was published back in June, I think. And it is a good overview. It doesn't go too far in the weeds if you're interested in the overall process. And now that's, as a part of the Global Blockchain Business Council, GBBC, hopefully everyone will consume that and help us push this big rock up the hill further.
Yeah, and if you're interested, it's under resources under GBBC.
Thank you so much. This has been a pleasure.
I don't like hearing my own voice. I don't like seeing my face on the screen. We're out of luck. So did you send me a LinkedIn yet? I didn't think I got one.
I sent you a text. I'm not sure if you got it.
Text. Yeah, just a LinkedIn is easy. Hey. Yeah.
Hi, everyone. Hi to everyone in the room and also to everyone joining us online virtually. Thank you for being here with us. We'll now start our next panel on building sustainable and resilient systems. I'll invite the panelists on stage. Thank you.
Hi, everyone. I'm Joel Telpner. I head the FinTech and blockchain practice at the global law firm Sullivan & Worcester, and I'm also the chief legal officer for Input Output Global, the company that built the Cardano blockchain. This panel, to me, is really interesting because we're talking about a theme of sustainability and resilience, but we've got very different companies that are doing very different things. And so initially when I looked at this panel, my first reaction was, how do we tie all this together? Then I decided, well, actually, maybe we don't need to. And so what I literally would like to do, if you guys don't mind, is I just want to go down the row. And I want to ask you to each kind of just define in the context of your organizations, really what you mean by sustainability and by creating sustainable and resilient systems, and what it is that your company or your organization is really doing to try to achieve that. And then let's see, once we've gone down the row and look at all these different types of businesses you're in, if we can now tie it back all together. You want to kick it off?
Sounds good. Hi, my name is Stan Chen, RecycleGo. And when Joel posed this question to the group, I thought it was very interesting because I'm in the recycling business and
for you, it's a softball.
Yeah, it's like, all right, pretty much low-hanging fruit, right? In terms of really defining sustainability in terms of using, having a consumption pattern which is not, basically, you're not going to tap into the future, production of the materials, right? So when it comes to plastics, metals, whatever it is, hey, you know what? Don't use more than you're producing. But in terms of what we're building, it's really just understanding sustainability in terms of really, we've been focusing actually these last few years in terms of recycling and recycling blockchain. And when it comes to plastics and our impact on plastics production, plastics consumption, and its effects on the environment. So in terms of what we're trying to do, it's basically looking at sustainability and trying to improve the sustainability of the materials that we use.
Okay, thank you. Elena.
Thank you. Same
Okay. Same, kind of more of a softball for us. I'm Elena Bonjareva with PowerLedger, and PowerLedger is an operating system for the new energy markets that enables tracking, tracing, and trading of renewable energy, environmental commodities, and grid flexibility services. And the strength there, and hence the sustainability and resilience, is PowerLedger's ability to spin up local energy markets, because the grid is only as powerful and is only as green and good as the markets that sit behind it. So from the resilience, kind of what that means from the PowerLedger perspective is probably on the three levels. So we're talking about climate change itself, and so climate resilience. Then we're talking on the organizational level and on the community and individual level. And I'll give quick examples to illustrate what that means, and I'll start kind of from the reverse flow. So if we look at community resilience, one project that we have is in Thailand called T77. And it is actually a precinct of 4 buildings, a dental hospital, a school, a shopping center, and an apartment building with very different consumption and generation pattern. For example, dental hospital has no ability to have PV, so they're just a consumer. The other ones are prosumers and consumers. What PowerLedger was able to do in collaboration with the energy retailer is activate that energy market through peer-to-peer trading. So they are selling to each other excess, and you can see that on the platform going up and down throughout the day. And from the resilience perspective, just these numbers, solar penetration for that precinct is only 17-18%. They're saving 25% on energy costs per year on average. So this is community resilience. And obviously this is fantastic for the grid because we don't have congestion issues, we don't have overloading, we don't have reverse flows for the grid because energy stays local. On the organizational resilience, project with Silicon Valley Power. So now we're away from Thailand and over to California. PowerLedger, through the blockchain technology, enabled them to automate the minting of low carbon fuel standards credits, LCFS credits, and the trading of them after they've been minted and created. This is organizational resilience because without it, municipalities don't really take advantage of what could be $2 to $3 to $5 grand a year per vehicle that is being charged with renewable energy, because the amount of paperwork and back of house work that has to go in to actually make that happen. On a good day, maybe a local government can do it, but how many good days have local governments in California had recently? Not many. And then let's go to the last panel, and Yuval and other kind of individuals' comments around individual participation in climate action. I'm going to give you one of my favorite examples. Asahi's largest brewery in the Southern Hemisphere wanted to create and deliver to its community, to its customers, a carbon neutral beer. They did not have enough capacity to actually have renewable generation to do that. So through PowerLedger and blockchain technology, they are sourcing excess solar from their customers, and they're paying them in beer. So every month the van pulls up at your curbside and delivers as many cases of beer as lots of $30 worth of renewable solar energy that you've given back. So when you talk about all of a sudden activating self-interest and the comments of the previous panel, right? What are the carrots? How do we get individual passion and commitment to actually participate and monetize a solar asset? That is kind of the individual and commercial and economic resilience that is now possible.
I like the beer part, although that may apply more to the resilience as opposed to sustainability side. Ted?
I think those who like beer might disagree.
Thanks, Elena. Yeah. So I'm Ted Katagi, founder and CEO of Kenja. We're a visual certification layer for using blockchain, but I really like your framework, Elena, and I'll go with it. It's community organization and energy sustainability, right? So on that same level, organization sustainability, a lot of it is you have a lot of people with people knowledge, if you will. They have the knowledge and tribal knowledge where individuals know things. So resilience doesn't happen because you have individuals with knowledge and those people get sick in a big event or they're not available. And so one of the things we've helped companies with is documenting their processes. So they put their processes in content and tasks against that. They laid out the logic, so it's not tribal knowledge anymore. It's documented in a process. And so this is one of the things that allows you to become sustainable. So that's one level of it. So organizational, that's what sustainability means to me, is that how do we make sure that the tribal knowledge gets documented, right? So that's one thing that we've worked on. On a community level, I think it's really about governments trying to do things in infrastructure. In the first speaker today, we heard about how it's not just infrastructure, but you have to provide a whole set of tools for a country. So we're actually working a bit with a country called Timor-Leste, and they are trying to create an ecosystem, not just with one solution, but they're trying to work with a number of different things to bring together a whole ecosystem. And sustainability is about creating a platform that is not relying on two legs of a stool, right? It's creating multiple, a more sustainable platform. So that's that. And then on the energy side, I think that what I see is that because the certification, the visual certification layer, there's so many people, and we see that they understand there's certificates out there, but they say, what are these all about? It's just like what we heard earlier today at IWA. There's like, okay, we know there's something out there, but what does this all mean? So it's about breaking that down and then having common languages like the IWA is talking about. But for us, a little bit is the last mile. There's all this discussion about, big law firms and big accounting firms, and they're thinking about it at that level. When you're talking about the bigger suppliers like an Asahi, they'll understand this, but some of these people that we're talking about are on a smaller scale in developing countries. They have no idea how to get to these things. So you have to make it really simple, and the last mile means getting out to them and going out to where they are, and then trying to provide an easy solution. So yeah, back to I like the framework, the Atlanta framework there. Okay, thanks.
Thank you. Angela.
Good morning, good afternoon. So Joel, you're right. I think we're all very different. And I was just as excited to participate in this session to hear all the different activities that are underway. So GS1, for those of you that don't know, we're something that you use every day and probably don't know it, right? So if you've ever been to a grocery store and you go to the checkout line, that beep sound, that is actually our identification standards at play. So we've got 25 different industries that use our standards. They're global. They're around identification. They're around data structure. And we've been doing a lot with several industries around sustainability and resilient supply chains, obviously, with what we've been able to learn in the last 18 months. For us, sustainability is really being driven by the consumer, right? So with the companies that we work with, it's around how can they get more efficient and sustainable in their practices when you think about the packaging aspect of it. And the other piece is how do we put knowledge in the hands of the consumers, right? So that they understand the sustainable practices that I as an organization take in the preparing of their food or in making their actual products. So it is obviously very contained within where our organization would play and support them as an industry-driven standards company. And from a resiliency standpoint, while it's really big words and we're all talking about it, across our industries, it's really around visibility and fulfillment, right? Do I know where everything is? Do I have what I need? Is it going where the demand is so that I can be able to respond and fulfill in the way that is needed? And that's how our customers are really looking at getting better with their ability to adapt and pivot, which makes them more resilient in their practices and delivering to the consumer and the patient.
Thank you. Adam, take it home for us.
Sure. Hey, everybody. Adam Kaplan with Salesforce. A lot of our clients are thinking about ethical sourcing and sustainable supply chain. And just a couple of examples to share. So one is around cotton. And there are lots of really negative farming practices around cotton in the world and cotton from certain countries. And so how do you ensure as a CPG company, as a retail company, that you're leveraging cotton from the right countries, from the right places where people are treated well, where it's produced in a sustainable fashion? And then another example is around just a lot of companies now are saying, hey, you should buy our products because they're made up of recyclable materials. So actually, how do you actually prove that, yes, this shoe is made up of bottles that are taken from the ocean or things of that nature? And it's really challenging because the intent is obvious and the technology can work, But anytime we get into this sort of digital twin concept, as we like to call it, where you're linking a physical product with the digital sort of marker on the blockchain, it causes real challenges because there's always a question from every one of our clients. How do you know, even if it's an RFID code or UPC code, maybe it's an anti-counterfeiting example even, how do you know that that code wasn't counterfeit? How do you know that someone didn't take that code off the shoe and replace it with something else? We see this in luxury items as well. If someone wants to have a luxury purse, they want to prove it's not counterfeit. And there's no perfect ways to solve this today. Just sticking with the alcohol motif that Elena brought up, we actually spoke to one of our clients who is a large liquor distributor, and they looked at putting RFID codes on every one of their bottles for anti-counterfeiting purposes and also for some supply chain aspects. And just the cost of it was $3 million per line to implement that. So it's not like the intent wasn't there. Consumers, yes, it's valuable to consumers, but so much cost, it became a really tricky ROI analysis. Now, we are seeing some interesting things out there from a technical perspective with sort of how to try to combat this digital twin issue of linking physical and digital. And some of the cool stuff we're seeing, one is some companies are using it's a diamond spray. And so it's sprayed on a good. And when you hold your iPhone up, you can actually verify that the pattern matches the original pattern. And now there's questions around how scalable that is. Could you do that in mass, or is it more for unique, sort of more fashionable goods? But now with the new phones and more sort of AR and VR power in these, even in just, iPhones and whatnot, there's some really interesting things happening right now with photos where, you might not have to go to the diamond dust concept. You can actually just use your phone. You can verify very specific things in a photo to validate that, yes, this is the actual physical item that was tied to, that marker put on a blockchain. So those are some of the things that we're seeing a lot from our clients and huge interest in this area. And, but they want to be really thoughtful about it because these are really important matters, and they don't want to go down the path with the right attitude, but then these issues kind of bring some negatives to it.
Thank you. So I think there are two things that I wanted to touch on in listening to all. These are really cool things that you guys are all doing. But two things. One, when we're talking about sustainable and resilient systems, I think it's both at a micro and macro level. And what I mean is at a macro level, we're talking about the world. How do we how do we save the planet? How do we address climate change and make sure that we're still around as human beings in a couple hundred years? But at a micro level, you're also talking about things that you can do to make sure that businesses survive and continue and prosper and fulfill their purposes. And so I like the fact that there are elements of both here. Now, in the prior session, Marcina asked the panelists, could you do this without blockchain? I don't want to ask that question. I want to ask a slightly different question. Elena, you mentioned briefly blockchain. I think Ted and Adam, you also briefly made reference to blockchain. So what I'd like to understand is, are there things that you're able to do now when you're starting to look at these types of goals of creating sustainable and resilient systems that you couldn't do the same way or as well without blockchain? What does blockchain allow you to do differently or more effectively or in a better way perhaps than even a couple years ago?
Well, let's just say, first and foremost, matching quickly the transaction to the solar wind generation. Solar wind are not stable, and wind blowing right this minute is going to be different from 5 minutes from now. Being able for blockchain to actually settle transactions on a 5-minute block is really powerful for that, if we actually are to understand both the demand and the generation when it comes to renewables. The other, and this goes to some of the other UN SDGs around decentralizing access to power when it comes to energy. I grew up in Russia, and a lot of people have experienced various forms of authoritarian governments, right, where only a handful of people control and distribute energy. And of course, from the blockchain fundamental benefits, it is that decentralization. And so what we couldn't do without blockchain is activate communities. I'll give you an example of Uttar Pradesh in India. That area houses 1/3 of India's unelectrified population, despite the fact that it's number 4 in India's production and number 2 in electricity consumption, but 1/3 of all unelectrified population there. So in collaboration with the utility, PowerLedger did a study and a pilot around peer-to-peer and confirmed that if we enable peer-to-peer trading, 42% is the drop in electricity cost for individuals. That becomes really significant when we're talking about expanding these benefits to developing countries. And when we're potentially saying, look, in developing countries, you can leapfrog because don't invest millions and billions of dollars into infrastructure that is central for your utilities. Maybe invest it in individual solar panels, give them a battery because then they can participate in the economy. They can actually have an asset they can monetize. Without blockchain, these kind of trustless arrangements that really activate individuals and organizations' ability to participate in energy markets, it's just hard to see.
Sure, Adam.
Yeah, I can give one more sort of example in that area. So what we're seeing from some of our customers in the agricultural space is they're trying to help farmers, whether in the U.S. or internationally, farm in more sustainable ways. So use less water, plant more sustainable crops, protect the rainforests. So one way to do that, there's some really interesting things happening with satellite imagery, where anytime you're dependent on the farmer having to record information themselves, there's just, it's a carrot stick issue. There's challenges in terms of accuracy of data and willingness to put this information in the system. Some really interesting things happening with satellite imagery where you can actually see things around water content and see what's happening with rainforests to validate that, okay, there were no trees taken down and things like that. And so where blockchain comes in is even those images need to be trusted, need to be validated. So that can be marked and printed on the blockchain, which is powerful. And then I think even more important than that, they call it sometimes the trough of disillusionment. And what that means is that for a farmer to switch practices from what they're doing today to farming in a more sustainable way, there's a period of time where their crops will produce less yield. They'll make less money. And someone needs to finance, i.e. give them loans to get them through this trough, or else they won't be able to come out the other side. They won't be able to make these investments. And again, I think that's where the blockchain is so powerful, because this data, because it can be trusted, because it can be imprinted, because it's immutable, all the things we all know, it allows insurance companies to come in, or even private individuals who want to invest and who want to sort of, loan money, private or not, to these individuals that say, okay, now that we have data that's verified, that's transparent, we can actually give insurance. And those farmers then can then take that and have sort of this bridge, this loan, this insurance to get through that trough and get out the other side, and then everybody wins. So I think that's just a powerful sort of use case around blockchain as well.
That is a great example. I actually work with a company that's called Arbol that is using blockchain to allow farmers to get insurance through weather derivatives on a micro basis. It's a great way to empower farmers that way.
Exactly.
In terms of our business, we provide a visual trust layer for companies. So what that means is that they can see their supply chain. So that we have an easy way to do a website, so you can actually see, okay, so with this food package, here's the supplier, here's their certifications, their documents that show their certificate, or here's the people involved with it. It's very visual, right? But the issue with that, though, is that, okay, it's visual, I see all this information, but people want to know what's the provenance of this. And the ultimate provenance today, of course, is blockchain. So we put blockchain in because it's not enough to just say, okay, here's, just like with Adam, right? You have all these documents, right? Or these pictures. You want to actually see, well, we want to know that this is definitely immutable. It's got all the properties of blockchain that people expect, and it's just a nice fit for the certification use case.
Can I add another example based on what Ted just shared? Let's take electric vehicles. Without blockchain, what we can't do is give you a guarantee that you're charging your electric vehicle with 100% renewable energy every single time. And that is precisely going to be the next push. We're talking with one of America's globally largest logistics company with car manufacturers that want to be able to sell you an electric vehicle and give you the assurance and potentially be then a moderator of some REC sales. If as a customer you go, oh, I've only hit 78% this time, that's not good enough for me. And blockchain enables that. Without blockchain, that consumer confidence in real time also will not allow you to do what I hope to be able to do within months, right? Which is prefer an Uber driver that also charges their vehicle with 100% renewable and has a 5 green star, not just the blue star, so that is as a consumer, I can make that choice, right? And then to the previous panel, another thing that blockchain is absolutely essential for is this 24/7 carbon neutrality, right? Because in order to really cut greenwash out of our corporate climate targets, we have to really match the RECs and renewable energy directly to the profile and the location. And again, being able to settle that instantaneously and say, yep, I'm a little short. I need some more wind energy or solar energy from my region. Not wait a month and 3 months in a pile of paperwork to try to reconcile those profiles.
Stan, what about you? How are you guys using blockchain and what you're trying to accomplish?
Well, like it's interesting. Like one thing that I fall back on is like if you can measure it, you can manage it, right? And in terms of blockchain, it's pretty much like the immutable nature of the blockchain, trusted sources, verified supply chains that really matters when it comes to consumers and also businesses really trying to build sustainability into their practices. And it's I think in terms of sustainability, like it's such a hard concept because it has so many pieces. And why blockchain? Well, blockchain is, the way I see it, is where the old ways of business are broken. All right, in terms of like our old business models are broken. We see that in terms of climate change. We see it in terms of like, our inability to manage our energy resources when it comes to like, let's give an example, Texas, what it went through this past year. So it's the old consumption patterns are broken. And what blockchain allows you to do is it places a new valuation around other things besides like, profits and margins. It places a valuation behind essentially doing good. That's what we're building right now in terms of recycling. Recycling is doing good for the environment. And if you can measure it, if you can actually record the activity, then there's a valuation around it. So that answer your question in terms of what we do with blockchain?
Yes. One of the things, Elena, that you said that struck me as interesting is that you use the example of picking Uber drivers that have green certifications. One of the common themes I'm hearing is that once we start looking at sustainability and resilience and combining with blockchain, we're creating a different empowerment structure. In other words, we're allowing, I think, individuals to take much more of a role in determining how they want to play in the future with respect to resilience and sustainability, especially on the macro as opposed to micro basis. And I think we're giving them the power to make the types of decisions that in the past many of us would have liked to have done, but we're powerless to do so. And so I'd love to see what you guys think about that. And I don't know, maybe Angela, in kind of the way you guys interface with consumers really at the point of sale, I think creates opportunities for people to make real-time decisions with their pocketbooks on how they want to, who they want to support and who they don't want to support.
No, you're absolutely right. Real-time decisions, but also making sure that the information is accurate, right, as you were just speaking about. We actually, as Stan was speaking, it reminded me of the work that actually we just concluded for the seafood industry. We had some use cases that were obviously being driven around sustainability, right? Where are we catching it or harvesting the product all the way through to the information to the consumer and to the the final path of purchase. And we were testing a bunch of different blockchain solutions for the reason of not everybody's going to be on one platform. There's a lot of value because it's trusted. We can get insights as a business to be proactive and understand what we may need to adjust. Have invoice discrepancies happen very quickly, right? Some of those efficiencies, but more importantly, putting that information in the hands of the consumer and having trust that what you're telling them is right for that purchase decision. And we found that the technology is great and all those benefits can be applied, but Sandra, was what you were saying. The common business practices that we've had for so long don't work anymore. And this idea of digitization is great, but we still have a lot of foundational issues in order to take advantage of some of those digital technologies, right? And looking at blockchain along with some others to be able to drive that outcome.
Yeah, Sandra, that's really an interesting point, because you're right. We can sit here and argue that the old or standard business practices don't work anymore, but if we really want to try to push forward concepts of sustainability and resilience, we're still dealing with a corporate culture where they look at the bottom line. So those of us, in this room and up on this stage may be converts with respect to blockchain, but for all of the businesses out there that are still looking at this going, what the hell is all of this? Can we take what we're doing with blockchain and actually create the type of evidence and platforms in arguments to convince the rest of the world that by incorporating some of the practices that you guys are doing, that we can expand concepts of resilience and sustainability on a much broader basis using blockchain technology and all benefit from it. I know I'm kind of throwing a curveball at you guys, but I kind of like to see what you think about that. How do you take what you're doing and convince everybody else that they should also be following the same type of path that your organizations are already?
Sure. Well, it's about the money, right? I think money speaks, the business case speaks, and what we're seeing is distributed energy resources through blockchain are actually changing the business case on a number of levels. So if you're shifting to an electric vehicle fleet and the payback might be 15 years, blockchain technology and what we're talking about can bring that down to 10 or to under 10. If you're monetizing LCFS credits and doing whatever your location allows, right? Or if you're at least maybe actually offering grid flexibility services, right? If the grid is at stress, they will pay, again, lots of disclaimers here in terms of specific scenarios, but they might pay you up to 10% of what your feed-in tariff would give you to offer that grid flexibility service, right? So if you have an electric vehicle fleet and you are a UPS, a FedEx, you name it, and it's sitting there during the day and you can actually get paid to discharge your batteries and actually make money. That brings payback down, right? If we are talking about an airport saying, okay, we can invest in all of these DERs, we may or may not have sufficient space or whatever. But everybody, you've traveled, some of you here, if you know you're going to park your car for 3-5 days, again, the business case comes in. If I can click on my phone and say, I'm not coming back for 5 days, but just in case I come back early, leave me 20%. For the rest of the time, use my battery, use it as a battery on wheels. And rather than coming back to a parking bill, I come back to some cash in my wallet, right? So when we start talking about these kinds of paybacks is when the business case shifts. And one other example I can give you is a lot of my career has been in commercial real estate, and some of my friends here can relate to that. There are commercial real estate buildings that are having a hard time getting people back into their offices. What if your new business case is, I'm going to give one floor that I'm not going to lease out anyway to a battery bank, and I'm going to do some of these things that we're talking about, right? I'm going to become a grid interactive building. I'm going to I'm going to draw on the grid only when the grid can afford it, rather than how we currently do it. We just turn the light on, whatever we need, and we're completely oblivious to grid constraints. With that, already price signals enabled by blockchain can make this business case stack up. And if you imagine over it a policy overlay, right, where governments, and I'm sure we'll get to that, can actually start creating incentives to say, yes, let's not invest in more power plants. Let's invest in DRs, and let's create these policies for peer-to-peer that enable to get rid of the duck curve and kind of flatten that out. That's when the money really starts to speak. And that's what we're seeing happen both across the real estate sector, electric vehicles, and on.
Adam, yeah, please.
Here, real quick, Ted, and I'll throw it to you. One thing we're talking about is how do we communicate the value, the power to the end consumer? And a couple of great examples here. And, there's great examples, and there's also like a label on a product, and does it mean anything? Do they really know what it means? And is there impact in that? But I think before we even get to the B2C aspect of it, from a B2B perspective, one of the things that we're sort of constantly seeing is just real questions and concerns, and some really great thoughts as well around governance. And how do you even get agreement between the different companies who need to work together to enable all this to become possible? So a couple examples, who pays for the network? Who has the ability to add new partners to the network? Who has the ability to add new suppliers to the network? Who has liability? who can see data versus read-write data. So all these challenges around getting companies to work together to enable all this fantastic goodness before we even get to the customer, we're seeing a lot of companies pause there. And there's a lot of models out there, but no one's really cracked it in a perfect way yet. And a lot of times the answer is, oh, I'm going to bring in a really phenomenal consulting firm, and they're going to work with us. We're going to create this consortium or this foundation, but it's a heavy lift. So I think that's an area where there's also opportunity as well to complement the technology and complement sort of the communication back to the consumer.
Heavy lift because blockchain technology isn't there yet, or heavy lift just because we need to do a much better job in educating people as to how they can use the technology?
Yeah, exactly. I don't think it's a technology issue. I think it's very much of whenever you get, especially large companies, trying to work together, even if the intent is there, even if the objective is fantastic, getting them to agree on these principles, it's just not easy. It takes a lot of time and a lot of great discussion, a lot of great effort, and someone's got to get everyone in a room and decide on these things. And it's just not easy to pull off. But I don't think it's a technical issue.
Okay, Ted, please.
You were saying, how do we make it so we convince others, right? And the language of business is ROI, right? So, for example, in Indonesia, we're working with halal certification auditing agencies, and their budget is $20 a year per supplier, $20 per year. I mean, that's not at a level that most of us would be interested in. But what we did is we just said, okay, if that's your budget, we'll try to think of a solution. And the solution we came up with is not certifying like it is in the US at a package level. It's certifying the supplier, right? And so it's $20 per year. We put a blockchain against the supplier. And again, that visual layer, they have all these pictures of it. So if you see the package, they'll still get a QR code, right? It won't be a single food lot, but it will be at a supplier level, right? So that's one example. Or with the getting the clean energy people, they know that there's an ROI out there, but they don't know how do I get these energy certificates? What's all the 100 steps I need? And there's a barrier there that's actually beyond that. Is you make it simpler for them to say, well, okay, here's what it is, and we can get you a certificate, and here's the ROI on that project after all's said and done on that. So again, it's just being able to make it simpler so that we can sell sector by sector a solution that makes sense, economic sense.
That's a really creative approach. When we talk about blockchain solutions, we know, again, those of us in the space, that a lot of it is software code, open source software. And so sometimes we forget that there are legacy systems and hardware as well. So I know, maybe Angela, this is for you. If we really want to try to really push things forward with respect to sustainability and resilience, do we have integration issues, real world integration issues that are going to stop us that we have to deal with? Because there are hardware components as well.
Yeah, it's a great question. I would say that there is, but building off of some of the comments that Adam stated, technology can respond very quickly, right? The consensus by industry is really the bigger piece. And as being a facilitator of both the public and private sector for these guidance areas, it is a challenge, and we don't move as quick as technology, which is where I think we see some of these proprietary things come to the forefront, which then just draws us apart even further and quite honestly confuses the consumer, right? Because in order to do that app, to check what's that image that's on that product, I need an app for that versus the app that I may use to activate the smart label, right? That some of the CPG industry has endorsed. So I think the challenge that I think we all face is how do we continue to move quickly with understanding that non-competitive set of requirements that enable us to have solution of choice to be able to further digitize to meet the needs of the consumer.
I like the solution of choice. Now we've got 5 minutes left, and I'd like to end the way we started. I'd actually like to just literally go down the row as we started and ask each of you guys to give some closing thoughts as to how your company or your organization is going to change the world. Sorry, that's just another easy softball question for you guys, right?
I guess I'll start.
That's what you get for sitting next to me.
Yeah. The numbers that in terms of plastics, and I'm talking about plastics in the context of recycling blockchains, there's about 400 million tons of plastics being produced every year, and only 9% of that's being recycled. So what can we do about it? What can we do as a society about it? Basically, be more present and in terms of our own consumption and disposal patterns, especially when it comes to plastics. And having that data and being able to measure that is what's going to make an impact. Because ultimately, when you ask Joel, basically in terms of blockchain, how is it relevant, right? And I see relevance in terms of what we're trying to do in terms of creating commercial models around supply chain visibility and trust. And how do you place a valuation around that? But for the consumer side, it's going to be in terms of them, how do you produce products that appeal to basically consumption patterns? And the consumption pattern is going to be around how you make an impact and how do you live your life and make an impact on your daily lives. And so I lost my train of thought. I'm sorry. But basically, it's like in terms of myself and blockchain and what we're trying to accomplish, we're really trying to change people's consumption patterns, daily habits, and really be more focused around our impact on the environment and having that data around recycling and recycling activity and basically non-recycling activity will help us achieve that goal.
Thank you.
All right. I'll separate the how we're going to change the world into two pieces, the developed and the developing world. In the developed world, one of the important things is we need a solution where DRs, distributed energy resources, are not a poisonous chalice. And right now they are in many places to the grid. And we're seeing that in Europe as well. The reverse flows, the congestion, we actually need them to be a solution. But for that, platforms like PowerLedger provide that secret sauce. They smooth out and flatten out and use price signals and self-interest to do that. So in the developed world, it's that, as well as accountability and creating correct incentives for the generation and for the demand to be matched. In the developing world, we have an amazing opportunity to address systemic inequity. We have an amazing opportunity to actually give power back to the people over their energy assets and over their behavior and be able to monetize that, right? So if you're out of work and you would like to be extra energy efficient because then you can sell more of the solar that you're generating on your roof, that is control, giving control back to people for people's lives, right? And on both levels, what is really important in order for projects like what I've described to scale is actually government and regulation and policy. A lot of what I've described has to be done in sandboxes because regulation at the moment does not allow.
We'll get there.
We're good? Okay. So that's kind of how the world, my concluding statement would be, we're ready, electric vehicles are ready for the grid. Technology is ready for the grid. Expertise is ready for the grid. The grid needs to get ready and the policy and the regulatory environment needs to get ready to really take advantage, and then we change the world.
Ted.
Tall order changes the world, right? But blockchain is that technology that can change the world. But what we think we add to it with a visual certification layer is that 64-bit hash doesn't mean much to the average consumer, right? But if you add to it a whole website that shows here's the provenance and here's all the documents and all the visuals around that, it makes it a much easier experience. So as it moves to a mass market, we think that our visual certification layer will add to the blockchain story.
Thank you. Angela.
Well, as an organization that develops the blueprint but doesn't actually develop or enable anything, I would say, our contribution is really making sure that we've got the right industry leaders at the table to more quickly define what those requirements and needs are so that we can leverage blockchain technologies and others that are really helping us to be more sustainable and resilient in our B2B and B2C practices.
Adam, last word.
Yeah, sure. We're very much about enabling these technologies just to be used in a very simple, easy fashion by non-technical users, clicks, no code. And, we try never to use the word blockchain. We try to abstract all the complexity from our customers, and it's just easy. And I think the power of that is then you can focus on the impact. So single source of truth, how do you engage with their customers? What analytics you need? What marketing programs? all the things that sort of business users can leverage to make big impact around all the use cases we're talking about. That's really what we're focusing on enabling and abstracting away all the complexity.
So remember these names and faces. They're making the world a better place for all of us. So thank you all very much for a really fun conversation. I loved it.
Everyone, we've got Congressman Josh Gottheimer right now. He's going to speak for 10 minutes. So if y'all can just stay in the room, get yourself a seat, and I'm just going to do a very quick intro, and he's going to give remarks, and then he's going to have to fly again. So Congressman Josh Gottheimer represents New Jersey's 5th Congressional District and serves on a number of different committees related to cybersecurity, innovation, but the one that I want to highlight is the U.S. House Task Force on Financial Technology, established by the House Committee on Financial Services. And with that, I'm going to just let Congressman Gottheimer run with the 10 minutes that he's got. Thank you.
That is really disruptive. I'm gonna have nightmares about that tonight. Okay. How y'all doing? Good afternoon. Thank you so much for having me. Grateful to be here and grateful to have the time. Sandra, thank you so much for all you do and for your leadership. It really an honor to be here today. I do want to also call out my good friend who I know had to step out for a minute, Dave Treat, who some of you may know, who I went to college with, who really started talking to me about this space and the importance of our involvement from the government side years ago. So it's glad to be here at the 4th annual Blockchain Central to highlight the ongoing innovation in the blockchain and fintech space. Just so you know who I am, I'm Josh Gottheimer. I represent the northern part of New Jersey. So if any of you have been to New Jersey, it's literally the top of the state. If you go over the GW Bridge, you're about in my district. And so it's good to be here and close by. I serve on both the House Financial Services and the House Homeland Security committees. I also co-chair a group called the Problem Solvers Caucus, which is a group of 29 Democrats and 29 Republicans who, believe it or not, get together every week with one purpose, which is to actually figure out where we can get along and where we can agree and where we can govern, not where we can tweet and scream at each other, but actually try to figure things out, which I know you're very focused on as well. I do want to take you through where we are in Congress in the fintech and cryptocurrency space, where I believe we're headed, and how you all can play a role in helping us get there. Cryptocurrencies and blockchain may be new when we compare it to the life of the banking system here in the United States, but as you all know, Bitcoin is now about a dozen years old, and the industry as a whole is maturing. Since then, we've seen the value of various cryptocurrencies skyrocket. We've also seen amazing innovators create incredible uses for this new way of thinking about currencies and assets using cutting edge technology. Earlier this year, the oldest bank in the country, the Bank of New York Mellon, said they would hold, transfer, and issue Bitcoin and other cryptocurrencies on behalf of its asset management clients. I think that was a very big breakthrough, because to me, this means that cryptocurrencies will be using the same financial plumbing that more traditional holdings, from treasuries to technology stocks, has been using for more than a century. Digital assets are becoming part of the mainstream. The last thing I want is for innovation fintech to be stifled in any way in the United States of America, while companies in other countries are able to innovate and create the latest financial products. This is an area where we should and need to lead in the United States. As you may know, I've been honored to serve, as was just mentioned, Sandra mentioned, on the House Financial Services FinTech Task Force since it was first formed in 2019. Now, just so you know, on a committee in Congress, we have, I don't know if you're getting bad feedback, but I don't know what to do about that. Can you hear me okay? Okay. We have committees, and then we have subcommittees, and then we have that are traditional subcommittees that have been around for some time. And then if we need to get sort of a strike team together around an issue, we put a task force together, which is what the chairwoman of Financial Services has developed with this task force, with a goal of understanding what do we need to be doing from a government perspective that we're not doing right now. Coming back with recommendations both on a legislative side, policy side. We oversee on our committee the SEC and other financial regulatory agencies, obviously working closely with the Fed, CFTC, and others. In recent years, we've focused on examining fintech's innovations, including marketplace lending, cryptocurrency, and mobile payments. The Financial Services Committee unanimously reauthorized the FinTech Task Force earlier this year, and we've got Democrats and Republicans who serve on that task force. There's little doubt that growth in fintech has accelerated since the start of COVID-19 pandemic, and we've seen fintech step up to help our struggling communities. During the beginning stages of the COVID relief, the Small Business Administration authorized internet-based fintech lenders to participate, and they were quickly able to utilize their underwriting technologies to swiftly get money out the door to needy small businesses. I think that was very helpful during the height of the pandemic when we were trying to help businesses survive. Multiple fintechs were able to help hundreds of thousands of Americans nationwide at a quicker pace than many banks that have been household names for generations. It was that cutting edge innovation that was able to get those dollars out the door faster to help people. It's clear that fintech is obviously becoming more relevant and important every week. With narrow majorities in both chambers in Congress, fintech will be a place where we can see early, straightforward, bipartisan wins, where both sides can easily recognize what's necessary to fuel innovation in a rapidly growing sector. We're also keeping a watchful eye on financial inclusion, making sure that our underbanked communities have an opportunity to better participate in our economy through banking services, and we know that this is a place where fintech also thrives. In Congress, what I'm actively working on is to provide regulatory clarity for emerging fintechs, particularly those on digital assets. So with the cryptocurrency space in general and fintech broader, I think there's a real desire, what I'm hearing from a lot of you who visit with me and with other colleagues, is pretty consistent, that you actually would like some more clarity. You would, and instead of less clarity, that the opacity is actually driving companies to establish themselves outside of the United States. And I think we need to create an environment that encourages technologies to start here, grow here, and create U.S. jobs rather than setting up shop overseas. I've personally heard from several companies that they've been instructed to set up shops in countries like Singapore and Switzerland, Bermuda, and beyond to avoid the lack of certainty we have in the United States when it comes to digital assets. And it's that uncertainty and the fact that we aren't providing that kind of guidance that really concerns me. It's why I've partnered with Warren Davison, who's a Republican congressman, on legislation that would help provide this much needed clarity, the Token Taxonomy Act. This bill would provide certainty for businesses and entrepreneurs and regulators in the American blockchain economy by providing needed blockchain statutory definitions and codifying oversight authority. I'm also working on another new bill to better define how regulators address stablecoins. So I'm working on that right now. I'm also pushing for us to invest in our digital broadband infrastructure. Reliable access and accessible broadband is certainly not a luxury in the 21st century. And without having that core capabilities in our communities around the United States, I hope that's not bad. That's just your cell phone. Did you hear that all day long? Doesn't that scare you? Did you hear that? Oh, it's a weather alert. Okay, well, hopefully everything's okay with what we've just been through. And I was just saying that I don't think it's a luxury, broadband, in this day and age. It's a requirement to be economically successful, not to mention a requirement to be able to participate in blockchain and cryptocurrency technologies. For blockchain technologies to actually live up to their inclusionary potential, broadband must be universally accessible. Right now, many towns that I actually represent in northern New Jersey, the top of the state, more rural communities, either don't have broadband at all, or they have such slow speeds, including dial-up level speeds, that they don't have reliable access to the internet. This is just a few miles from here, believe it or not. That's why it's so important that we get this bipartisan infrastructure bill, which you might have heard about in the news. We've got a deadline of September 27th, the physical infrastructure, which includes connectivity, and broadband connectivity is part of infrastructure, as well as things like electric vehicles and fixing our roads, our bridges, our tunnels, our water infrastructure. It's very important we get that across the finish line, because we need to start making robust investments in broadband infrastructure to connect those communities that are still left behind. And by the way, during the pandemic, we saw how much of a vulnerability this is for families with some children that need to study, to be able to visit with a doctor, or of course for small businesses in these communities, which suddenly had to move fully online. So you're asking yourself, with all of these updates and changes to our world, especially in the evolving industry, in this evolving industry, and given the rapid expansion of blockchain and cryptocurrencies, what can you do, right? I mean, if I left here and didn't ask something of you to do, well, obviously that would be a failure on my part. How can you help us, the lawmakers, grapple with these complex issues? Education and outreach remains hypercritical, very, very important. I count myself among a handful of legislators who are engaged and willing to work to understand these technologies. They're complicated. I mean, I know you all think it's easy, but if you're not involved in the space with how much it's evolving every single week, and I worked at Microsoft before I was in Congress. That was what I did immediately before, and worked on the cloud. And so I feel that I'm decently proficient. But you spend a couple years away and things move fast. I mean, that's what's so exciting about your space and about technology writ large. So we need to make sure that we do everything we can to educate members of Congress who may be less steeped in this. And Congress will soon have to accelerate its legislative actions within this space. It's inevitable. And as was demonstrated by my old friend Gary Gensler when he spoke just this week about more aggressive SEC oversight in cryptocurrency, these conversations are happening right now. Right, so I know Gary's thinking about them, Chairman Gensler's thinking about them, and others are. But the question is, what's the right way? And you are the ones best suited to actually help us. So when you come to Washington, or get on the phone with a member of Congress, or get on a Zoom with a member of Congress, it actually makes a huge difference. It helps us when you educate us about what we need to be smart on, what you see coming, what you actually need from us to provide that clarity that I was talking about. And frankly, to make sure that cryptocurrencies and blockchains continue to serve as the innovative drivers of growth they have in the past. The key to ensuring that members are well informed is for you, frankly, to talk to us, and the Global Blockchain Business Council has the opportunity, frankly, to serve as a leading voice in helping shape our future. And I look forward to working with you to help do that, right? Consider me a resource. Consider me someone who wants to help open that door to other members and to legislators and policymakers who need to help us make these decisions. So that's really what I wanted to communicate with you about, to say thank you. Thank you for taking the time to care, not just about what you're doing in your own businesses, in your own space, but frankly, about policy and the larger concerns we have as a country and the world, that we do this right, we do this in a smart way, that we build better solutions for our country and for the future of innovation. I know with leaders like you, our best days will always be ahead of us. I mean, I am biased. I think we live in the greatest country in the world, but I know that it takes hard work to keep up with that. And I know you're up to the task of helping us continue to lead. So thank you so much for having me and letting me stop by. And God bless. Thanks. And now you can take that life-size picture down. Sure. Okay. Thanks. That was my first term, by the way. And man, do I look like shit now. Okay, I'll see you guys.
So that actually concludes the first half of the day, and we will have lunch just outside of these doors. So thank you so much for sticking with us.
You can put videos and
They have like
whatever you want.
you know, Thanks. Exactly. But, and then I believe that the end mainnet is Bitcoin. But if you listen to Laura Shin on the podcast, it's really good. I'd recommend it.
Yeah. What else?
I think it's called Unchained podcast. She was editor of Forbes, and now she has her own podcast and media. Oregon, she's really good because she brings on really knowledgeable people. This one was the one that kind of changed my mind on Bitcoin. To be honest, yeah, so I studied what you could deem to be AI, but it was really me choosing what classes I wanted to choose within this new emerging major, which is cognitive science. So I was more interested on how we could understand the brain to better build like artificial systems. But it was kind of nice because I got to pick a lot of my classes, and then I applied it to like performance marketing or quantitative marketing. Can Bitcoin be secured only by transactions? Oh, you have an iPhone? I can text you this.
You know what?
Your number and then I'll send you the. So, an interesting thing about Bitcoin is that the inflation, you're probably familiar with it, halves every 4 years, the inflation schedule.
Right.
So eventually, maybe even a few decades, you're going to have like pretty much 0% inflation. But that inflation, those block rewards, is what keeps miners. Quantum. Yeah. I'll send you your website.
We got to a point where please do sit down. Finish my.
Is that?
How did I go up there? I just walked. I had like how to feel. So
How was it? Yeah, it's fine. I mean, it was a little bit, doing
founders,
resilience was
one of
not
them
really
is from Israel, another one is
any of us
from
was expecting. Really.
Russia,
But
Moscow. They've been in the space for a while since
fun.
like
How'd you enjoy it from here?
2015. They were contributors to Lisp and ARC, which is like a more regional Ethereum competitor. They're also one of them worked at.
When you do ESG,
one of the
are
mining companies
you're
or
more
chip manufacturers that
working
got
mostly
acquired
with
by
big companies
blockchain.
trying to reduce their footprint.
And they've been working on this Move virtual machine, which is like the technology that Facebook created for the past 2 years. Maybe because Facebook pulled back on, or like has been so hesitant on launching, not many other companies have been still developing and keeping up with Move. So we kind of have that advantage. Now I think that because they're moving back into the US, even though it's a scaled back project, they're actually going to be able to launch hopefully relatively soon. And then we hope to be the sort of like the de facto standard.
Is it an
for
organization
launching
that's mostly for green investing?
Kind of like the test flight.
I mean, you work for an organization
Because unless you're like a Coinbase or a very large company, you have resources.
Do you travel into New York?
processes and regulatory structures that just launch directly. You're probably going to need to test the technology, start testing integrations with like KYC, like compliant KYC AML providers, etc. We can abstract away a lot of like applications. And then the end goal, and this is more aspirational, but let's say that Facebook does become somewhat like the de facto standard for infrastructure. We provide a decentralized alternative.
Do you have a format then for how you want
maybe some more innovative products
to look like? First,
might not be
executive summary,
able to launch at financials, very high fast trade, or even like kind of no regulatory framework exists yet for these products. Because we're in a permissionless environment, we'll be able to test those. Maybe after you get validation there, then you can use
You couldn't stand the whole time. Like, don't they come to you with the drinks and everything? They're like, no, you couldn't.
I think most of the gains will be in payments and having like a medium of exchange. I think that's ideal, like a stable coin.
But you know, it sounds perfect because
I think the next
I think I was
step
telling you we have this live PDF.
more complex
PDF
uses of crypto, like NFTs. Like you can
Basically,
imagine being able to put your
one view of the
game items from Farm Bill to
but instead of pictures,
so if you create standards across like data standards across these items,
and then we
all the time you spend on that Fortnite skin, you can now also take it to your
yeah, it's Kenja.com. But
and I think it'll probably exist. And the thing is, like Facebook, will probably want most of it slow.
Hi, everyone. Thank you for joining us, whether you're in person or virtual. We're going to resume our first session after lunch on decarbonizing crypto. Thank you so much. I hope you enjoy.
Can you hear me okay? Excellent, excellent. My apologies for the mask. I'm going to stay masked during this time. As long as you can hear me okay, I'll make sure that I keep the microphone close to my mouth. But welcome all, and very glad to be here today. My name is David Eric. I am the executive director of a nonprofit organization called the Alliance for Innovative Regulation. And what we do is work with regulators to help them understand technology. We try to help them enhance their understanding of technology, both from the perspective of how to regulate new technologies, and also from the perspective of how to take new technologies and integrate it into the way that they actually do regulation. So today we have an incredible opportunity to explore this issue around the decarbonization of cryptocurrency. We have three guests with us today who I'd like to introduce. First of all, we have Tanya Woods, who is the General Counsel, Corporate Secretary, and the Head of Regulatory Affairs at Hut 8 Mining Company. And Tanya, do you want to take a minute and introduce yourself?
That was pretty good. I've been active in the crypto space for a very long time and equally active and passionate about the SDGs. So I'm very excited to share a little bit about Hut 8 with everybody here. Hut 8 is a public company that trades on the NASDAQ and TSX. And yeah, we're pretty active in this discussion.
Excellent. And next we have Doug Miller, who is the Global Markets Lead at Energy Web. And Doug, do you want to take a minute and introduce yourself and Energy Web?
Sure. Well, it's a real pleasure to be here today. First in-person event in a long time. So at Energy Web, my role at Global Markets Lead is to really help us to find new opportunities to support the clean energy transition, because at Energy Web, we're a nonprofit, and the core of our focus is how do we make the transition to clean energy systems easier and faster with decentralized technologies. And so what we essentially do is build open source technologies supporting the energy transition. At the end of the day, how do we assign digital identities to every energy device and every customer so you can plug and play into any clean energy app and make it easier for electric grid operators to make the transition happen. And it's a real pleasure. I'm looking forward to the conversation today.
And our third panelist today is Emma Wood, Managing Partner of MMH Data Systems. Excuse me, Emma Todd. My apologies.
I was thinking Tanya and I. They've merged us, Tanya. So welcome everybody. I'm so excited to be here. I am a board member for tokens.com, and I'm pretty happy with this corporation. What it does an energy efficient way of mining. So in terms, you have proof of work and you've got proof of stake, and tokens.com chose proof of stake, which means that it takes about 100,000 transactions. You can do that per second compared to 15 transactions per second for Bitcoin mining. So it's very energy efficient, a lot better. And I'm also the CEO of MMH Data Systems, and we do mining, and we're looking to make that one also more energy efficient. Thank you, guys.
Excellent. And I think all of you have been following the press. I think in the middle of the dog days of August, when there was a bill in front of the Senate, which was really about roads and bridges and tunnels, suddenly cryptocurrency, taxing cryptocurrency, proof of stake, proof of work was on the front page of the New York Times. It was really quite an extraordinary moment. And for those of us who were following that weekend, it was, the flurry of amendments that went by were absolutely stunning. But Emma, why don't you start us off and give us an overview of what the big news is? What's going on with decarbonization here? Why is this a big issue?
Well, I'm sure everybody knows the big question is, Bitcoin, is it energy efficient? What's going on with it? And the narrative has been that it really isn't, and that we really need to do more. And if you've been in the space for a while or even done, some reading, you do know that it is for the most part energy efficient. But as with everything, there are definitely some opportunities. So I'm not going to kid you. I was so excited for this panel because I kept saying, Doug is going to be my new best friend. I have so many questions for him. But, one of the things that people don't realize is that Bitcoin mining for the best, for better or for worse. There are different statistics on exactly how energy efficient it is. And one report says 53%, another one says 75% of it uses renewables. But definitely, one says 39. And that is still, I think, double what the US grid is. But it doesn't really matter about that. What is important is that we're trying to make it as close to 100% renewable as possible, because we need to leave a better world for, our kids and our grandkids. And so I'm very excited to be here to talk a little bit more about that.
And so, Doug, I wonder if you could give us an idea of what are some of the developments that we're seeing in the decarbonization of crypto.
Sure. Well, I think first from Energy Web Shoes as a nonprofit that works both in energy and in crypto, a few months ago, we started thinking more about this issue because obviously it was picking up in the press this past winter and spring. And for us, we know that we have to, as an industry, address the energy topic. Even if you do, in fact, have an energy efficient chain like the Energy Web chain or others that we're talking about, we have to address this issue, or else we're all going to be lumped in together, because the energy spend of crypto is one thing that regulators and others understand. And so from our perspective, we wanted to change the conversation, flip it on its head to say, we know that the energy system is changing. We know that more and more companies want to buy renewable energy. Let's turn the crypto sector into a large, powerful new source of demand for renewables, and in the process, develop some awesome new technologies using decentralized technologies to deliver verification or proof of green crypto. And so just the way we think about the energy topic is there is obviously a range of numbers of how much energy the crypto sector uses every year. At the end of the day, if we convert all of it to renewables, we can more or less increase the global renewable energy market by roughly 10% if we're successful. And so that's the way we want to think about the opportunity. Let's verify that we're sourcing from renewables and grow the market.
And there's another really critical issue here, which is, most industries around the world are trying to figure out how to decarbonize. And some of those industries are extremely carbon intense, much more so than crypto. But if we are successful in decarbonizing the crypto markets, you actually have an opportunity to use that as a roadmap for other industries as well. And that's something that the regulators and people on Capitol Hill are very interested in learning about. But so Tanya, let's turn to you for a second. How is your company thinking about decarbonization? How are you guys approaching this problem?
I think we're one of the only miners on the planet with a head of sustainability. So it's near and dear to our hearts. Our miners, we're Bitcoin miners, and they're based in Alberta, Canada. And Alberta, as a province, has committed to a fully renewable grid by 2023. So it's just around the corner. We're long in Alberta, so we have a 10-year commitment in the province. And we benefit having mobile miners. So our equipment is outside. We benefit from the natural elements in Canada, which is generally cooler than a lot of other places in the world. So yay for us on that one. But
isn't the North Pole in Canada?
This room is the North Pole today.
This room is the North Pole. Oh my gosh, so cool.
No, but actually we think about it, in a top-down kind of way as well as a bottom-up way. And so we're looking at our operations, even at the most small level, of how we can make everything we do more energy efficient, climate friendly, neutral, decarbonize, et cetera. I'll tell you a little bit more about that a little later. But, for us, there's so many aspects being a public company and engaged in Bitcoin mining, and with the world very clearly positioned in our country as well, being climate leaders and showing our innovation and taking the care and making it very transparent how we do so, that there's many ways we are thinking about this.
Well, and it is interesting that the panel here today, we have two representatives from industry, and they're both from Canada, right? So this is a great opportunity for the U.S. the U.S. operators to step up. We would love to be able to feature you here on the panel as well. I'm thinking that there are a number of difficulties in actually measuring decarbonization, and this isn't specific to cryptocurrency, right? I mean, the system that we currently have in place for measuring both decarbonization and also measuring the use of alternative energy is often very difficult to quantify. And Doug, I know that that's something that you've spent a lot of time on. I wonder if you could help us there.
Yeah, absolutely. So first and foremost, earlier this year, Energy Web launched with the Alliance for Innovative Regulation, where David sits along with Rocky Mountain Institute, or RMI, a clean energy nonprofit, a new private sector-led initiative called the Crypto Climate Accord. And so this is a decentralized initiative. Everybody's welcome who wants to be a part of the solution to decarbonize the crypto sector and remove this point of criticism around the energy consumption of the space. In other words, let's as a sector transition as much of it as possible to renewables, prove it, develop some new technologies that then others can use to do the same in other industries. And in terms of thinking about how to evaluate the energy impacts, we think about it on both sides of the market, meaning the supply of crypto. So where you, Tanya, said in terms of supplying the crypto, mining it is one way to think about the energy consumption. Then one is on the exchange and investor side, those who are interacting with the crypto. And so for us, we know we're not going to make 100% progress over the next year or two on one or other side. So we're engaging with mining companies as well as crypto exchanges, where our goal is to help crypto miners figure out what is your energy use, how do you match that with a verified renewable energy purchase through whatever options are available in your country, which is a bit more straightforward than the latter group. So with then exchanges and investors, it's, okay, based on the crypto you hold, which might be many, some of which is there might not be great energy information available. Let's come up with a good enough estimate that you're comfortable with. Take that, procure renewable energy so that you as an exchange or an investor can say, all of the crypto that we hold is sourced from an equal amount of renewable energy purchasing or a carbon offset. Where at the end of the day, you're not changing the cryptocurrency itself, but linking the energies associated with it with renewable purchase. And then, yeah, I'll stop there.
Emma. So I have a question for you, Doug. Sure. So does this mean that if you have an organization, they're a crypto mining organization, and they're now, let's just say they're using natural gas or even the dreaded coal, but they're looking for a way to kind of get to being renewable, can they buy carbon offsets just to make it a little bit better until they get to their goal?
So at the end of the day, it depends what type of claim or story you want to tell. So everything we're talking about here today is a voluntary renewable energy purchase. We're trying to essentially provide a stopgap measure to, while we're waiting for regulation to be implemented and to achieve Paris from that route. And so everything we're talking about is voluntary. So it depends. Do you want to say that your mining operation is carbon neutral? In which case you could buy offsets or you could buy renewable power. If you wanted to say that your mining operation is 100% renewably powered, then you have to go fully the renewable energy route. And there's no right or wrong way. If every industry in the world did this already, we would be in a way better spot. And the urgency of the meetings this week in New York and in Glasgow and about later this fall wouldn't be so urgent.
And so we're charting a path that's very obvious for miners. But Doug, are there other non-miner opportunities as well?
Yeah. Well, I can walk through. First, let me just walk through a miner opportunity. So this past week, we had the first showcase of a miner, not in Bitcoin. So for those who are familiar with Filecoin, it's a decentralized storage. We've been working with Protocol Labs and R&D Lab to help them connect a tool they're building so that miners can evaluate their energy use in that network. Run a search on a public search engine we're building of verified renewable energy certificates, link that then with the Filecoin reputation system for a new criterion they created for renewable energy purchased, essentially using blockchain to prove you bought renewable energy that was issued on chain from the grid operator, and using that to boost your reputation. So that's one exciting opportunity. But then in terms of, then the other side of the market, there are a couple of exchanges who were part of the Crypto Climate Accord that are doing the hard part. The hardest part now is figuring out the math while we're developing methodologies. This is some work that RMI is leading, our Rocky Mountain Institute. But while we're waiting for the guidance on how exactly to measure the energy use, a couple of crypto exchanges are working to figure out, okay, based on A, B, and C tokens I hold, the amount of crypto transactions that are happening, here is an estimate of the energy use, and being transparent about the methodology because it's not going to be perfect, and then working to make a renewable energy purchase or an offset purchase. So I see that as an exciting opportunity right now.
And Tanya, did you want to weigh in?
For public companies, we have ESG that we're looking at. ESG, of course, is incredibly compelling right now. The interest from investors and funds is increasing. We heard about that earlier today. So when we look at ESG, we're looking at a whole new set of metrics in addition to just trying to measure our footprint. We're also looking at, are we going to follow SASB metrics, on the benchmark metrics, GRI metrics? There's so many metrics. I'm hopeful that securities regulators will actually weigh in, as well as government, to guide us a little bit more on which metrics they actually want us to use, and give us a little bit more feedback there. But the markets will respond as we all move in that direction, along with our public company friends.
Just to add on that, I'm being based in Washington, D.C. It's I think everybody down there knows you need industry examples to help move regulation forward and to guide regulation. And so we think there's a huge opportunity for the crypto sector, again, to lead. Let's use the technologies we're developing to deliver better renewable energy and carbon products to verify that you are complying with ESG guidance and reporting protocols. And essentially, again, this idea of flipping the whole conversation on its head, let's remove the point of criticism for the crypto sector. And at the end of the day, we can encourage other sectors to follow this guidance, use blockchain-based technologies to deliver your ESG compliance.
Yeah, I like that. Oh, sorry, Emma. I like that point. I just want to chime in. As a Bitcoin miner, we have all kinds of perceived ideas that are some positive, some negative. It just depends on whose ideas they are. But the reality at the end of the day is we're all being challenged collectively to innovate forward. And I think that's the most exciting part, even for us, despite all of the criticism. What other sectors working harder to prove that it's making an effort with technology and innovation to actually improve our planet? There's not that many, and we're having to do it at lightning speed.
You're absolutely right, Tanya, especially with the fact when you consider that Bitcoin mining only accounts to 0.39 of all the energy used in the world, and yet we're being asked to justify all this stuff. And we're really doing our best to show that we are trying to be good global citizens, and we really do believe in ESGs, and that we're doing our best to, really come up with renewable. In the past 6 months, my mind has absolutely been blown by all the different things that you can do. First, I'm Canadian, so we know about hydro, and now I know about nuclear and hydrogen and all these different things that are available, because we're really looking at all different opportunities that are out there in order to do the best that we possibly can. Because what we've also seen is that companies that are making an effort to go renewable, their stock goes up and people are happier, and you're happier when you go home at night, because you know that you're doing the best that you possibly can for yourself and your future. So we really are trying very hard in terms of renewables.
And we do want to encourage questions from the audience, and I see there's a hand raised in the back.
Yeah, I want to make 2 points. The reason why everyone's come down so heavily on crypto mining is because up until recently, very recently, 70 or 80% of all Bitcoin was mined in China from coal. And that's all gone away. So the whole dialogue.
That's actually not accurate. It was mostly from hydro from water in the Shenzhen province.
You say a large part of it was from coal, and that's all gone away.
That's actually not accurate. It's mostly hydro.
Okay, anyway, I have a hydrogen solution for you, and it would be zero or very low cost. And I'm talking about lower cost than any hydrogen solution you've ever heard. And the name of the company is Liquid Dynamics. And I encourage you to see me afterwards. I don't want to take up everyone's time on it.
Great, thank you. Thank you. And one of the things that's also interesting here is the different dynamics at play between the geopolitical issues, right? When you've got what's happening in China, as was just described, the fact that those mining operations are rapidly moving to other locations, most predominantly in Canada and in the US, it does pose a whole new set of challenges for us, because we have to figure out how to fit that into our regulatory structure, right? Suddenly you have coal operating plants in the US that are coming back online in order to drive Bitcoin mining. And there's a lot of concern about that from the regulatory agencies. Should they allow that? Should they not allow that? And Doug, as you've pointed out, this is particularly challenging, because in what other industries do they actually take moves like that?
Yeah, and again, this is why I think there's a great opportunity for leadership in this space. I think if we ultimately can show that the crypto sector is procuring renewable energy This will help reduce regulatory pressure because it's a sign that you're willing to help support a whole range of different objectives that a government has. And just taking a step back, what we're talking about again, I'm going to bring up again this notion of this is a voluntary effort. When as more and more crypto companies, whether you're a miner or an exchange, procures renewable energy, what you're essentially doing is providing a private sector-led subsidy or feed-in tariff to support more renewable energy development. And so just in contrast, this geopolitical consideration, were we to go extreme and stop the deployment of these technologies, we might hinder the deployment of private capital, again, that complements public money being put into renewable energy systems. We have major corporations around the world buying renewable energy, Nike, Johnson & Johnson, Apple, Microsoft, et cetera, buying renewables. We want to bring the crypto sector into the space and bring new tools forward while doing it. And we don't want to shut that off too soon. And also we want to make sure to bring in the private money to help support the renewables development.
I also will let you know that a lot of large organizations, and I'm so happy to see this, they have an ESG mandate. They're really trying to make sure that they only go renewable, and they started that in May. So it's been really great to see that. One example is Core Scientific. They have that mandate, and so anything that you approach them with, it definitely has to be renewable in some way, shape, or form.
And I think for the two of you who represent industry here, what are some of the challenges and the barriers to adoption of some of these new ideas?
I mean, in our case, challenges and barriers, I would say there's more realities. When we procure energy, there's generally longer contracts. So you have a set of contracts, you need to be patient. As I shared earlier, Alberta's committed to being a fully renewable grid by 2023, but we're also committed to Alberta for 10 years. So we have to understand that they're going to innovate and grow, and we're going to be patient and do that with them. Some of the other things, there's a lot of hype when we talk about buying credits. There's verified credits and unverified credits, and there's the public perception of buying credits. Is that enough? I mean, it sounds like a Band-Aid for a lot of people. What more should we be doing from an inside perspective, not just an externally focused one? So it's constantly laying out and considering the pros and cons or the opportunities and the costs to actually taking steps, and whether they're big or small. I mean, we're considering all of it actively all the time. But there's a fair amount to consider. It's not just a simple straight line path to a solution.
That's for sure. It's never a straight line path, right? Emma?
One of the challenges I see is that everybody wants to go renewable, but they only want it from first world countries. So we have some countries that, you can get renewable solutions. They're not in North America, but everybody wants they want what they want. They want it now, and they only want it in first world countries. So it's been a bit of challenging trying to get that. And so we're looking at other solutions that are out there, but guess what? They're more costly. I love solar. It's great. And in certain areas like, New Mexico and Texas, it's nice and sunny, and you can use batteries to offset, when the sun goes down. But guess what? It's expensive. But I believe 2 weeks ago, the current administration came out with a mandate that they're trying to go from 4% solar to, I think, 45% by 2035. Now, solar's expensive. Those lovely panels, they cost money. So they're really trying to do things like give credits for that, I think 40%, but you still have everything else. So I love that people are looking at solutions and really trying to work on them, but we have quite a ways to go.
Just to round out, in my nonprofit shoes, in terms of challenges that we're experiencing, I'd say one is also just education, in the sense that the crypto sector has been the one that's been most eager to work with us to find ways to buy renewables, but there is a learning curve. For example, and it's understandable because these markets were not designed to be easily understandable. If you move to a state in the US or a province of Canada that has X% renewable power, let's say it's 30%, a company thinks that they have to buy 70% renewable energy to cover a gap. But with the way voluntary renewable energy works is you have to buy 100% of your usage. And so it's points like that we have to walk through to show, just, again, figuring out the number of renewable energy you need to buy. So I think this is a really, it's an important effort to educate the sector, but we also see it as one where there's a lot of eagerness. People want to be in the sector, want to be part of the solution.
My apologies. Another question from the audience.
Representing those miners. How much support do you get from the Canadian government, or is it really just self-initiative that you guys do as a company? I'm just curious.
I can say from our side, we're really asking government right now. In fact, we posted an open letter yesterday. There's an election going on in Canada on Monday. And I've been part of efforts asking the government for years to talk to us, to talk to industry, to have a dialogue. A lot of the innovation programs are outdated, frankly. The funding does exist for defense. It exists for other areas of the economy, other areas of innovation. But there isn't a lot of funding pots available for us for what we do. So we've actually specifically set out asks saying, look, we have an opportunity to lead. The world's looking at us right now. Let's do something together. And I'm hopeful that there will, following the election, there'll be effort in that direction. We also have provincial and federal government considerations that we're always thinking of. The province of Alberta has been very supportive, but federally we'd like to see more.
Alberta is very supportive, and I think they're mostly oil and gas, but they're very supportive of the crypto industry. New Brunswick is also supportive, but we could use the help, and we definitely, I'm going to try and, there'll be something that's going to come out in the next few weeks. We're going to try and see what we can do from a mining perspective and how we can definitely help the government to get to where it needs to be. But it definitely is a massive work in progress. And Tanya, you're absolutely correct. You've been trying for years to kind of get the government to. That's why I let her lead that one off, because I know it's a bit of a subject with you, my friend. But she's been trying for years to kind of get the government to pay attention. But something, we're stubborn. We're going to keep trying.
Something I've noticed too that's kind of interesting in terms of the politics of the crypto and climate space is that there's usually one camp that's on the side of pro-climate, anti-crypto, or pro-crypto, anti-climate. And it's really interesting because in some, we hope to kind of connect some dots for folks to show that if you care about climate, crypto can be part of the solution and vice versa. If you care about crypto, you need to come up with a solution for the energy challenge. And at the end of the day, again, the efforts that both Tanya and Emma are talking about come from a voluntary perspective, again, to support policy action that's happening. And this also comes down to who, from our shoes, who pays for the renewable energy and the offsets. And for us, there's no clear group. I mean, theoretically, miners probably, because you're the ones that are getting the biggest, value from the crypto space. But at the same time, for exchanges and investors, if you want to say that you're an ESG investment group, you better make sure, and you might want to, even if you overbuy renewables, do that. If you're maintaining a blockchain network like Energy Web Foundation or say the XRP Ledger Foundation, we both respectively bought renewable energy last year to cover our entire network. Took an estimate of all the nodes. We said, let's address this, let's do it. And then there's a question, if you do have an exchange, do you charge the consumer to buy the offsets, the renewable energy, or do you cover it for them to attract new consumers? It really, there's a lot of open questions and it's not settled yet, but this is the type of conversation we hope to hash out over the next 6 to 12 months. And again, in the crypto space, we're talking about months, not 6 to 10 years, which is another exciting part of this field.
I do want to add in though that, of course, as companies, we have a public company, we take responsibility in a variety of different ways. But as a public company, we also have strength. It's a secret superpower we have with regards to our supply chain. And so we can apply pressure to our suppliers to say, okay, what are you doing? And, do you have a program? Do you have benefit that you can pass along to us because we're partnering together? And so we do that. And I'm very glad we do that. And as a crypto ecosystem, it's global. As a community, we actually all have a responsibility, frankly. I don't think we can point finger and say, it's your job, it's not mine. No, I think we all have a responsibility. So I hope to see that happen more.
Absolutely. And if we bring all these technologies together, you have a proof on chain that a mining facility or your suppliers are green. That helps the whole industry move forward. And again, this isn't unique. Supply chains are relevant for every industry.
Absolutely. And we have a few minutes left, so I wanted to encourage any additional questions. Yes, in the back of the room.
Do you think there might be a risk of enacting legislation coupled with the immutability of crypto that you might get rid of the fungibility of some of these cryptos? Like, for example, if some Bitcoin is mined with clean energy and some Bitcoin doesn't follow the rules, then maybe there could be two separate markets.
Sandra, do I have to repeat the question?
I think so. Oh, yeah.
I mean, for the people who are streaming, yeah. Let me see if I can summarize that quickly. Is there an opportunity to address perhaps the different ways in which different crypto addresses their decarbonization efforts? So perhaps you could have a market for decarbonized crypto and a separate market for crypto that's not decarbonized.
Yeah, and I'll go quickly and then hand this over to Doug. Will we eventually start to look at our crypto with criticism at some point? Will we start to ask more questions about, did my Bitcoin come from the right place? Is my Bitcoin more valuable because it came from a clean energy grid? Is it more valuable because I know all the depths of the provenance of that coin? Is it more valuable because? I think at some point we will probably see the differentiation happen, and especially as we're able to verify the differentiation between coins and between sources and so on. So that's my best guess, a personal guess. So it's not the guess of the company, of course, but I do think we will.
And just to build on that, again, I think if regulation is targeting specifically the crypto sector, maybe that would be the direction. But I see this as, a Bitcoin or any other cryptocurrency. If you think of it like a physical an asset, it's just like in other spaces. There are some that go green, some that don't, and ultimately you choose between the different companies that are providing it. And this is where, in terms of near-term opportunities, we see different Bitcoin mining companies, for example, establishing green pools. And so in this case, you're not changing the actual token, but you're changing who you might buy it from, because you have that direct link to a group that has been vetted. And again, this is where we see blockchain being helpful to prove and manage the green mining pools. Let's use this technology to verify and don't trust that a group is in fact green.
And it's a very interesting structural question. It's the same kind of input that you could see potentially, say, for financial crime. Do you have, markets of dirty Bitcoin and clean Bitcoin that could be from, a variety of different sources? I'm sorry, Anne.
Yeah, no, I was going to say that what Doug was saying, you actually do see people saying, I will purchase this because I know it's green. I can see where it's coming from. I know it's not coal. And they want to be happy with what they're doing. In fact, some people go so far as they trying to do their own mining because they want virgin coins that they know they can absolutely guarantee where it's come from. So that was a very good question. And the answer is, I think sooner or later, you're going to start to see maybe a little bit more, perhaps like some standards. There's some people saying, this is what we've done, and people going, okay, that's what I want.
So we only have a few minutes left, and I just want to summarize by saying that there really is an opportunity to address the decarbonization of the crypto markets. And what's so interesting about it is that there's a huge opportunity to actually position crypto as a market leader, not just for the crypto industry, but for other industries as well. But just as a last minute fire round, what does decarbonization of cryptocurrency look like in the next year? What is the progress that we can make? Tanya.
I'm going to hedge a bet that we'll see big public commitments, more transparent frameworks. And I will now make a quick plug that if you would like to learn more, we have a nice paper that we published with GBBC all about things like this. So please look at their website and read it.
That's great. Doug, what does it look like?
Yeah, so for Energy Web and the Crypto Climate Accord, I'd say the next 6 to 12 months, you should expect, we hope, to see a handful of crypto miners across a couple of different blockchains who have used new blockchain-based tools to prove that they're procuring renewable energy, where this ultimately creates this notion of a green hash rate. So it's not just self-report surveys of those saying, yes, I'm renewably powered, but we actually can prove it from the ground up. So that's one side of the market. Then on the other side, expect a handful of exchanges and investors to say that all of my holdings, the energy associated with my holdings and my crypto activities are renewably powered. And we'll see what happens, what the splash that makes, and hopefully it pushes the market forward.
And Emma, what does progress on decarbonization look like for crypto in the next year?
I'd like to see more people move towards staking. Staking is fantastic. Tokens.com here, real plug. And it's greener. It's better for the environment. It's better for everyone in general. But in lieu of, realistically speaking, not everyone's going to move to staking. But I think you're going to see more people look at how they can do things, using more renewables. So you definitely see an increase in hydrogen. I know a lot of people are looking at that. Definitely, there are going to be some movements towards making solar more affordable. You're going to see more people using hydro, and there's going to be a decrease in the use of natural gas and coal, definitely.
And I would add, from a regulatory perspective, we would really love to see greater partnership with governments. And that means greater partnership in terms of understanding, right? So that, what we talked about earlier with regards to proof of stake and proof of work and the confusion that some of the people in government might have around that, but also the ability of governments to create a new model of collaboration with industry to help solve these problems and to be able to potentially use cryptocurrency as a real, North Star in that roadmap. So with that, I want to thank our panelists and thank you for listening. Thank you for your time. And for those of you who are watching us on the live stream, I hope this was very useful.
I couldn't read it faster.
All right. We have a full panel here of superstars. And apparently I can't move this chair. What's going on? I need to work out more. We're good. Welcome, everyone. And to those who are live streaming, thank you for joining us online. For those who are in the room, it's so good to see so many familiar faces and new faces as well. And to our panelists, we're going to dive right in because everyone's name and title are above on that giant screen. So I'm not going to do introductions. And frankly, most of the people here do not need an introduction. We're going to dive right in. Securing our future in the digital age is a pretty wide berth. What does it mean for your organization? And I'm going to start with Marta.
Hi. Oh no.
Is it working?
It is. Hi. So I am the chair of the Filecoin Foundation. Our mission is to preserve humanity's most important information. So Filecoin, the technology I work on, uses cryptocurrency to create a decentralized storage system in order to provide a more robust foundation for humanity's most important information. So I'll keep it short, and that's my TLDR.
I want to move on to Mr. Paul Brody, who, by the way, had his EY New York City meetup a couple days ago, which was excellent. I learned a lot. I learn every time I go to a Paul Brody event. So please.
Well, thank you so much. I'm Paul Brody. I'm the global blockchain leader at EY. We're pretty much as old school as it gets, right? We're an accounting firm, and I work with some extremely conservative, very risk-averse accountants who believe that I am currently at risk of destroying the entire firm and our 200 plus years of history. They regard me as kind of a loose cannon on the side of the ship, but I believe it's really essential. One sort of forecast that I would like to come back to is, if adoption of blockchain goes the way cloud does, by 2030, 50% of all business agreements will be done on a blockchain. If you are in business, if you are an auditing business, if you do anything around business, you must understand that, and you must invest in the underlying technology. You must understand the math. You must understand the security. This era where you read the document and you understood it is moving towards an era where we are not all going to be coders. I don't believe we're all going to be coders, but we need to find ways to make sure that we understand what we're getting into, right? We understand how it's going to work, and we understand kind of the mechanisms by which it's going to run out. These things are going to operate our business. So I see our work at EY as sort of really fundamental to securing the whole firm's future. That or destroying it, one of the two.
I think we should applaud Paul for what he's doing inside of an organization that is as venerable, but yet akin to probably trying to, steer the Titanic in a different direction. So really, you're doing great work, and we want to support you in any way we can. Renji, congratulations on your recent round and taking off. Can you explain what you think of when you think of securing future for your organization?
Sure. Thanks, Sandra. A pleasure to be here. My name is Renji. I'm from a company called Metrica, and we're building essential tools for the blockchain world. We're a globally remote company, but we're headquartered in Boston, Massachusetts. So today we're providing monitoring, analytics, and operational intelligence services to protocol teams, the ones that have created and are building these blockchain networks, and in large part are running operations on it. But because this is blockchain and these are decentralized networks, you also have individuals, you have developers, banks, enterprises, large institutions, and so many more that are also running nodes. And so they're part of the infrastructure. And in many cases, they're also running applications on top of this. So to a large extent, whether small or large, these operations could include ensuring that their nodes are configured correctly, they're voting as expected, they're participating as expected, because if not, if nodes are misconfigured, or if they're not running the most updated software version, you end up having anomalies in the blockchain network. You also potentially could have degradations in the network itself. So really our goal at Metrica is to provide the same level of sophistication of operational capabilities that we're already doing for these protocol teams, but to everyone in the network. And again, given the decentralized nature of blockchain, where let's say the telecommunications network, for example, where you have AT&T or Verizon, where they own, manage, and control all aspects of the network, you've got multiple entities. And so what ends up happening, the big question that we're solving for is, how do you coordinate the operations of all of these different entities, what is known as operational governance. And so for us at Metrica, we're building the tools, the operational platform that supports operations across these multiple entities, across a number of blockchain ecosystems. And thinking about this panel and looking forward, securing our future in the digital age, we're looking at if we're able to elevate the game, so to speak, of these operational communities for these blockchain ecosystems, what we end up having are blockchain networks that are more resilient, more performant, and then ultimately, to what Paul was saying, much more ready for wider mainstream and enterprise adoption, whether it's in finance, supply chain, and many more. And so I guess for us at Metrica, we're securely in SDG 9, right? Industry, innovation, and infrastructure, where we really are building the tooling for these operational communities for more resilient blockchain networks.
Excellent. We'll dive into a bit more of that in a bit, but I want to move over to Amanda. We have the pleasure of meeting in person and also being acquainted only a few months ago, thankfully, through another GBBC member, Dragon Chain, is working with Amanda at Artemis. Would love for you to talk a little bit about what you're thinking in terms of the problems that you're solving for in the context of obviously securing future.
So our initial business case is track, trace, and validate active value streams. So we are looking at working along the supply chain to look at the many different data streams that come out of that and ways that you can optimize those. So I come out of the renewable energy business. I've done $4 billion in renewable energy projects, and I really appreciate that renewables is such a big talking point here. But I think it's really important to really focus on efficiencies. And blockchain actually has a much bigger application when it comes to efficiencies and what we can deliver to the marketplace than just directly focusing on how much renewable energy is someone using at any one time. And it is important for us to address that because that's what regulators are focused on at the moment. But it's really, really, really critical to focus on overall efficiency.
Thank you, Amanda. And Fear.
Yes.
You actually do some very vital work, literally security-wise. Can you please talk about when you think about your mission as Valid Network and the company that you're running, what things run through your minds as top priority and most important?
Thank you very much. So my name is Kfir and I'm the CEO of Valid Network. We started about 3 years ago looking at the enterprise blockchain space and securing the application layer. We believe that as the adoption of blockchain grows, there will be layer 1. We are hearing about layer 2 protocols. There will be layer 3 and layer 4, and more applications are growing on top of those layers. And as the complexity of application grows, it will eventually look like the application, like the traditional application space. We started from building an entire chain tools from a blockchain application firewall and a policy engine. And today, since the DeFi space is growing very much, we've switched a little bit into the DeFi intelligence space and providing a security event stream for hedge funds, for banks, for insurance companies. And that's what we do today.
Great. Well, thank you very much for that. Now that we've gotten a flavor for what each of our panelists are doing, I want to talk and dig a little bit deeper on some of the challenges of where we are today. Are the challenges in your mind? Are they technical? Are they cultural? Are they regulatory and more legal based? Let's talk through, based on whatever corner you're coming from, what you think are some of the biggest challenges to the scaling part. And let's talk about layer 1 versus layer 2, because layer 2 is becoming increasingly a big topic. And I know that was also part of a lot of discussions this week. So would love anyone to take it on if they would like, but I'll start with Marta if no one's jumping in.
Sure. Absolutely. So, today's internet is centralized. So the vast majority of the data that we use every day, that we access when we go on the web, is stored by 3 companies: Google, Amazon, Microsoft. And we've seen vast swaths of the web go down when you have one of those companies suffer an outage. And that's the problem with having centralized points of failure. So what we're doing to address that problem is trying to build the next generation of the internet, using a decentralized storage system where files instead can be stored on all of our computers. Basically, we built a technology called IPFS, the Interplanetary File System, that enables people to store files in a way that is decentralized. And Filecoin is the incentive layer that's built on top of that. So it's sort of like Airbnb for file storage. You're able to rent out space on other people's computers to store your files, and they earn Filecoin for storing your files. You pay with Filecoin to do so. So leveraging the ability to really program your money to create that kind of foundation for what we think could be the next generation of the internet. And that's really the challenge we're trying to solve and the way that we're trying to address it.
Fantastic. Anyone else want to jump in about challenges?
Well, I would say, in my position, I spend a lot of time working on both cultural and technical challenges. Over on the cultural side, right, there's doing things on a blockchain. It's remarkable how often I find myself explaining, but we do it this way with SAP. We do it this way on the internet. Why are you so uncomfortable about how we do it on the blockchain? So there's there's a sort of inbuilt resistance when you talk about blockchain because of the history. It's very reminiscent to me of the early days of the internet, where people would just rather set up shop inside of AOL because it's a safe, trusted environment. Filecoin and IPFS is a really fantastic example. Right now, in our applications that we've built, all of our data storage is in a very traditional cloud computing and storage system. And we are working on transitioning to decentralized file storage. I keep telling our teams, I want more blockchain in our blockchain business, right? More Web 3.0 and less Web 2.0 in our Web 3.0 business. And there's a big cultural hurdle. It's not a technical hurdle, it's a cultural hurdle. There is one, to me, big technical hurdle that I care a lot about. We spent, other people will talk about scaling, and scaling is super important, but I often say to people, there won't be a scaling problem if we don't fix the privacy problem, right? Blockchains, particularly public blockchains, and I really believe public blockchains are really the only blockchains worth using or having. Public blockchains aren't really built for privacy, but enterprises, individuals, but most especially enterprises are just not going to touch them unless they have the ability to control privacy, to have the privacy that governs their business agreements and contracts. And that is absolutely essential. That remains a relatively huge technical challenge. There's been a lot of progress lately using a technology called zero-knowledge proofs, but it is not a fixed problem. But by the way, 18 months ago, transactional scaling wasn't a fixed problem. I personally think it's pretty much close to a fixed problem today. So those are the biggest cultural and biggest kind of technical problems that I see kind of as obstacles to growth.
And I think, building on that, I think it's a combination of technical, but also cultural as well too. From our perspective, the applications that are on blockchain, at least at the enterprise level, because we're still in the early stages in some way of the space, they don't have quite the level of criticality or the high, requirements, the service assurance that is needed, because a lot of these enterprises, to Paul's point, are still trying to explore or trying to figure out what this means for their business. But we know that those requirements, whether it's API performance, whether it's latency issues, finalization times on blockchain, they're going to be written into SLAs on potentially smart contracts on the blockchain itself. So we know that the level of requirements for enterprises to adopt blockchain are going to be there. And then I think the second one, cultural, would have to do with around industry best practices. So understanding this idea of operational best practices and how do you coordinate all of these different entities that are helping to manage and operate and keep the network up and running to a point where there are minimal degradations, that there are minimal downtimes, because that downtime for a blockchain network can be catastrophic in many ways. The blockchain networks are secure given the underlying cryptography, but there are also opportunities to improve the soundness and the resiliency of networks that we see today.
I don't want to point out or single out a blockchain recently or protocol recently that was down for a number of hours that has gotten huge amount of popularity and adoption, and particularly in the DeFi space as we kind of inch our way over there, with all of these innovative ways of doing things being experimented on and now attracting billions of dollars. Does that worry you guys at all? Or should we continue to see this innovation and let it flourish?
So I'm not worried. I'm scared. I think that
Friends, I would agree. Being worried versus scared.
I think that there is a huge. We've spoken about cultural. I think there is a huge misconception about trust. I heard it a lot here today, that we can trust blockchain where we couldn't trust things before. And I think that as the popularity and adoption of blockchain will rise, more and more hacks will come. And if we compare the size of the market of the DeFi or blockchain to traditional, financial services or capital markets or what, if you compare the size of the market to the number of hacks, blockchain was attacked much more, and the size of the hacks in comparison. So I think that's the biggest misconception. we can go dive into technical issues in blockchain protocols and applications, and people just don't understand the complexity and the lack of trust that needs to be there. Privacy is a huge issue, and I know EY is doing amazing things in the privacy space with zero knowledge proof, but again, it's only one aspect. So I'm scared.
Sorry, can I speak real quick to challenges? So I think one of the biggest issues I've seen in DC, where I've been spending quite a bit of time over the last 4 months, the biggest issues that I've seen is that people just don't understand how they're going to use it. Government officials have no idea what they're going to do with this. So how this is going to pick up the pace is again, going back to the renewable background. I started when I was at Little Nugget in 2004, when people didn't even know what renewable energy was going to be or what we're going to do with it, right? I kind of feel like this is very similar. And the regulation is following a very similar path. And so when people realize that they can actually do something, when we put out more and more business cases that are more likely to be used or to be known by those officials or people that are their constituents, that their constituents find to be important, way beyond crypto, way beyond all of that part of the program. Once they start hearing that, then they'll say, oh, that's that one thing in my district that we've got this plan, or this can help this person. Right. And so we need to be putting out and really publicizing more of the business cases that are going to have actionable plans within their constituents.
Thanks for that. Let's talk about the whole concept of privacy and building that into the design of solutions of today and tomorrow. What progress are you seeing that does secure the privacy element for not only the individual, but for an institution or a system? How are you guys safeguarding this? What are you doing, you builders?
Well, I first started, I think, thinking about the issues that are sort of central to today's discourse back in, I believe it was 2012 or 2013. There was a competitor to Kindle called Nook, and people were reading through Nook. They were reading War and Peace, and they noticed that there were some irregularities. So they would be reading, and they would say, "Oh, someone nooked the fire." Right? And so what had happened really clearly is that someone had done a Command F and had tried to replace Kindle with Nook, just like on the title page, but they actually replaced it throughout the entire book, right? So Nook is everywhere. And, at the time, it was really unsettling because it really made me start thinking about what it means for us to experience so much of our daily lives through just a handful of corporations, right? And to have no choice but to trust them that the copy of War and Peace that they're serving you is the real copy of War and Peace, and that they're using your data, that they are protecting your data, that they're not misusing it, that these massive troves of data that they have about you, they're protecting your civil liberties when they get requests from the government, and that they're not misusing it. And so I think for me, that really underscores why this idea of centralization, of having no choice but to trust just a few companies, is really at odds with the idea of user privacy. And that's why we're focusing on building a decentralized version of the internet where you can really ensure user privacy and ensure that users have control of their own data.
So for me, privacy has really been sort of number one issue for the last few years. I think it's just essential to get enterprises on board. And in particular, we spend a lot of time on a cultural perspective explaining privacy doesn't mean privacy from regulators. It means privacy from your competition, right? That's what it really means from an enterprise standpoint, right? You're not trying to keep secrets. We're not trying to facilitate bad behavior. We are trying to allow companies to operate securely without fear that their competition can look at the blockchain and analyze what's going on. I am really, really pleased with the progress that's been made. We spent a lot of time trying to convince people that this is an important issue, because there's a lot of crypto startups in the early days that are like, well, we don't need privacy. What do we need privacy for? Right? But the answer is actually you really do need privacy, especially if you're going to do more than just sort of move tokens around, if you're going to execute business logic. One of the things that I'm really excited about is One of the layer 2 firms called Polygon that we have recently partnered with, they have a more traditional layer 2, but they've also invested a lot of money in zero knowledge proof technology, both for scaling and for privacy. They've committed about $1 billion towards this. And the zero knowledge proof is a really amazing piece of sort of mathematical tool because it allows you to prove something that is true, or even encapsulate like a business rule, like a regulatory compliance list as a mathematical proof. And then it can be executed privately on chain without breaking the kind of math that secures the blockchain. It's very challenging to do, but if we can do it well, if we can do it at scale, we can have privacy, we can have security, and we can do it without sort of unpicking any of the foundational elements of the blockchain technology. So, and we've actually contributed the research that we've done, 5 years of R&D, we have been contributing that into the public domain free of charge for anyone to use because we want to see that level of adoption happen.
I believe it's it's available on your website.
Right. It's called Nightfall. You just have to Google it. Nightfall.
Fantastic.
I think from our perspective too, the work that we're doing at Metrica really focuses on the operational risks of the network itself. So the way that we, like in the work that we're doing, where other companies are focusing on the crypto transactions on chain, the KYC, AML, I think there's this added element in terms of understanding how the network is operating, the network health of the blockchain, so that when enterprise adopts, from Paul's perspective, begins to adopt in a wider way blockchain as a technology, that they're also aware of how the network is operating, whether it's public, whether it's private, whether it's public permissioned, whether it's a bridge between different blockchains. We're really bullish on blockchain, but we're also bullish in the fact that we're going to be living in a multi-asset, multi-network world. And so for us, I think we also, get inspiration from the open source, open access community, where a lot of these protocols that are building these networks that have access to all these metrics and understand how their network is doing. The other side of it, the community, the other node runners, they may not have the same level of sophistication in terms of just actually how that network is doing. So we're providing those tools to enable them to also see, for example, how their node is doing in relation to the rest of the network. And I think it doesn't answer the privacy question, but I think by making the network operations more transparent, I think a lot of enterprises, a lot of applications know what they're getting into when they're building on blockchain.
So before you guys jump in on the privacy section, you raise an interesting point about quality control, because I agree, decentralizing more and more of our systems will ensure that two companies in the world don't control everything, and that's a good thing. But as we move towards more and more decentralization and there are nodes everywhere, there is a quality control potential issue, right? Because everyone or anyone can come in. Maybe everyone and anyone, as you say, aren't going to perform at the levels that you need them to. So how do we safeguard that? So you'll provide the data, but what else do we need? What else do we need in terms of infrastructure or oversight to allow for at least a framework where we have some quality control?
I think this is where the industry best practices come in terms of, so if you think about it, just to give you guys a bit more context too, the data that we look at in terms of what's happening on the blockchain is across a number of different layers. So you have the network layer, where we're looking at the quality of connection between the nodes, the quality of connection between the applications and the API endpoints. We're also looking at blockchain network metrics, finality times, consensus, participation, finalization, proposals, voting, and so on. And then we're also looking at application metrics too. And then where we come in with Metrica really is being able to take all of that, put that into our data lakes, and then be able to turn that into intelligence where, different stakeholders are provided with real-time alerts, community network dashboards are provided where, again, you could see how the overall health of the network is doing, but also your node too in relation to that, and then reports on an ongoing basis so that there is that level of assurance that the network is performing as it should be, that there are no anomalies, or if there are anomalies that they're detected and everybody is notified. And so I think that infrastructure play, we're building that tooling, but then there's also the cultural aspect where everyone also, recognizes operations on the network is just as important as everything else. And so that's where we firmly sit. And we're, if anybody's interested in continuing the conversation on operations too, shameless plug, be happy to chat with any of you guys. But I think that's the direction that we're heading.
Well, I'm going to go a little off color here, but it's kind of one of those funny moments because we think of ourselves as some people think of us, we're holding ourselves to the standard of these two big players that are out there that are basically holding this information. But I just hasten you all to Google what happened a few years ago with somebody's private pictures, who happens to be the chairman of one of those companies. And so if you think to yourself that person's private information was exposed, do you think they're taking any better level of care for ours? Right? And so if we start framing it in that perspective where that is the lowest bar, right? And we're now going beyond that. We have a product that will actually allow us to take those multiple leaps above where we are with securing our information right now. And so that's the part of the information transfer that we have to make with the governmental entities, that it really conveys to them this picture of the level of security.
My belief is that when we look at adoption of blockchain, it's the information technology market is a $3 trillion business. Okay, and when we look at the blockchain market and we think that it's the center of the world, I think that the distributed ledger technology is an infrastructure to enable communication between big enterprises, the communication that weren't there before. And I think that the communication is between applications that already exist and infrastructures that already exist, and we need to absorb the current standards to enable the future standards to come in 10, 20, 30 years. And it's kind of a funny discussion about how the regulator needs to adapt new standard for blockchain, instead of talking about the blockchain industry needs to adapt the current standard that the regulator put in place in order to make the world go round. Okay.
But don't you think some of the challenge around the frameworks that exist today, and don't get me wrong, I agree there are some frameworks that are quite sound and should be adopted, but you spent some time in DC and also looking at it from a regulatory framework standpoint. There are things that are actually unique about what's going on here, which is we're going from centralized systems to really sort of hybrid, decentralized, distributed to fully decentralized systems. And those rules, frameworks really can be quite difficult to adapt into. I get your point. By the way, who is responsible for coming up with these standards? We talk about best practices. Who's doing this? Who should do this?
Hello. I really do think.
Not say Metrica.
No. I mean, part of what we're doing too is that we're building with, but more important, but we're building with the community and with industry, and really is, best practices. And I agree with you, Kafir. Industry coming together, here are the best practices, here's what makes sense from a practical perspective with this technology, but then keeping an open line of communication with regulators and keeping them informed along every step of the way, so that when it does come time for some of these regulatory oversight, that there is practical information, that there are examples to point to, as opposed to painting it with a broad theoretical brush without really understanding what the technology is. So I think it's really, we're building this for the community, but it's really with the entire industry.
You would think Renji got paid to say that, but he's absolutely right. We believe in a multi-stakeholder, collaborative, open dialogue, and industry as well as public sector evolution to come to a place where we do have those frameworks and standards that we need. Marta, did you have something to say around that?
I think it's a really unique moment in time right now with regards to blockchain and cryptocurrency and the regulatory environment. I think we're at a turning point. I was testifying in the Senate Banking Committee a few weeks ago, and I was really surprised the extent to which this has sort of become almost a partisan issue in a way that I was not anticipating. I'm also very surprised at how much of the discourse is around issues that I didn't anticipate a few years ago. A lot of the discourse is around the environment, for example, and concerns there. And so I think it's really important to meet policymakers where they are. And I think this is the moment in time where it's the most important. We're really at a turning point.
So our platform actually works on the entire, like I said, efficiency of the system. So track, tracing, and validating along the supply chain. So why that's important, right? So right now the regulators are coming in and said, we want these ESG reports. We want this to be these powerful things that are basically going to guide your entire company, right? But if you've seen recently with the AIG report that came out, AIG was probably one of the more progressive companies in the world in ESG. And they put out a report that was the most ridiculous thing you've ever seen. And I can say that with one of the former CEOs of AIG on my board. So, I look at that and I say to myself, we have to create these products that can help advance things that they want in other spaces. And one of the things we can do, especially with what we're building with Dragon Chain, is very specific to tracking and tracing, creating the efficiencies on the chain, putting these reports out so that they are validated, so that you can see how the actors interact with each other along the chain. Providing them with something that they need and they want, and one of the only fashions I believe is available to do that. So, yeah.
I'll only say I'm hugely bullish about a regulated future for blockchain companies. Everybody I talk to is so negative, they're angry, and it's absolutely true that crypto and blockchain have become partisan issues, and not all the allies of crypto are the kind of people that you would like to be seen doing business with. That being said, overall, if crypto wants to go from being a $2 trillion asset pool to a 60 or 120 or 180, and by the way, I ultimately believe, all those other asset pools, stocks, bonds, bank deposits, they will turn into blockchain assets because you will plug them into DeFi. If we want that to happen, it has to become a regulated industry, right? And we should be welcoming that. We should be looking forward to that. And we should be working very hard to educate the regulators. And because the truth is, no matter how much we want this to be a nice, collaborative, multi-stakeholder system, the regulators are truly in charge. They will make the rules, right? And we do need to meet them where they are at, because those rules are going to, if they are well designed and thoughtfully designed, we can have a future where we can have regulatory compliance in a fundamentally decentralized architecture. This is the time when it's going to be important. This is actually why the work that you're doing, Sandra, is so tremendously important, because Senate hearings will be very challenging, but I think the regulators they're smart, they're interested, they want to know about this stuff, they want to know it in detail, and they're not doing it for the cameras. So I think I'm generally incredibly positive about this future. I think it's the sooner we get through this, the faster we unlock, a many 30, 40x multiple growth for this industry.
Thanks for that, all of you, and your valuable views. I'm happy to take a question or two. I think we have a few minutes. Yeah, we do. Viola.
Hi, Martha. Did I mishear you? Did you start your comments with about storage of information and data? Okay. Years ago, possibly about 11 years ago, there was a discussion around using synthetic DNA to store human information and data. Did you hear any of that? And is this blockchain and all of these other storage devices that we're hearing and talking about today a replacement to that, or are they completely not related? Because I've actually been the idiot sitting here waiting. When is the DNA coming? It's almost like watching Betamax against VHS, and I'm on the wrong line. So are these two technologies related?
I have never gotten that question before. This is
I'm not sure I understand that question.
Right. So I guess the question is, can you store files using DNA? Is that the question?
There was a design for technology to store information on.
She's saying it's
DNA.
similar.
Yeah.
And it was apparently a huge energy saving ability to have so much data on such a small area. And there was supposed to be immutability brought into it, and it was called storage. I didn't hear anything else of that, but since then I've only heard about blockchain and all these other crypto type storage things. And I didn't know, is this the Betamax and VHS of the storage world? Are they related? Does one overtake the other? I know I wasn't dreaming.
That's.
I believe you. It's real. It's just, you confounded this entire panel.
Wow.
I think potentially.
Yeah, I mean, I think the thing that I would say about that is, I mean, it's a really interesting idea, and I think what you're fundamentally talking about are improvements in sort of the hardware that we store, right? That we store our data on.
It's almost, the concept is almost identical. There was just a lot of technical issues that they have on the DNA side.
That's very interesting.
On the DNA side, what she's saying, it's as you said, it's a new type of hardware, and I think that the blockchain is basically a management system for storage. The blockchain itself doesn't change the storage hardware component. You're just managing the storage differently. So those two can go together once the future you're talking about will mature. Then maybe blockchain can also manage those type of storage components.
Yeah.
Okay.
Yeah, I guess I would say it would just be great to be able to do it in a decentralized way. Can you do it decentralized?
But I would hate to be hacked by CRISPR.
This is how it all begins.
Yeah.
Thanks, Siri.
Brilliant.
It's extraordinary. You've managed to bring in DNA, synthetic DNA storage, and now CRISPR into a conversation around decentralized data storage and management. This group is pretty awesome. I don't know. It's food for thought. Absolutely. Any other questions, gentlemen here?
How do you address regulators' concerns about uploading illegal data or information, especially on IPFS or maybe like around GDPR too? But like, yeah.
Yeah, so the question's about content moderation on IPFS. So we actually have a really fantastic organization called Murmuration Labs that is building on IPFS, and it's run by Alex Fierce, the former general counsel of Medium and a trust and safety expert. And it basically enables you to do content moderation at scale in a decentralized way. So you can actually have node by node decentralization and tools that allow you to basically implement at a node by node level the types of content that you want to allow on that particular node. So it's really, really exciting stuff. And feel free to check out Murmuration Labs for how we're doing content policy.
Otherwise, I'm going to ask my lightning round question. Okay, good. To all the panelists here, we're going to close out with a positive note, which is we've all been through a very challenging 18 months or so. We've come out seeing the digital economy accelerating, and if anything, I'm pretty sure every single one of you is hiring. We can't find talent fast enough, well enough. Looking out into 2022, what are the most positive things that you're excited about that you'd like to see happening in either your business or the industry? Give us a flavor, not necessarily looking into a crystal ball, but just a flavor of what you're excited about. We'll start with Fear.
So my big dream is that there will be more and more adoption in the enterprise space. I think it was kind of slow.
Wake up, big enterprises, wake up.
Yeah. Partially it's because of the big consultancies firms that don't have the right offering for them to how to push them forward. They go hand by hand usually. And I'm happy to say that, as you said, we are hiring as hell, and the DeFi space is very, very hyped. And I think that also those two things will go together eventually. The comment I had before about how we need to go hand by hand with the regulator, not against, and it's because I try to break apart the blockchain technology as an infrastructure and the crypto and DeFi is new asset class, financial vehicles. Those are two different components with two different regulations and standards. So I'm sorry if I was misunderstood. That's it.
So we're really excited. We're actually to be launching something at COP26 that is a new chain. So I'm just going to tease that a little bit here. But we're having a phenomenal interaction with the regulators right now, and we are looking to come out with something that's going to have quite a bit of real world application. So.
Fantastic. And for those, many of you in the room will know what COP26 is. It's the United Nations Climate Change Conference, which happens to be in Glasgow this year. I believe it starts October 31st and goes until November 14th. If you are lucky enough to attend, I don't think I'm going to make it, but if you guys are lucky enough to attend, well worth the trip, I think. So congratulations, Amanda, that you'll be there.
I think on my end, you alluded to this earlier, Sandra. We'll be formally announcing next week that we raised a Series A round of funding, so that's really exciting for us.
Oh, I hope I didn't get you into trouble. Sorry.
Oh no, it's all good. It's all good. So just don't tell anyone, you guys in the room, and everyone on the live stream. No, but it's exciting. We're super excited, and we're growing too. We're at 20 people now, and I think we're going to be at quite a bit in 6 months, a year from now. And we're also really bullish on remote work too. So we're globally distributed team, and there are a number of different open positions at Metrica. So if you're interested, come join us, and we'd be happy to speak.
Hiring. Okay.
Oh, very definitely hiring. But also just tremendously optimistic over the next year around scalability in the enterprise. So we've faced this question for many years. There's still so many things that are yet to be fixed, but I feel like every 12 to 18 months, we cross an important new threshold. We cross off one of the obstacles that existed in the past. I think we've, at this point, just kind of crossed off scalability. I feel very comfortable at that. I feel comfortable standing in front of senior CEOs and clients and saying, you're not going to need to worry about gas fees or other issues. You'll be able to scale. And 12, 18 months from now, there'll be a new one that we can knock off the list, but I'm excited about what that's going to do for enterprise adoption. That'll unlock every 12 to 18 months, we get to unlock a new set of use cases. And I'm really bullish about the ones that are driven by scalability.
See, Fear, Paul is going to fulfill your dreams of more enterprise adoption. This is great.
I wish nothing more than to fulfill your dreams.
Marta, please round us out.
I'm so excited. In my corner of the universe, I'm so excited by the data that is being uploaded to the Filecoin network. We launched last October, so we're coming up on a year. We now have over 7 exabytes of data, which is enough to store 10 times all of the written works of humanity from the beginning of recorded history to today. And the data sets that we're having on the network, I do feel like we're fulfilling our mission of preserving humanity's most important information. We have massive portions of the Internet Archive. We have really important climate data. We have the USC Shoah Foundation's archive of genocide survivors' video testimonials. I mean, we just have really incredible data, and I'm so excited that we're getting to preserve it for the future.
Thank you so very much, panelists. You guys are amazing builders and doers and dreamers. Thank you all, and we're going to round out the panel with applause. Thank you.
Hi, everyone, both in the room and on the live stream. We'll now begin our panel on the future of digital identity. Thank you.
How's everybody holding up? Can you hear me? All right. You're getting closer and closer to happy hour. I know that we are one of the obstacles to get you there, so we're going to make sure that we have a really interesting conversation today. We are here to talk about digital identity, one of my favorite subjects. I think the topic of conversation here has been pretty obvious that we have been living through a time unlike any other. 7.8 billion people in the world going through a shared experience at virtually the same time when the world came to a halt. Life as we knew it changed. And I don't think we can fully appreciate the consequences quite yet. And I think we're still living in it and we're still learning. But we've had this odd juxtaposition that at a time when we had to stay apart, technology and human ingenuity allowed us to come together and keep working, keep learning, keep shopping, keep convening. How many people want to say goodbye to Zoom forever? But it would be remiss to not acknowledge that this would have been far more devastating if this pandemic had happened just 5 years ago, just at the start of the GBBC. So I think when we think about all of the things that we know working in this space, it was hard to see what transpired and what continues to transpire and not wonder what might have been different had some of the innovations that we've been working on already been in place, already been deployed. We've seen this great tech acceleration, right, to kind of fill that void, fill that gap. I've heard statistics that say we have roughly 10 years of advancements in innovation condensed into 1 to 3 years, depending on what you're talking about. Our lives, quite simply, are more virtual, more digital. And yet, my US vaccination card is still paper. I could give you a list. I'm sure you guys could all give me lists of things that are just not functioning as well as they could in a virtual environment. More concerning, and I think more urgently, 1 billion people around the globe, particularly young women and girls and children, still have no verifiable form of ID, which means that they are marginalized, they don't have access to the legal protections or the services that they so desperately need. So that is where our discussion is going to begin today. The UN SDG 16 goals, which I reviewed again last night, and I forgot just how expansive they were, make the need for a digital ID clear. And some countries have made progress, and varying degrees of success. So why isn't a true digital identity a reality yet? Good thing we've got some really smart people to talk this through with me and figure out why. And we are going to start with my colleague, Christine Leong, in 1 second. She is the global marketing lead. Sorry, I'm the global marketing lead. We need verifiable IDs here. She's the global head of blockchain, digital identity, and biometrics. She's got a huge remit. She couldn't be with us today, unfortunately, travel restrictions coming from London. Also with me today is, oops, sorry, you took that off the screen. Let me flip my paper. James Loperfido. He is the Director of Business Development at Tangem. Next to him is John Greaves, aka Dr. Blockchain, which I can't wait to dive into that a little bit. He is the chair of the IEEE Global Standards Harmonization Program. And down at the end, one of my favorite people, Simran Agarwal, the Director of Node Operations at Indicio.tech. So I'm going to hand this over to Christine for some brief remarks, and then we'll start the live conversation.
Hi, my name is Christine Leong. I'm Accenture's Global Lead for Decentralized Identity and Biometrics. So thank you for having me on the panel today. And I'm very sorry I couldn't be there in person. Part of it is with COVID travel and controls. Unfortunately, I'm not able to travel like many of us over the last 2 years. But thank you for having me on the panel. And on the topic of future of digital identity, I suppose it is a increasingly interesting and topical idea and concept. I've been working in the space of digital identity for the past 6.5, 7 years now. And I'm happy to say that over the course of this last 18 months, there are the demand have changed. And the state of what organizations want in terms of digital identity also changed, accelerated really by COVID. As we see in our world today, we have things that are digital credentials to enable us to travel, health credentials to get back into work, into buildings, into venues. I think the need for a better, more trusted digital identity is becoming more and more important as we move into the future of more flexible working, of more digital transactions, and as the world sees the need towards being more digital. As we have seen over the course of the last few months, the EU has announced and proposed regulations on digital identity and what that looks like, which is super exciting, if you ask me. Other governments have followed suit. UK have launched a digital identity consultation. Many other governments have done the same thing. And it's interesting that the governments are really taking a position on doing a lot of these activities and looking at digital identity for the future. And not just identity of people, but also identity of companies. If you look at some of what the EU is doing, that's especially exciting. If you look at also other governments in North America, like in Canada, also in Asia, like Singapore, these are all governments that are looking at projects and the movement of digital identity as one of my proudest project on the Known Traveler digital identity with the government of Canada. And Netherlands, pre-COVID, will have been one of the earliest digital identity projects for cross-border travel. I think as we go forward into the future of the digital world, one of the most important things that we, from my mind, is thinking about adoption. Whilst many governments, organizations have tried to do identity schemes, some have worked, some haven't worked so well. And the focus on value and getting all of us to adopt it, for individuals to use it in their daily lives is what's going to be the most important thing going forward for any of these capabilities to be successful. If we need to have fewer trusted identities that are accepted everywhere and can be used everywhere, much like our payments card. I think that aspects of making life easier for each and every individual using their digital identity is the critical thing. How does it bring value to my daily life? Just like a passport or driving license bring value to me when I travel, when I set up an account, when I need to verify I'm who I say I am to get the set of services. It is really about that value. Of course, privacy and security are implicit assumptions that this needs to take place. These are very, very important things. But more importantly, in terms of defining what those use cases are across, whether it's with governments, whether it's with private sector, making that a journey and the user experience easy, valuable to all those included will help to encourage adoption. If we make it too difficult and too complex and difficult to understand, then people are not going to use it, nor are people going to trust it. I think that aspect is going to be very, very important as we go forward. And separately, from a future-looking perspective, I think organizations, as they think about use cases, need to think about ecosystem. How do they collaborate? Ultimately, identity is a piece of paper or something that I get to say that I'm who I say I am, just to give it to someone else in order to trust me. So how do they form ecosystem? How do they collaborate better? And ultimately also change the mindset that this isn't IT. This isn't just about technology. This is about changing the way you operate, how you interact with your customers, how you interact with your staff as we move into more of a flexible environment for working, the digital nomad life. How can I hire people but be able to trust them when they are living in other places and they no longer need to show up in the offices? So thinking about how do I trust? How do I verify? and that mindset going away from technology but moving more towards the use case is what I think organizations really need to be thinking about in order to get us to the point of adoption and widespread usage of a future of digital identity. So thank you all for having me, and look forward to a good panel.
Okay, so it was great to hear Christine's point of view in her role at Accenture, kind of thinking about level setting her impressions about digital identity. But this is a really broad and complex topic. So I'm going to ask each of you and I'm going to start with you, James, to give me the current landscape in digital ID through your lens and what you do with Tangem.
Thanks. This one, yeah, there we go. Thanks, Alyssa. First of all, thanks to the Global Blockchain Business Council and everyone present for furthering this mission, which begins, I think, with education, and that's what we're really here for. So, from my personal perspective, as you guys can see, I'm a direct business development at a Swiss company called Tangem, which makes secure hardware elements independent of smartphones, such that people can maintain self-agency with respect to possession of their digital assets, as well as their identity credentials. And you can do further research on that to understand it. But as part of my cooperation with the Global Blockchain Business Council, I'm co-chairing the Digital Identity Standards Working Group as part of the Global Standards Mapping Initiative, which encompasses not just digital identity, but other topics as well, in an effort to educate people and show how all of these topics and Web 3.0 are related to each other. And so what I've observed most recently is a very strong effort amongst multiple membership organizations, countries, groups, corporations to come up with interoperability standards so that we can provoke the adoption of decentralized identification to solve these supranational problems like climate change, like COVID credentials and vaccines and travel. And so we're at this stage now where interoperability standards are coming to the surface, where people can identify which are broadly usable, and countries and the people that have to make these decisions with respect to legislation and policy to allow for its adoption are beginning to see the light and the potential. And so the technologies are not the limitation. It's the education, like Christine mentioned, the user experience, the simplicity, the access, and all of those things are very quickly evolving along with the technologies that support it. And sitting next to me is John, who could speak much more aptly than I can about those standards and interoperability, given his experience and position in the world. So I'd love to hear that, John.
So we did just talk about this outside, John. I did hear standards in there quite a bit. So same question to you. In your lens, through your lens, what is the current landscape of digital identity?
In the interest of clarity, not only do I do that job, but I have a few other programs that I chair and lead. And I also am kindly a member of GSMI, part of the GBBC world. And I also work for a company. They pay my way and allow me to dabble in all of these sorceries called standards. And that is Consensus Health. So I come with double-ized credentials, I guess you would call it. I'm a health person and a standards person in blockchain. But one of the challenges, James alluded to it, is that there are three kinds of standards. Those standards that are accredited by standards development organizations and therefore adopted nationally or internationally. There are those that come out of industry associations and industry bodies in sectors, very suitable for X, but not much use for Y. And there are those that are disguised regulations. So to soften the impact, bodies of regulatory instruments will suddenly call it a standard. Well, why is that? Well, it sounds better than you'll do this. Standards do not operate on you will do this. They are voluntary and agreed by consensus in communities that are diverse. interesting word. There are currently in excess of 110 bodies developing ID. Yes, you heard it, 110. Approximately half of them have got the word blockchain in them. Approximately 5 of those actually understand how to spell it. This is another problem. Then throw in the fact that the people who have adopted something have largely adopted it without any of the safeguards of blockchain. They have simply added a layer. You know, oh, this is digital now. Really? Why? Well, we put syntax at the front so you can't read James's first name. Well, isn't that whoopee? So we're actually so far away, it's frightening. And to the singular adoption model spoken of, France has one. Britain just completed, the National Health Service in Britain just completed an outreach for COVID staff interchange into facility credentials. And when I was on the call briefing as potential bidders, we chose not to, for this project, I asked a question. I said, so you will, of course, want immutable data using blockchain. And they said, no, that's not really necessary. So this is new generation digital ID for a health service that is not really necessary. So while you've got that going on, you've got no interoperability, there's no common platform, there's no utility of use or application. I have a whole 4-hour speech. The bars here don't open till that time, so here we go. Now, seriously, I do have a 4-hour speech, but I'll keep this to the next 1 minute and then we'll move on, which is that we have 3 challenges: interoperability, cooperation, harmonization. Right now, no single entity is doing that. And there's even a case for some people in corporations, many of whom belong to GBBC. Would you please cease and desist by going and joining the Parrot ID Association of Liechtenstein, right? It's enough. Thank you very much. Move on.
Samiran, you are the optimist in this mix, so I want to hear the counterpoint here.
Actually, I want to skip my introduction and so by the way of introduction, I'm Samiran, and as you introduced me, I'm Director of Node Operations Ecosystem at Indisio.tech. I want to first say, personally, I'm very, very passionate about this space because I have been a victim of identity theft for 4 times in 6 years in US. And I had a nightmare. Being an immigrant, you can understand that, you know, what processes you have to go through, carry a lot of paperwork from your home country to here so that you can verify what you are. So that's my personal passion and interest. And now going back to all the points that my co-panelists just mentioned, at Indisio, what we first said, we just tackled this interoperability that we so fondly talk about. We were like, okay, forget it. Let's just start doing it. And these baby steps matter because what we just did, just how GBBC organized a hackathon 2 years back, we organized Interoperathon just 2 weeks back, where we invited our member companies to kind of test their applications against each other. And that's a small step. So I agree and disagree. There's no one company that's doing it, but actually if we start taking those baby steps and if we start working towards it, then we can achieve that big step of, you know, having interoperability or even incorporation as what he mentioned and harmonization. But unless and until somebody decides to do it and not talk about it or walk the talk, it's not going to happen.
I couldn't agree more. So when you think about those baby steps, and you talked about that you have a membership that is kind of convening to make these steps and take them forward. On a broader picture, who needs to be involved? This is going to be something that we hopefully see globally, right? For this to reach its full potential and be as useful as it possibly can be, it won't be one global identity, but we want to see participation across the globe. So how much government needs to be involved? And if government is a roadblock, can the private sector do it by itself?
So, Lisa, I would like to rephrase this, not who has to be involved. It is everyone needs to be involved, because the key stakeholders are individuals. All of us, individuals are all of us on this planet. Second is governments, reason being because none of the identifiers which identify us are chosen by us. Just think about it philosophically. Did you choose your names? Your parents chose your names. Did you choose your driver's license plate number, or did you choose your SSN number or any national ID? No. It is issued by the government. So the governments have to regulate, they have to adopt this, they have to sponsor this, and have to work with private corporations. And the private companies, they bring in the technology, the innovation. So I think it, and the non-profits, they set the design standards, they set the principles. So I feel everyone has to come together to make this work. There's no single entity, no single person, no single organization that can happen. And second thing I want to highlight is there cannot be one global identity solution either. I'm sure I would have made many enemies just by this statement right now, but it's natural. Every country has their own regulations, laws, and no one country can adopt, one solution specific. So what we need to strive for is how these solutions would work with each other rather than making a global standard or a global identity solution. I think the first way should be how these solutions can work with each other. I think that's a way forward, or that's the first step we need to start thinking about.
So couldn't agree more again. Sorry, I'm violently agreeing with these guys. Clearly, the end user needs to be at the table, but as well as enterprise, as well as, or at least in my mental model, as well as policymakers and governments. We, again, to your point, because we all participate in this. The problem that we're having is with a lot of the people that have a seat at the table and have the ability to drive this forward, have the authority to really kind of take this on and move it forward. We've seen these gigantic paradigm shifts in trust. So much so that the WEF, their Davos 2021 agenda is about rebuilding trust. It's really probably at an all-time low with governments, with institutions, with technology. This tech acceleration that we've talked about has put a lot of pressure on people feeling comfortable with the technologies that are being forced in front of them. And it varies by digital literacy. So John, I'm coming to you on this one. Because trust is so important, why is it so important now? And what role do standards play in this shifting trust paradigm?
I think we are the last bastion of trust because our constituencies continue to trust us. Why? Because, funnily enough, we follow Sumaran's model by consensus, by mutual and actual approval of no matter what. In the end, somebody has to lose. Now, here's the problem, you see. When you allow more autocratic entities to dictate how this shall be, so you don't get a good outcome. You get the worst picture, the one Sumaran mentioned, the single global digital identity. You are now a citizen of the world. No, thank you very much. I am actually all right with a British passport, if you don't mind, and Lord knows everybody recognizes it. So why don't we just modify the passport? Oh my goodness. The World Customs Organization would have a lot to say about that, because they just modernized their computers and they can't afford to do it again. So that's out. So here's the dilemma, isn't it? But here's the good news. Yes, I do come with good news, Samiran. The good news is, because we are trusted bodies, and because we have not allowed that trust to be dissolved, and because we've never let anyone down, we're now very much, over the last 3 years, maybe 5 years, we are actually invited to policy meetings and asked to input to a policy statement by massive government bodies, by large influential entities that can create not the one world, not the global ID, but a sufficiently representative identity. But I'm going to be rather cruel here, if I may, because I'm going to say to James, James, What is a digital identity? Don't tell me it's just putting all of those in an electronic wallet, is it?
You want my honest answer, John? This is a tough one. I'd like to actually ask a question of the audience first. How many of you have either had a Facebook, Instagram, LinkedIn, or other social media account? Yeah, I know everybody's hands are up, right? Now, how many of you have read the terms of service? So I think you see my point in that if we don't take responsibility for our own identity, then we are entrusting institutions to do it for us. There's a data breach every day. Our passwords, logins, phone numbers, emails have been disseminated on the dark web 1,000 times over. If we don't shift the solution and ends of trust to the individual, we're going to have a very difficult time maintaining veracity and ownership of our identity and those related credentials, in my personal opinion. And so our digital identity, John, are those things that follow us wherever we go in the world, right? Because the internet transcends borders. And so I think, this notion of what we call a digital twin, right? Which is the digital reflection, the one that lives in the ether of the internet, the cloud, is what we're referring to when we're talking about a digital identity. But of course, that has its effects in the real world as well, right? When we need to present these credentials that are stored somewhere. Where are they stored? Are they stored in your pocket? Are they stored in the cloud? Are they stored with someone you trust, a custodian of your data who's responsible for it? And as legislation has evolved from Europe through GDPR and the California Consumer Protection Act, and now the New York Privacy Act, which typically are foreshadowing of federal legislation, right? One of the notions that comes up is the idea of at least the option to be the custodian of your own data, of your own information, right? And being that so much of it is out there already, right? It's a serious challenge to take ownership of it. But should we not at least have the option to maintain that control?
James, you played right into my hands there. Because in fact, digital twins is an absolutely superb remedy to the digital ID. I won't bore the audience today in any way, many of them know what a digital twin is, as to the efficacy and efficiency of digital twin and its ease of implementation. But in addition to that, one of the big noises that have been made, particularly as a result of COVID, 7.8 billion people spoke and said, I have been appalled to discover that I know little or nothing about me, but they know everything about me that I ever wanted not to tell someone. Result, the move now must be that you own you, not they own you, we own we. I'm sorry, that is passé, that is a no-no. It's self-sovereign identity, meaning it's mine. I'll let you look at it on an occasion with my consent, and no, it is not going to be in a vault in San Diego, in a damned social imaging site in San Fernando, or anything else like that. It is going to be created in a self-sovereign identity depository that in some way will have to be engineered. And I would think Sumiran has got an idea on engineering self-sovereign identity vaults, don't you?
If I speak my mind, I'm sure you'll be like, just go out of the room, because I feel we should use the terms decentralized identity, then self-sovereign identity, because are we really talking about that? Because self-sovereign identity to me is true North Star. And we need to be a little more pragmatic and start with decentralized identity first and not use those two terms anonymously. So sorry, John, I'm not agreeing with you here.
We just actually put some research in the field because we wanted to know what did people think across the globe about the concepts that we're talking about here, including what my big question was, do people want to have control of their own data? We just got the raw data back last night, so I'm giving you straight up answer percentages, but we were shocked that 65% of people said, yes, I do want to control my own data. That was way higher than we anticipated. But the other thing that I thought was interesting on the flip side of that coin, it was if I share my data with somebody, if I share my data with another entity, they are responsible. 75% felt that they were responsible. But I think what I'm hearing is that there's a lot of things that in my neck of the woods, when I'm worried about messaging and how people absorb information, how we teach them to absorb and adopt new technologies that are different for them. I don't want the narrative to be hijacked. So words matter, how we frame it matters, how we get people to understand what we're talking about. And again, with this paradigm trust can be a bit challenging. So in that context, privacy was something that was incredibly important as well. That you just testified, right, on privacy issues in front of was it the state of New York?
It was the New York Privacy Act and the beginnings of it, and there's been iterations since. But yes, privacy is a very important idea, of course, right? As Jean just highlighted very well for us. And if you don't have control over knowing at least who views your data and how they use it in a transparent fashion, then things can get lost very quickly and your data will be monetized for you whether you know it or not, right? And so having at least purview over how your data is used, spent, transmitted, right, potentially on an immutable public ledger, I think is a very good idea that would partially satisfy the majority of the respondents that confirmed that they do want control of their data, right? And maybe they just don't know how to control it yet, or those tools are not made readily available to them. And to be frank, with a shameless plug, it's why I joined the company that I'm a part of now. They managed to harness entropy with the ambient noise of a microchip to do elliptic curve encryption inside of a microprocessor that fits in a smart card. And with that comes the ability to prove authenticity and uniqueness with a physical person in the real world. And so these solutions are coming out in a way that you can trust them. And the transparency and use of your data via DLT frameworks and technology is something that is really achievable in such short order that we might be surprised at how fast it comes. I mean, I was absolutely bewildered by what my friend shared with me yesterday, which was that the quantum computing group at Google accidentally invented a new state of matter yesterday with their quantum computer. It's called a time crystal. And they don't even understand the implications of this stuff yet. And so my point in bringing this up is that technology is moving at an increasingly rapid rate. And if we don't prepare the moral, economic, and legislative framework to harness it, things may be a little bit more chaotic and out of control than we're ready to handle. And so we have to anticipate what that potential is. And by shifting risk from centralized institutions to the individual, we remove or have the potential to remove a lot of that complexity and simplify it through decentralization.
So John, since you are now dabbling in the policy world, and you've had a global perspective on how some of these things are evolving, what you've described sounds amazing, but is it achievable across the entire globe? And is it essential that there are strong institutions and infrastructure already in place to push this out into the market and oversee it? Or is the reverse true? Can we actually use digital identity and the innovations and technologies that we're talking about to strengthen the integrity of the institutions that will potentially be involved here.
Oh my goodness. Yes, we can do this, but right? The question is, I always follow in anything I do Kipling, as in Rudyard, who had 6 faithful serving friends. They are who, which, why, when, what, where, and how. And if you put those on a piece of paper and start that and then head it digital identity, you will be nuts by tea time, because you then got to multiply the factors by the number of players and parties and participants. However, to your point about, is it institutional? Is it governmental? Is it, to your point, Simran, about decentralized identity, that's the use. The technology is self-sovereign identity. And that's the difference. You see, you're from that community and I'm from this community. So I'm writing standards for SSI. The lady is delivering decentralized identity based on an SSI platform. Blockchain runs in 2 entities. Platform, what it runs on. Process, what it runs for. Don't mix the 2. It's soup and salad on the same plate. It won't work. So the idea that we can get there, yes. Please be aware of James's warning, which is 100% valid. That is that we're not ready for it today, and yet it's coming. You know, you are now walking through the tunnel, and that is a train coming towards you. And guess how many people are in that tunnel? Right now, about 7.8 billion, right? And that train's going to make a hell of a mess. And it's already been proven as well to do that. So can it be done? Yes. Are there dangers? Yes. Is it being done? Yes. Will it be here in time? Don't know. But let's say that, first of all, these unique local programs may prevail for a while, and then we'll gather them up and make a good one that won't have every element in everything. A British passport doesn't look like an Indian passport. A Romanian passport doesn't look like an American passport, etc. Yet they're all passports, right? And they're all approved by the one body, the World Customs Organization. So we're good after a country has approved them, interestingly. So yes, is the short answer. This is a must-do, can be done, will be done. It's the who and the how that is the challenge this morning, this afternoon, this evening, whatever. Thank you.
You know, and I think we all recognize that there are additional benefits besides just verifying who you are or who you are engaging with, right? It's not just about who I am. It's about all the things that I can do, but it goes beyond that. And that's actually the SDG goals are playing into that idea in the SDG 16 goals. Can it substantially reduce corruption and bribery? And if it can, my very first event at the UN, when we were talking about ID 2020, which was an organization that Accenture is involved in, one of the presenters was talking about the fact that getting aid into the hands of the people that need it most, they expect, and he just kind of rolled this off his tongue, they expect 20 to 40% skim. With that in mind, I've always wondered, aren't we asking people who are empowered to be like turkeys voting for Thanksgiving? Why would they implement this particular technology if it can actually end corruption?
So first of all, I want to I want to clarify that can this reduce corruption and terrorism or anything? Yes, absolutely. Yes, it can reduce, but would it be end-all be-all solution? No, because it's a process problem. This whole thing is a process problem where transparency is not there. So what decentralized identity would do would enable the transparency in the process, which would help reduce these bribery, corruption, and those states which we don't want. So it would be a reduction for sure, yes.
So James, how do we get governments that maybe aren't 100% transparent today to say, yeah, I'm good with that?
Yeah, is this on? Yeah, there we go. So yeah, there's a bit of a paradox there, isn't it? In that to solve these huge problems of fraud, corruption, and those similar, ironically, these institutions might have to give up power to solve them. And it's, the statistics are absolutely mind-blowing if you take a look at them. $1.2 trillion a year money laundered internationally, conservatively estimated because we can't estimate it. I previously worked at a solutions company called Soramitsu, which built the retail central bank digital currency infrastructure for the National Bank of Cambodia. And one of the most incredible stats was that 80% of transactions were done with US dollar paper fiat. And it's nearly impossible to recognize someone because those are inherently private transactions, right?
Yes.
And because of asymmetric cryptography and the technologies that underlie what we're talking about, we can find that delicate balance between privacy and transparency where it's needed. As we all know, sunlight is the best
I think, James,
disinfectant.
to as it were, I'm much sure the moderator will like this, to close out, but perhaps on a lighter note, as it were. I think everybody will have noticed that James is using his socks as a digital identifier. And there is, in fact, of the $1.6 trillion that has vanished in the world due to money fraud, money laundering, over 1 trillion of that was actually Sumaram's incidents over the last 6 years. And I think that sums up the challenge very well of digital identity.
I'm going to ask you one more question. I know we're out of time, but just to quickly, I don't want to leave anybody hanging with, we didn't just admire the problem. What's the way forward? James, you want to start?
Sumaran and I have been working tirelessly to...
Some more ice cream?
Ice cream is definitely part of the solution, but identifying who these players are in the industry that are coming up with practical solutions, implementations in a very rapidly evolving and ongoing process is definitely part of the challenge, and what we're trying to do with the Global Standards Mapping Initiative that the Global Blockchain Business Council initiated. And to John's point earlier, it's a brutal task, and there's just so much going on right now that obviously there will be Pareto effects and consolidation and things that evolve over time, which allow for this to be a little bit more discernible. But the first, I think, solution to the problem is identifying where we are in time now and seeing where the rubber really meets the road in terms of practical implementations and where we're seeing success, because we're not going to know where success or which innovations will prevail, because without trial and error, we cannot possibly estimate it because it's such a complex problem. So I think just addressing where we are and seeing what's working in the short run is the best place to start, and that's what we're trying to do.
I think we'll start by being friends after the session so that we can have a common ground of understanding. But, on a serious note, I feel when we start taking practical implementations and start broadening their effects, that's where I feel we would start seeing the difference, like how we did, Interoperathon, and those companies, those 4 or 5 companies which came together to kind of make things work. That's how, and when we expand that use case or that scenario to, a state, then a country, and then, globally, that's what we need to do. So my one big takeaway from this session was, what is that first step that I can personally take or my company can take to make this happen? Because digital identity would happen whether we like it, not like it. So sooner or later, it would be adopted. The question is, when can we start doing it and something about it?
All right, John, take us home.
Really, what is next? Everything that could be next is actually being done in one way or another. The problem, the challenge, is they're being done by different people in different places for different reasons. Isn't it ironic, this header of this event is the United Nations General Assembly, who crack open a subcommittee at the drop of a hat. And I wonder, you know, I do not care for that model of global government control, etc. You've heard me say that. But at the same time, somebody has to shake the bag. And I would ask also all the members of GBBC and all the members of the Industry 500 and Accenture and its myriad of zillion-dollar company clients, would you please take a look at your own internal investments in what you believe is good faith investments in identity, and then ask yourself, is that really where I want to be, or did some heretic from the Bristol office decide that we should be in that one? So, you know, we all need, before we get self-sovereign identity, some self-examination. I do that every day. My principal role, global standards harmonization. In the standards world, over the last 18 months, we have reduced the number of competing standards bodies in blockchain from 712 to 43 by shaking hands and then shaking heads. And lo and behold, it can be done. This is time, because James has told you I'm with him, so is Sumaram, and certainly Alita is. We haven't got any time. The cycle is shorter and shorter and shorter, and now that nobody wants to go to work, who is going to cure it? Thank you.
Thank you, John, Sumaran, and James. Thank you, Sandra, for having us, and thank you guys for your attention. I think we're done here. Yeah.
Good afternoon to those who are with us here in New York at one of the first in-person conferences, and also greetings to people around the world who are enjoying the live stream. Thank you very much to GBBC, to Sherman and Sterling for hosting us here. Very excited for this afternoon's panel on investing in the future. I'm joined by a wonderful group of panelists, and I'm really excited, as I'm sure you all will be, to hear from them. Just to set the stage a little bit, according to Bloomberg, by June, venture capital firms had invested over $17 billion in crypto-related companies this year, with multiple companies raising over $300 million. And I think even since June, those numbers have continued to escalate. This figure is significantly higher than in previous years and is nearly equal to the total amount raised in all previous years combined. On the other hand, The UN notes that many countries require official development assistance to encourage growth and trade. Yet aid levels are falling, and donor countries have not, according to these notes, lived up to their pledge to ramp up development finance. Due to the COVID-19 pandemic, the global economy is projected to contract sharply by 3% in 2020, experiencing its worst recession since the Great Depression. So in this panel on investing in the future, we will explore how VC and investment models can be mobilized to accelerate investment and progress towards the UN Social Development Goals. And so I'll ask my my wonderful panelists to introduce themselves, starting with Nisa to my left and your right, and then we'll go across and have everybody introduce themselves, and then we'll jump into our discussion.
Thank you, and thank you to GBBC for having us. I'm Nisa Amoyles. I'm part of Dragonfly Capital. I am also the founder of A100X Ventures, which invests at the intersection of blockchain, AI, and social impact. I've been in venture for over a decade, and prior to that, corporate and securities lawyer. I've done a lot of different things in the space. Jeff's been a guest on my show, right, for Forbes, and also on the board of the Global Digital Asset Crypto Association.
I'm B. O'Carroll. I am a managing director at Radical, which is a new quantitative trading firm for digital assets. I've been on the trading side of the world in cryptocurrency since 2015, and I'm delighted to be here.
Hello, everyone. My name is Matt Homer, and I'm at NICA Partners, which is an early stage fintech investor, and have also been a regulator and have also worked in international development previously. So I'm very excited to be here because it brings together a lot of things I care about.
Hi, everyone. Jude Chidiogeni. I'm the founder and CEO of Charles Winsborough. Charles Winsborough is a strategic advisory firm that focuses on soft infrastructure in sub-Saharan Africa, ed tech, fintech, health tech as well. And I am still a corporate and securities lawyer. I started my career right here in New York. Delighted to be here.
Great. Well, this is wonderful. Thanks, Nisa, B, Matt, and Jude. Looking forward to a great conversation. And I realized I should have also neglected to introduce myself. I'm Jeff Bandman. I'm co-founder and board member of Global Digital Finance, which is an international policy initiative dedicated to promoting codes of conduct and higher standards in the digital asset industry and convening industry and regulators towards a collaborative future. And GDF collaborates very actively with GBBC and very supportive of the mission. So for the first question, we'll go to Jude, since he was the last person to introduce himself other than me. So we'll go to him first. And let's go right to the core of one of the theses of this panel. How can blockchain and crypto help address the SDG 17.1? And SDG 17.1 says, strengthen domestic resource mobilization, including through international support to developing countries, to improve domestic capacity for tax and other revenue collection.
Thank you, Jeff, for the question. I think the answer to that is threefold. I'll take, for example, Nigeria as a particular case. I'll speak about Nigeria because it's the country in sub-Saharan Africa with which I'm the most familiar. I grew up in Nigeria. So in Nigeria, for example, there are a number of factors that are occurring. The first is, and many people are not aware of this, that cryptocurrency is very popular in sub-Saharan Africa, especially in Nigeria. In fact, Nigerians are per capita the #1 users of cryptocurrency. Whenever I say that, I get the look that Jeff just gave me, which is a look of incredulity, but it is true. And I'll come back to that in a second. The more importantly, I think, or more troubling, is the fact that Nigeria's external debt about 5 years ago was $5 billion. Today, it is closer to $50 billion. They are operating at a significant deficit. Over 100% of their expenditures is basically financed. And in terms of tax collection, they were very, very low on the totem pole. At the same time, however, PwC estimates that there is over 900 billion of what is called dead capital tied up just in land sales. People are not engaging in normal transactions to sell property because they are concerned about fraud, right? Nigerians, unfortunately, have a reputation that is a little bit unsavory when it comes to transactions. What do all of these things have in common? In my view, they have in common the blockchain as a potential solution to all of this. What do I mean by that? I mean, for example, that you can unlock the 900 billion in dead capital with respect to land sales by having a public blockchain with an immutable ledger that is trusted. So you overcome the trust deficit needed to engage in these transactions. That in turn means that the country will be generating revenue, which means that it can stop, relying on external debt, which is not sustainable in the long term. The other thing is, however, I think we are all here because to some degree or another, we already believe in the gospel of blockchain. We know that blockchain is in fact a tailor-made remedy for a number of ills that are that the UNGA and the SDGs are proposing to resolve. For me, the deeper question is, okay, how are we actually going to do that? And so in the context of the Western world, think about fiber optics, we talk about a last mile problem. How do you get the fiber optic to the house? Conversely, I think in my part of the world, we have a first mile problem, which is to say, it's all well and good to say, yeah, just implement a blockchain solution. The problem is, where are you going to get the data to put on the blockchain? The blockchain, the data is in analog form. So you're going to have to convert it. You're going to have to digitize it to get it into a form that it can then be put on the blockchain. So another initiative that I would urge, aid agencies and multilateral organizations that are looking at this is to provide funding for these kinds of on-ramp projects that can lead to greater blockchain utilization that will then put in place the virtuous cycle I've just described. Thanks.
That's great. So the first mile instead of the last mile. And for the record, my look was not one of incredulity to the contrary. It was excitement at hearing new information from such a highly credible source. And it's something that I hadn't heard before. So quite interesting. Do any of the other panelists want to respond to Jude's comments before I go on to a couple of the other questions? One of the things you mentioned in your answer or in your observations there, Jude, was this idea that there was 900 billion in sort of dormant or dead capital because of the hesitation around the land sales. And Matt, something you've commented on is that in crypto, there's actually quite a lot of essentially, maybe not dead, but dormant capital in the sense that crypto is a $2 trillion market, and a lot of it is just being held or hodled. Is there a way to deploy that capital in a way that benefits international development, either in developed or developing markets?
Yeah, I think it's a great question, Jeff. And so as you said, I mean, crypto is now a $2 trillion asset class, and about half of that is Bitcoin. And the individuals and the institutions that own this Bitcoin are looking for productive ways to make use of it, right? And so folks here have probably heard of yield farming and DeFi lending, and those are sort of so you're seeing people who hold these assets either use those assets as a source of collateral to borrow against, or to put those assets up to be lent out, right, and then to earn yield on those assets. And you are starting to see some really exciting projects that is unlocking that capital and deploying it to lenders in places all over the world, including in emerging markets. And with the lenders who are receiving that capital, then on lending it right to small businesses or individuals. And so I think that it's a huge opportunity to think about how to, and it's exciting for me because it's really a win-win opportunity, right? It's an opportunity to provide greater, to provide, put these assets to productive use, while at the same time, increasing the flow of capital into markets where it may not be as readily available. So there's as example, there's a project called Goldfinch, which is doing this in a few markets, and it's still early days, but I think it's a really exciting to see how these assets that have been accumulated can contribute toward the SDGs and other sorts of things that we're talking about here today.
Amazing stuff. So still early days for that particular particular initiative. Something to watch. Perhaps things that people in the GBBC community can get more involved in. I think Project Goldfinch, like the Donna Tartt novel. So thinking back to, let's call it crypto history, meaning 2017, which is decades ago in crypto history. But there was a time when ICOs were highly visible. There was a lot of activity, and you would see articles suggesting that maybe these new ways of raising funds were going to make venture capitalists obsolete. I remember being at, I think, a Consensus or Ethereal Summit event in late 2017 and asking some traditional financial services VCs whether they agreed with it and how they felt about it. And they're like, well, I don't know, but if they do, I guess I'm going to have to start looking for something else to do. 4 years later, various regulatory and other impacts, you don't so much hear that the ICOs are going to make VCs obsolete. But how has crypto changed the VC model, if at all? And B, it would be great to get your take on this one.
Sure. Thanks, Jeff. So I sit in kind of an interesting position. I think Nisa is more totally on the venture side, right? And I sort of sit in the middle between the projects and the companies that are trying to raise the money and the VCs that are investing in them. So I think one of the biggest changes that I can say from my sort of middle trading standpoint is speed and diversification of liquidity, right? So formerly, the VC deals I think would have taken an awful lot longer to get through. It's a lot more expensive. There's a lot of paperwork, and now things are moving a lot faster. On the flip side of that, I think from my VC friends, what they tell me is that like the VCs have to work harder to get these deals, because the smaller companies, like as someone who had co-founded a company earlier, right? Liquidity is the most important thing. You need to pay the rent, you need to pay the developers, you need to pay people on your team. And if you have a very small runway of money, it's urgent that you get that quickly. So to be able to not only rely on VC money, but like you can also get individual investors that are buying into your deal, right? So then that puts the VCs in a position where they're like, okay, well, how can I help you? Because I would like to get into this deal. So I need to demonstrate how I can add value to this company. And at least from my standpoint, it feels like it ends up being a real win-win for both the VCs as well as the projects. Because projects feel supported, the VCs have a vested interest, and the interests are aligned. And then from what I see is you see a real diversification of companies that are popping up, both geographically, in terms of gender, in terms of like just across the board. So it's a more diversified allocation of capital.
That's great. That's great. And Nisa, I think B called you out. We'd love to hear from you and get your take on, from your perspective, do you see crypto changing the VC model?
Yeah, I think it's changed it in basically three ways. First of all, as B points out, you have a quicker path to liquidity. What would have taken like normally 6 to 8 years for an early stage startup to exit. Now you have an early equity round and then a token round, either public or private, et cetera. So a lot of times there is no pro rata to take. So that's really the second change. So when somebody asked you how you're managing your fund and how much you're allocating to reserves, a traditional VC would say 30 to 40%. Now you can't really answer that question. The other way that I would say the benefit of the earlier liquidity is to investors in funds, and also to be able to show your returns earlier. So I think that's all a good thing. The point about competitiveness of deals, I think that's a mixed bag. I think, there is a lot of talk about diversity of founders and different types of projects being funded, and raising from crowdfunding is one option, and then now we have security tokens as another option. And so VC just remains like one option. And in crypto and NFTs and in DeFi, that is very competitive. I agree. Those companies are very overvalued right now and hard to get into. But there are areas of the blockchain ecosystem that are overlooked and ignored. And I think impact is one of those. And that is why we chose to focus on that. So I think it's such a diverse sector now with its own subsectors that it really depends what area you're talking about. And it also really depends which VC you're talking about, and whether they can actually add value or if they're just saying that they will.
Amazing. And I'd like to drill down on a couple of things that you said there, if you may. So you've sort of talked about some of the shifts in the landscape and the market dynamics. You've also talked about the emergence of some of these different kind of subsectors, some of which are getting overlooked. Do you think that's also resulting in changes or evolution in kind of the skill sets of the people who can get involved and be successful, or in the composition of the population who are now working in these areas of investment?
Yeah, so that really is the third area of change, is that you see a lot of these funds in the space that are really helmed by people who were traders. So because there's earlier liquidity, there's kind of a hybrid or like a blend of hedge fund style and venture style investing. And so I think it's a very unique asset class that maybe in the beginning was really more like West Coast venture style, willing to get into it earlier. Now you see more of Wall Street, like the SALT conference on Monday, all about crypto. So I think you see lots of people just getting into it without a traditional venture style skill set where you help build and help founders and help them with their P&L and their hiring and their PR, et cetera. I think there's a lot of like traders now in the space.
Fascinating. Anybody want to comment on that before we go on to the next topic?
I mean, I would just say, only just a couple of other points. I mean, one is that I think that the other thing that's unique in this space is that it's become the early people who got involved and purchased Bitcoin and accumulated these assets have made it sort of self-perpetuating, right? So the source of capital also that exists, I think, is
is unique. And now you see, right, other more traditional sources trying to get a piece of the pie, right? And then I think that if we're thinking about this also in kind of an UNGA SDG context, I think that the point about optionality is really important, and that's what I think with DeFi and other emerging spaces, there are more options available, and I think that is very exciting. It can make it more competitive for VCs in some ways, but I think that it makes it exciting from the perspective of making it easier to become an innovator and lowering the barriers and the geographic and other forms of diversity associated with starting a business. So I think that is an exciting aspect of how the investment landscape is changing.
The lowering of the barriers to entry, that's just a remarkable feature of our time, or at least certain types of barriers, I should say. I remember working on, it wasn't called fintech at the time, but on I guess kind of a .com financial services startup in 2000, 2001. And, I think we raised $15 or $17 million, and like 12 of that was to build, servers and capacity and all these things that literally for, like under $20,000, you could have, you wouldn't need the servers and you just stand up things on AWS or one of the others. And so, certainly the technology barriers and the ability to kind of iterate, some of those barriers have changed. Maybe we'll pivot next to kind of areas of responsibility, and I'll come back to you to start, Max, and this topic you expressed interest in. But what kind of responsibilities what kind of responsibility do you feel that investors have to ensure that their investments actually are improving quality of life for vulnerable populations?
I think so. I'll talk about kind of the NICA partners experience, because I think NICA was not founded to be an impact fund, and yet some of our LPs fund us through their impact fund. So they see us as being an impact investor, and I think it's because we are driven by values, and we've had opportunities to invest in products that could be abusive, and we have not invested those. And I think in part it's because that's sort of our values, but also because we think that is aligned with our economic interests and the interests of our investors, right? That the products that are going to be successful and succeed are going to be those that actually add value to the market and to consumers. Of course, not all of our investments are in consumer-facing products, right? Many of them are in enterprise type solutions. But I think that I think that interests are actually aligned around this issue more often than you might think.
Are there ways, and I'll go to you, Nisa, on this question. Are there ways that companies and governments can ensure that aid to developing countries is continuing and is used effectively? And do you see there being ways that blockchain can help better enable this?
Yes, we backed a company called Open Grants, basically to solve that exact problem. So to create a marketplace between the supply and demand side, the grant makers and governments and foundations and the small businesses that are seeking capital, traditionally a very opaque industry. And they're using blockchain to bring transparency and traceability to where the money is going. And I think that will help democratize access to people who are in emerging markets, in developing countries, et cetera. That is their premise. So I don't know that it's perhaps governments will use blockchain directly to do this, but I see startups who are trying to step in and solve that issue on their behalf. So that's encouraging, at least when the private sector can work with government.
some of the initiatives you were talking about at the beginning of our panel, seem to touch on that. Are there ways that companies and governments, whether in the sub-Saharan African region, as you were discussing, or elsewhere, can help ensure that aid to is being used effectively, or is it the governments that should be doing that, or perhaps the governments might be helping to encourage investors to be doing that themselves? How do you look at those issues?
So I think a little bit of both. I think we have to make sure that we are providing funding to companies, entities like the ones that Nisa mentioned, some of which are springing up in sub-Saharan Africa as well, to hold governments accountable because of the opaqueness of the aid process, right? Right now, we have a very centralized aid model where it goes from the nonprofits and others who are in this space directly to the federal government. And then where it goes from there, nobody knows. And so there are accountability organizations that are springing up, which in my view should be encouraged, should be invested in, so that they can put this information out on the blockchain for everybody to see. And then give you a specific example. In Nigeria a few years back, a federal ministry announced its budget, and it was put out. It said, this is the budget, this was the approved budget. A few days later, there was a revised budget that was put out that should have gone through the regulatory process, but did not. And there was a huge discrepancy in terms of the amounts that were purportedly approved. This is exactly the kind of thing that a blockchain, information on public blockchain, can bring to light. And so, again, from the perspective of developing countries, more funding, more aid, targeted, again, decentralized. We talk about blockchain as decentralized. Well, how about we decentralize the aid giving model itself, and invest in companies and NGOs that are doing the Lord's work in this area. And I might also, finally add, I meant to touch on it when I started, that we talked a lot today, and I think yesterday, about the regulatory environment. Well, we have to talk about it as well in this context, because the concerns that animate, or that ought to animate, investment in blockchain and crypto are different in the developing world than they are here. Here, for example, if you listen to Senator Warren's comments at the Gary Gensler hearing a few days ago, she was very concerned about volatility of cryptocurrencies. Well, in the developing world, they are investing in cryptocurrencies, especially as a hedge against volatility and inflation. And so that the concerns are different. And so encouraging government bodies and others who are thinking about how to regulate this area, it should not be a one-size-fits-all. And so I think more thought towards that is welcome.
Your point about volatility of cryptocurrencies reminds me of, there was a kind of an unusual trading day last year, kind of in the midst of the pandemic, and just due to some kind of partly technicalities and delivery dates in the energy markets, oil futures contracts actually went into negative territory, which caused a lot of confusion, investor losses, and people's symptoms. And, I remember just thinking that day, if you'd ever told me that, oil would go to zero before Bitcoin did, I would never have, never thought I would see that day. So there is volatility, but volatility is not investment advice, but, volatility is relative. I know, B, you've been in the trenches in the trading markets, so you've seen all kinds of volatility.
My bread and butter.
Yeah. So I think we're close to at the end of our time. I think maybe just
one last thing I'd be interested in any panelists have used. So we've talked about the role of governments. We've talked about the role of investors. It sounds like there are opportunities maybe to unlock some of these dormant some of these dormant assets, like whether kind of real estate through transparency on the blockchain, so people don't fear corruption, or unlocking dormant. Maybe if I could ask each panelist just to sort of give a quick, top one or two, either their crystal ball or what they think kind of the most important of these elements will be, as just kind of our takeaway and what you're most optimistic about in terms of these potential tools for investing in the future. And maybe Nisa, I'm sure you've thought a lot about this, and if you don't mind, I'll ask you first, and we'll just go across.
So it's part of our thesis that blockchain is going to disrupt not only financial services, which is what all the media is about right now, but also healthcare, incentivizing, carbon credit offset, supply chains, legal, title, identity, all the things that have been discussed at this event. And I contrast that with the other events going on in New York this week, where nobody talks about any of that. And my hope is that we can bring these two worlds together, that we really get capital allocators excited about the coming disruption in these other industries, and how we use this technology to solve real problems, to improve people's lives. That is my goal with this vehicle. And also that really we try and diversify this sector, and as such include more women and minorities who've been traditionally excluded.
So my hope is that there's more of a focus on the transfer of value aspects of cryptocurrency. For me, the thing that drives me and has driven me since I came into this space was a fierce belief in economic sovereignty. So using the transfer of value capabilities of cryptocurrency to lead to individual economic sovereignty globally, and then therefore having, including people who are right now living either on the fringes or outside of the economies of countries globally, that they're actually in part of it and able to lift themselves sort of to a better quality of life, standard of living.
Yeah, I'll put something new into the conversation we haven't talked about yet, but I'm really excited about stablecoins, and for many different reasons. And I think that but I think particularly in the context of countries, right, with hyperinflation, I think it's really exciting. I think that very early on in the history of Bitcoin and crypto, people talked about use cases that are now becoming like really real. So to me, that's exciting. And then also just the proliferation of use cases that we're starting to see right now. So that's what I'm the most excited about.
I'm excited about the potential for blockchain and cryptocurrency to turn what some people have thought of as a population bomb in sub-Saharan Africa into a population dividend. I think countries in that part of the world need to understand that their people are their most important asset. And so 20, 30 years ago, we would have thought of this as some sort of Malthusian destiny, that there was going to be starvation and, all of that in the African continent. But we have the ability, through leveraging technology, to allow these people to eke out a very good living where they are, and promote and contribute to the well-being of the country. We just need to get the folks at the top there, and so part of this is going to be a campaign of persuasion, because the people, the young kids in Africa, and the median age is 18 and dropping. These are all digital natives. They've jumped in with both feet. And they're just waiting on they're waiting on their government. So I'm very optimistic about that, and they have me hopeful.
Well, I'm excited that so many talented individuals, excited
and insightful and dedicated persons as our panelists today are so focused on this area that even in and of itself gives me a lot of optimism, and I hope it's been inspiring to those of you here with us physically and joining as part of the live stream. Thank you very much, and please give our panelists a hand.
So the next conversation is going to begin in just a couple minutes. So thank you for your patience. Thanks for staying with us.
just say anyone?
They're clean. They are clean.
That wasn't what that wasn't why I asked. Right?
Just say that Esper and David will be joining us by video.
Yeah. Okay. Thank you all so much for staying with us. We're thrilled to have you and really looking forward to this conversation about the future of healthcare. Dr. Esper Collis and Dr. David Watkins will be joining via video. They desperately wanted to be here in person, but due to COVID, it just wasn't possible. So we'll begin with that video message, and then we'll go into the conversation. Thank you.
Welcome to Global Pandemic Shield.
A história da humanidade foi marcada por pandemias. Se a gente vai ter outras pandemias, óbvias.
This, as I said before, is one of many pandemics that we've seen recently. And in many ways, this was a warning to us that we need to be prepared for the next pandemic.
Essas pandemias e essas doenças transmissíveis vêm colocar em questão as fronteiras. Germes não respeitam fronteiras. A gente vai ter que atuar como uma coletividade. Não vai ser possível um país, um estado, uma cidade ou um grupo de pessoas querer se proteger do germe transmissível ignorando os demais. O avanço tecnológico, inovação e desenvolvimento, especialmente das nações privilegiadas e ricas, elas puxam o desenvolvimento cada vez mais especializado, trazem um distanciamento das nações mais desprivilegiadas. Mas nós temos que encontrar uma ponte para trazer esse benefício para quem não pode pagar, trazer esse benefício para aquelas pessoas e aqueles grupos dentro da nossa sociedade que são muito mais desprivilegiados do que nós. Por que a gente não consegue prover a toda a população do planeta os avanços que a gente encontra na ciência?
As a scientist, one of the most difficult things for us to do is to get the funds to be able to carry out the experiments that we want to do. So then I think this is where GPS comes in.
The biggest pain point in the big pharma is who pays the bill. We know this. It's very hard to change things when the last milestone is to make money. If you really want to produce a medicine or a health system that is affordable for everyone, people need to invest. That's the most important thing. When you go to the legacy, you have to show the last line of Excel sheet. When you go to the crypto, you create a community. You create a community of believers, of supporters.
We are trying to invite people to collaborate, people that are savvy on technology with social-minded orientations. If we can collaborate with the right technical solutions, we can really change the way that we interact with each other in the contemporary society. It's huge because we are going to prove a real impact on something that is life or death.
We will make humankind new. And this is very important. We can cure not only COVID-19, but we can cure the medicine itself that is sick for a long time. And as you go, we start to build what we call GPS, Global Pandemic Shield.
GPS is a decentralized alt-funding science platform designed to put life before profit for every single human being. The platform works on 3 pillars. The scientists submit their projects, seeking funds to help them realize their vision. The creators offer their precious works to the cause as amazing NFTs. And you, the people, cooperate with the mission by purchasing the art collectibles. GPS then funds the researchers and makes the remedies affordable for the communities in need, for every single human being.
Chega essa força e pode conseguir trazer recursos que não dependa nem de governos, não dependa nem do lucro e não dependa também somente dependendo da inércia de alguns.
A, you accelerate development of important drugs, i.e. antibodies, and B, you get them delivered at a fraction of the cost that you would have to charge if they were developed by a conventional biotech company.
E eu acho que isso pode criar completamente uma quebra do paradigma que a gente viveu até hoje.
And hopefully this will serve as a template for other scientists to bring their products to areas where they are really the most needed at affordable costs.
GPS, a new era of collaborative science.
Okay, well, that really felt relevant to what we're going through today. Certainly did. And by the way, thank you all for staying at 5 o'clock on a Friday. So we'll make the party worth it later. So I'm Jane King, and let me introduce the panelists today. And if you'd each give me 30 seconds, just kind of a background, so we can have some context about what you're bringing to the table here. So we've got Dinah Andrews, co-founder of Epidaurus Health. Also, Jamie Wells, Director, Research Science Institute, founder and president of the Yale Alumni Health Network. And Duncan Johnston-Watt, co-founder and CEO of Blockchain Technology Partners. So, Dina, let's start with you, just to give us some perspective about what brought you here today and what your company's doing.
Sure. Thank you, Jane. My name is Dinah, and I have a background in information science and data analytics. My company, Epidaurus, is based in the Northern Virginia, DC area. It's been a work in the making since 2019, and we're working on a blockchain-based software as a service for optimizing pharmacy benefit reimbursements. And we are technical partners with Blockchain Technology Partners.
Or no?
No, wait a minute. I think it was.
How about now? Oh, okay. I'm so excited to be in person. This is my first event, so I give a carte blanche if I make any statements. I haven't, like I did right now. I haven't been around people in a while, it feels like. Anyway, so I'm very excited to be here. I am a physician. I practiced for many years, not far from here, was affiliated with NYU Langone. And I had about 90% joy in medical practice and 10% frustration, which is probably something you don't hear a lot these days. But through the course of my practice of medication, I just felt there was an ever-widening gap between policy and medical practice, and the people making decisions were decimating healthcare. And my biggest passion is patient safety and the highest quality of care. Not, using things as buzzwords like disruption and quality and like being authentic, genuine, and delivering excellence in care. And so I wound up I kind of give myself a deadline of complaining. So as I said, it was incredibly rewarding patient care, but towards the end of that, I wound up shifting out of care due to frustration. And one of those experiences that I had, which people like to call the on implementation of the electronic health system, I would say is one of the most negatively disruptive technologies that I ever endured in medical practice, and see that as a cautionary tale. So what I'm so excited about to be a part of here is that Sandra, who's an amazing CEO, is very interested in authentically having people who are involved in all sorts of industries and front lines of healthcare to really close those interdisciplinary knowledge gaps that a lot of times don't create human-centered design and have a positive impact that they initially intend to have. So I wound up working as a director of medicine for an educational advocacy nonprofit. I published over 400 articles and did extensive outreach on medtech innovation, to disease, to health policy. And then I wanted to, I really feel that, as you've seen with the pandemic, and as they described in here, pandemics will face us till the end of time. And a lot of times with regard to policy, if you look historically, we tend to be reactive and not proactive. So I've kind of shifted yet again that the next generation, most recently, I've been involved with helping Drexel School of Biomedical Engineering, Science, and Health Systems spearhead the nation's first degree program in pediatric engineering. Again, focused on a lot of products for pediatric healthcare have been designed in therapeutics that are retrofitted from adults, and people have always had a faulty appreciation that things could just be scaled from adult to children, and they can't. And so I've shifted into that, and most recently, I'm the director, was the director for the Research Science Institute at MIT, which is collaboratively sponsored by MIT and the Center for Excellence in Education, and founded and president of the Yale Alumni Health Network, whose mission is to break down silos in health-related disciplines to spur innovation. And so I've had my hand in all of it, and am really impassioned by putting back. One of the biggest things with the implementation of electronic health records was that it was promised as this panacea, but what was actually delivered was a glorified billing platform and marginalized patient care. So I'm committed to utilizing whatever knowledge I have to impart that will put the hands back in the patient, will revitalize the doctor-patient relationship, and really emphasize quality of care. And privacy has become a relic in a lot of ways, and I'd like it restored. So those are my passions.
Okay, thank you. And Duncan?
Hi. As we were saying earlier, Jane, when we spoke, as co-founder and CEO of BTP, Blockchain Technology Partners, really our job is to enable people to innovate and to create these new generation of applications. So we provide a lot of the plumbing, so take care of the deployment and the management of the underlying blockchain infrastructure, and then layer on top of that support for things like downward smart contracts and secure data securing data through a secure file system, also running on a blockchain. So at the end of the day, we're only as good as the stories that our customers tell, because my story is very boring. I'm a plumber at the end of the day. So now you need plumbers, obviously, more than ever probably. But at the same time, what really I think is important, and why I'm on this panel, is really to help tell the story about not just people like Bedaris Health, but other companies that we're working with and what they're doing in this field.
So I'm very curious. So we've all lived through this pandemic. I mean, it's a common thing that we've all been through. And I'm curious your opinions on what you felt like it exposed about medical care. Was there a resilience? Are people, and I felt like even before the pandemic, people were getting more concerned about their health than ever before. And we've seen that with some technological advances. And also the SDG goals. I mean, we accelerated some things were delayed. If you could each weigh in on kind of your overall thoughts of where we stand, having lived through this and still living through it, and where we are now. Dinah?
Okay, I think I can speak to two things that I observed during the pandemic. First one that jumped out at me was with everyone that didn't have COVID, fortunately was at home, telehealth was exploded. It became a necessity. And so for a lot of businesses, not particularly mine, but I know that there was an explosion of innovation for telehealth because there was an immediate necessity for that. And one of the benefits for Epidaris, I would say, would be that I think while it's still, in many cases, there's no replacement for actually being on site in person with a physician. Now, I think out of necessity, out of the whole COVID-19 experience, people are much more familiar. Probably everyone had at least one annual checkup remotely in 2020. I know I did. And then the second thing would be an economic consideration, the whole debate around the distribution of vaccines, who would pay for those, getting it approved within a short amount of time, and just coordinating all of that. It's incredible that we were able globally to accomplish that. But that is something that we're working on at Epidaris Health, or it would be relevant to our business, is the question of coordinating payments, figuring out the reimbursement supply chain, and capturing that and reconciling that in real time. And overall making that whole process more transparent and therefore hopefully more just.
Where do I narrow that down? First and foremost, I would say one of the things, when you practice medicine, everyone has fears. The person who jumps out of a plane, the person who, may be the one who's completely crippled by speaking in public. The person who has an aptitude for speaking in public may be just not adventurous in other arenas. And in medical practice, fear is why people delay care, people don't take their medicines. Denial is very powerful. And my reverberating thing prior to COVID in practice was control's a false perception. It's something that we never really had. And that was amplified how that factored in during the pandemic in terms of fear. So that's kind of a consistent theme pre and after. It just went on steroids during this period of time. People want to have control over every single everything, and not every disease state works that way. So that was something that was really kind of consistent. It reinforced for me that a lot of times, the quick to judgment is bad. In medicine, good information can save lives, bad information can end them or cause serious harm. So there are a lot of knee-jerk reactions to which initially are important, but then medicine is very regional dependent. It's different within a city. Your populations are different. Their needs are distinct. So a lot of times with respect to health policy, there are these wide swaths that just can adversely impact one group and really benefit another. So kind of getting a level head took a lot longer and still doesn't feel like it's come around. I also think it would be really interesting, which we could never run as a case study, if this had happened during a non-election period of time. I think that would have been very interesting to see what the ramifications were. And I just think a lot of things that you previously saw have been amplified, which is in policy, when you take resources from here and remove them from here, bad things happen here, and it's a matter of deciding which of those resources. I'm deeply concerned about a lot of things this year with regard to everything is COVID, but diseases don't stop. Cancer diagnoses haven't stopped. Other things haven't stopped. I can speak to endless anecdotal examples and other examples where quality of care was substantially diminished during this period of time in diseases that were otherwise completely treatable or could have a much higher quality of life later. So that is something that I think really needs to be remedied for the future. And honestly, there are so many things. There are a lot of positive things. I'm not one to think of everything as some great panacea, which is a lot of times how technology comes about in medicine. So telemedicine, there have been wonderful things with respect to it. But again, it's not a substitute for doing things in person either. So when we think about the end user and the human attached to it, there are a lot of things that get shortchanged by that. And then there are a lot of wonderful things that really enhance a person's life by utilizing telemedicine. So using a critical eye, not just being spoon-fed that this is, fabulous for everybody in every condition in every state. Using it judiciously, I think, will yield the greatest results. So I'm always, hesitant when people, it's allowed for a lot of lack of regulatory things that previously were controlling people's ability to practice across state lines and stuff like that. So I think there have been wonderful things about getting people who are in areas that lack a certain subspecialty. Telemedicine can really open that up and get them the highest quality of care, but it has to be used in a good way.
So I guess I could sum it up as it's brought out the best in us and the worst in us. And what I mean by that is, we always think of lawyers as ambulance chasers, present company accepted, of course. But seriously, the amount of times that I saw people just trying to make money out of the pandemic was incredibly depressing. And then what it revealed, certainly in the United Kingdom, where I come from, was just how poorly we had planned for something like this. We planned for a flu epidemic, not for a COVID epidemic. And it took a long time, and I think we're still trying to sort of deal with the sort of, I wouldn't say the aftermath because we're still in it, but obviously the vaccination programs have kicked in and have helped enormously. But again, there was this sort of, everyone became very selfish on the one hand, vaccine wars started to sort of, the UK was already falling out with Europe in a big way, but they thought they would just go the extra mile and fall out completely over who was shipping what where. And against that, which obviously was, sad to see, there was also, tremendous efforts by people to support people, whether it was because people were stuck at home, unable to sort of look after themselves. So there was a lot of voluntary work that came to the fore, and that I also saw happen here as well and elsewhere. So for me, it was the best and the worst of times.
I think that's a great way to summarize it, actually. I'm curious what your thoughts are on the workplace of the future and how much responsibility will companies be taking for their employees' health going forward? I feel like we've opened a Pandora's box that we may never go back, with vaccines and so forth. What are your opinions and what are you seeing?
Jane, when you say companies, do you mean employers or do you mean health?
I mean
related
employers. So
okay.
Like an AT&T or an IBM, what kind of responsibility, if any, will they have for their employees' health?
It's a good question. Right now, I mean, I think our outlook changed as of 2020 with everyone, where possible, working remotely. I'm still working remotely. No office, no going back in sight for the moment. So I think company policy definitely will have an effect moving forward, but it's a difficult question to answer, honestly, because I'm not in the medical field, and I don't think anyone really knows what the future holds. The future of work probably will always have been affected by, especially in tech. It's shown us that offices are kind of optional in what we do, but workplaces are very diverse, and I'm sure Jamie's going to have a completely different perspective because she works in the hospital.
It's so interesting. I just fundamentally, when I hear your question, my knee-jerk reaction is I just don't think it's good for humanity to be, forget the health well, actually, a lot of the physical ramifications have caused so much mental health problems, so much other things. Nobody's guaranteed tomorrow. The things in health that happen tend to be, again, my experience in medicine, never are the things that people worry about. The things that happen tend to be the things that they never even thought to worry about. So it comes down to everybody's risk tolerance. It comes down to what kind of life you want to live in this world, because there is no guarantee for tomorrow. I've seen people with every disease under the sun make it to be 110 years old, and others be in perfect health and have a sudden death event. So, I do think that we have to get back to the forefront joy. Joy brings good things, good health. It increases your immunity, exercise, eating well. I'm not great at all these things all the time, but at least I try, and I try to rein myself back in. But, it is also a matter of that, and I would like to retain some of that. I don't think it's in the best interest 100% remote all the time for every single person. It's a case-by-case situation. Some people live alone. Their entire social network is going to work. That's a very different circumstance. Others are starting out their careers. Students have been, robbed of a little bit of that experience. And doing a full remote job as a first job is one thing, but as they start to evolve and develop, when I first entered here was the first time. I tend to be a social animal, and the first time I came in here, I was like, do I talk to people? Do people want you to talk to them? Should I stay against the wall or something like that? So I do think, in my former life as a practicing doctor, I would never have had the option of not going in person. So I think our fields are, totally different. One change that I just do not like, and I hope course corrects in a lot of ways, is I think that for-profit hospitals have enjoyed this no family policy or anything in hospital settings. I don't think that's totally the antithesis of, the Hippocratic Oath of doing no harm and having anyone suffer by themselves or anything like that. So that's something that I would like to see. I think that can be done safely in a lot of different ways. And I would hope that those severe restrictions get loosened in different ways, responsibly, obviously. But I just think it's very case by case. And I think a hybrid makes a lot of sense for a lot of people, and I think might really be helpful for some people. But again, it's case by case. Someone could have 3 children, and what their circumstances, remote could be worse for them or better for them. So I don't think there's a one answer. You have to know the situation.
So I guess one thing I'd add to that is that initially companies were just grateful that people could work. So in other words, and I'm talking mostly big corporations, giving people an allowance to set up their home office and whatnot. But even already we're seeing a sort of reaction against that. And I think it's partly because people have realized that if you don't get together, and especially if you're starting out a career, you don't have that sort of initial contact, then it's very, very hard. It might be okay if you're sort of somewhat established. And so I think, there was a kind of grace period where people were allowed to sort of just, work anywhere. But I think the fact we're all here is because we all need that human contact. And I think the same is true of work itself. So in terms of, looking at it from a healthcare perspective, I think you'll find a lot of companies asking you to sign contracts whose terms and conditions you don't necessarily understand, but essentially say they're not responsible for X, Y, and Z. So, and this is the same, sadly, with insurance. Once something bad happens, next time you renew your insurance, turns out that that's not covered. So I think the reality is that risk will shift back on to workers as quickly as possible.
Is there any way that blockchain technology can help with this, make the healthcare system more efficient, improve care, improve outcomes? What are your thoughts on that?
My answer is absolutely. That's what my whole business is predicated on. From the Epidaurus standpoint, as I mentioned in the introduction, we're working in a very niche area currently, pharmacy benefit optimization. The idea being also, to Duncan's recent point, insurance ideally should be designed to provide you financial access to the best possible care that exists that money can buy, because you are paying a premium for that coverage. However, that's not always the case, and you have this tug of war between health systems and physicians and payers, lack of trust, where the whole business model of insurance, at least from the outside, looks like they're looking for every reason they can find, all the evidence that they can bring forward not to pay for a prescribed treatment, whereas on the other side, the physicians have lack of access to information. Some physicians I interviewed at the beginning of this project said if they could only have real-time access to what their patient would actually be charged for a given therapeutic medication, that they would gladly, if it was deemed in the appointment unaffordable for the patient, find an alternative if there was one. And then, of course, if there isn't an alternative, then you have to engage in the whole prior authorization process, which is very bureaucratic and inefficient and siloed as well. So yes, there's a huge opportunity for blockchain to change things in the form of coordination, eliminating data silos, having a shared system of record where people are able to reconcile their records on both sides while respecting privacy, keeping their data on their side encrypted and the other data on the other side encrypted, but they can run analytics to show that things check out so that trust can be established and you can move forward with a decision-making process. I'm going to pass it over to Jamie.
Goodness. Well, I don't know that it can solve. There are just too many individual problems to solve, and some are sexier than other ones. But I actually think sometimes the less, everything doesn't have to be called a moonshot to be as innovative as possible. And so, transitions of care is a huge pain point where there's lost information, medical errors can occur, things like that. Some people don't get their entire care as much as institutions would like from one institution. They may have physicians at different, areas. They may have been on vacation, went to an emergency room somewhere, or have multiple follow-up issues. So I wonder if it could be potentially utilized there. I think that would be very interesting. I would personally love to disconnect the basically I encourage everyone to read Kaiser Health News and Fortune a couple years ago. did an investigative series of articles. First one was Death by 1,000 Clicks, and it basically did an analysis of the $36 billion loss and decade of, how the implementation of the electronic health record happened and how it compromised care in a lot of ways. And it's not because necessarily it is so horrible. It's the implementation of it, and what it did was balloon a coding industry. None of this is within what the doctor patient is allowed. It ballooned third-party access. So anything that would remove third-party access to patient care and patient health records, I would be very happy to see. Things like digital geofencing or health infrastructures that ruin, like privacy. I don't know if people are well aware of that, but our laws are up to date with those issues. I know in Massachusetts, where marketing firms were going around digital geofencing hospitals and health systems. So say someone goes into a hospital unconscious by EMS, and they're not consenting in anything. And, personal autonomy matters. And it's, a fundamental tenet of bioethics. And so some companies were, the second their cell phone arrives in the emergency room, it's pinged, and then they can be targeted in marketing or other things like that. And I just think the loss of that to humanity, it's someone's personal decision, whether in their most vulnerable state, to be coercive in that way. I wish that there could be implementations of technology to restore that autonomy, and I think people would be more compliant. I just think a lot of things would improve in that regard. Credentialing, it's been used in, that's not as exciting to me, the credentialing front, but I don't know if people are aware that previously or even now, if a physician wants to go practice in different states, you have to get licensed in that particular state, and that can take 6 months in one state, 2 in another. It's cost prohibitive a lot of the time, so you're not going to get 50 states, for example, licenses. It would be thousands and thousands of dollars. So their hospitals and certain health systems kind of owned that credentialing. So blockchain is being used to give the ownership of the physician's credentialing back to the physician in an effort to make, because basically it can stop you from moving to another state to go, it stops your life in a lot of ways until you're credentialed in that state. So I think there are a lot of opportunities, but I am not inclined to think there's one way to fix the entire problem.
So one of the great things about being here all day and dedicating a day to the GBBC event is we've gone on a real tour of where and how blockchain can sort of touch things. And I think the best way I would describe it is think of it as part of a digital backbone. And since this is a health care panel, I think I'm allowed to use that analogy. So a digital backbone is something that that really does, it's the spine. It's what supports us. And it doesn't do it on its own. There is the autonomous nervous system. There's various other bits, I'm sure. Yeah, various other bits, right? I remember my biology O level. But my point is, running through the day has been this notion of how blockchain in various ways and forms can enable that digital backbone in healthcare, in identity, in various other ways. And that also ties back in with the sort of keynote this morning from Robert Ops from the UN Development Program and their digital sort of program, saying that, what he saw and what his team saw was that countries that had a strong digital footprint already have very much survived the pandemic far better. And blockchain is one of the technologies that informs that. So I think the short answer to your question is yes, but you have to take a holistic point of view, that it's there as a foundational layer, not just within healthcare, but within identity and many other areas.
And we've talked a lot about medical care. What about the scientific research? I think we've seen how important that has been with the mRNA vaccines. Is there any way that blockchain or other technologies can help accelerate that?
I think, yes, there is potential. With regards to what we have discussed with the prior question, I don't think it will be immediately utilized for those kinds of use cases. It'd be best to proceed cautiously because it is very sensitive data. I think the low-hanging fruit for blockchain technology applications will come in the form of savings on administrative overhead and financial risk monitoring. That's my personal opinion. But as Jamie said, it's all about implementation. My view is that technology it's not evil in and of itself. It's all about who's building and designing it and for what purposes. And the purpose drives the design. I really like the mantra in the video leading up to this talk, which was life over profit. Early on in my customer discovery, I actually come from a family of physicians, so everything you've been saying, Jamie, I've actually already heard. I remember going to meet up with a colleague of my dad's, and I remember thinking, I don't know how I'm going to shape this project or make any difference in this world. It's so dysfunctional. I'd grown up at the dinner table hearing how our whole world was collapsing, and the decision makers are business people and not practicing physicians, and it's all going to, there's no hope. And my dad's colleague, however, had started out as an anesthetist, a nurse anesthetist, and had moved up the ranks and was a high-level administrator at the time we were talking. And he said to me something that has carried me forward to today, and that was, lead with the good of the patient. And he said it's incumbent on all medical professionals to be good financial stewards. So to your point, I think there's been a dichotomy actually in healthcare. It's a very, very sort of particular space. You can't apply, I'm not an economist either, but I don't think you can apply regular economics to the healthcare space. There's a whole niche called health economics, and it's fascinating, but it's very complex and very nuanced. To circle back and tie this back into your initial question about blockchain impacting clinical research, I think where blockchain will really be interesting is how well can blockchain help integrate what right now are, I feel, two things running on parallel and separate tracks, and that's the administrative, business, financial stewardship side of things. We have limited resources. How are we utilizing them to the max? And the clinical considerations. Right now, insofar as I see it, those aren't talking to each other. So I think the ideal blockchain application is going to bring those two and sync them.
I agree with both of them on everything that they've said, and I love it. And I love an anatomy analogy. So so already big win. And I can tell I love your family already too. No, the sad reality is it did take me quitting medical practice to get a voice. And that to me is just not what should happen. And what I wound up meeting in that DC world and everything with educational advocacy, a lot of great intentions, a lot of brilliant people. But I think I've come to the place of you must have thinkers and doers. And many are both inherently, but I don't think, I was so happy to hear you speak of how you were interviewing doctors at the beginning of your company and stuff like that. More of that. That happens a lot in the biomedical engineering space, but it doesn't happen a lot in the healthcare space, where you get early, the more, I think it's extremely positive that I'm here. Because how many doctors or whatever who practiced and things like that. And I think that's a testament to the leadership at GBBC and their intent to really make things better. Because a lot of the things that have impeded quality of care are the ever in fragmentation of it. It's been shown left and right, the greater the continuity of care, the more positive outcomes medically for patients. So any way that can be better aligned, I would be super on board for, because that's the whole purpose of why really people go into medicine, is to help people. You're going to have bad actors in anything, but I really think people are mostly good. And I think there's a lot of optimism to be had, but you don't ignore the Theranoses and the, how things went awry with the advent of the electronic medical record. And to your point of the nuance, that's always my thing I'm banging my head against the wall is that you have to meet people where they are when you want to, as I said, with a case-by-case basis of medical treatment. The right thing is not the right thing for every single person. Speaking, I was a pediatrician in New York City. There were a lot of vaccine hesitant folks throughout. I mean, that's a case example. I had so many people's fears aren't a monolith. And once you just have a conversation instead of this us, them, or, we don't kick out people in medicine who smoke or who do other things and things like that. There's a humanity and understand where people's fears come from. And, uniformly got people to vaccinate, because you have to be a human first. So I think restoring the humanity in medicine and design and having conversations. And the other thing too, when I shifted out of medical practice, one of the conversations, I didn't know which direction I wanted to go. And I met with my childhood pediatrician who at 60 started his own company that he wound up selling, grew to 1,000 sold, started a second one, sold. And I remember meeting with him and saying, I don't know which direction. He's like, Jamie, stop meeting with doctors. And I said, oh, because what I funded him, and it was probably one of the greatest pivots initially. And I thought, wow, I have all these wonderful people from the different periods of my life. I don't know if anyone who knows who Dean Kamen is, but he is he did the Segway, that people know the Segway, but that's the least of it. He did a portable, he designed, he's like a modern Thomas Edison, designed the portable at-home kidney dialysis machine, the continuous infusion pump, cardiac stents, a iBot wheelchair that rises to the level of a standing person. And I knew him for 10 years. And I never had this conversation with him. And I shot him an email. I'm like, so first I met with my pediatrician. I shot an email and said, I'm interested in pursuing something else, not sure. He had me up to New Hampshire. We spent like 8 hours or whatever. And it was I realized how many people in my life I have who have done the world differently and have such expertise, knowledge in a different way in terms of worldview, and not just lawyer, doctor, or that kind of thing. So I think I really am a strong proponent of what happens is, in this Research Science Institute, where I do think a way to be proactive for future pandemics instead of reactive is investing in this next generation. So the Research Science Institute that I direct has the top 81 STEM scholars in the world in high school students, and they do original research. These are the kids who are going to come up with not even needing an MRI and a vaccine if you continue to invest. So I think investing in the next generation is crucial. But I also think getting them, and also not, once you go on your career trajectory, and fortunately I think that's changed tremendously since I went to med school, but when I went to med school, it was you're a practicing doctor, you're a this, you go to law school, you're a lawyer. And I think that once we all get into our silos of discipline, things that you think are routine are revolutionary in another field. And you don't think of that because you're in a total echo chamber, just like you were saying, where he said, don't meet with doctors have a culture, lawyers have a culture, business people have a culture. And I think continuing to integrate those and getting the perspective from all of these once you're well into your career is a revolutionary thing. In terms of scientific research, I mean, the whole grant funding system is exponentially now. There may be areas there with regard to, which I was happy to see, because scientists and researchers, which you want to be spending the lion's share of their time on the actual research, applying for these grants and things is just encroaching so much on that it's like exceeded the 50-50 mark, I think, in a lot of cases. So I think that's a definite area in terms of research. Then, of course, adding people for clinical trials, stuff like that. So I think there are opportunities in science, but those are just, I know he's going to nail it down with an economy of words and everything that I tried to get out.
So I think there's a couple of ways of viewing this. One is research is a collective, collaborative activity, and therefore anything that assists and enables that is a good thing. I think if the Global Pandemic Shield guys were on the panel, they'd also say, well, actually, we're looking at it differently and saying, let's use it as a way of funding research. So, which was a novel way of thinking about it that I hadn't actually appreciated. So I'm sure they would want to emphasize that. But leaving aside, it's clearly a technology that can help with that collaboration, with sharing information in a safe and secure way. The other thing it can do is actually create the space for that research, because the origin of the word scholar literally means creating time to think. So if we can give researchers time to think, by clearing away a lot of the inefficiencies and a lot of the waste, because there's a huge amount of waste. So Bart is in the audience here. His company is looking at using smart contracts in order to eliminate waste and inefficiency in the implant device, medical implant device industry. And so much money is spent, or indeed oftentimes wasted, that if we can actually help clear away some of that and free up cash and free up resources, then that's another way we can contribute to creating that time to think.
Thank you so much. We are out of time, guys. It's amazing. I know. Such profound thoughts. Thank you. And, clearly we've got a lot of work to do. But thank you so much, Dinah, Jamie, and Duncan for joining us.
Pleasure.
Thank you as well.
Hi, everyone. Thank you for staying with us. We will begin our last panel of the day, Empowering the Creator in the Digital Age. So please, I'd like to welcome my panelists on stage. Well, thank you. Just to tee up this conversation a little bit, some of the ideas that we're thinking about is sort of the spotlight that's been placed on the entertainment industry, publications, and sports as to some of the inequalities that we'd like to tackle, both that have maybe come to the spotlight during the COVID pandemic, but have also been existing for much longer than that. And I think we have a great crew of panelists here representing an array of views in this space, both producers, investors, agents, and a technology platform. So I'd like to start sort of by asking you all to maybe briefly introduce yourselves and also let us know kind of what your thoughts are on how you've seen the evolution of the space that the creator and entertainer occupies over maybe the last year, and also what it'll look like a little bit into the future. So I'll start with you, Heidi.
Sure. First of all, thank you so much for having me. It's an honor to be here. Thank you to the GBBC team for putting all of the hard work and putting this together. So my name's Heidi Peace, and I wear a couple of hats. I am the head of investment products for a top 5 regulated SEC crypto and digital asset management firm. And we have recently launched an NFT fund, one of the, if not the first, one of the first of its kind. And I also have recently launched, as of today, a platform that helps artists and creators and nonprofits connect with their community, fundraise, and market projects using digital assets such as NFTs. Thank you. And we're going to hear a little bit more about that from our friend over here, Jesse.
Great to be here, everyone. My name is Jesse. I work at Mint Talent Group as an associate agent. I'm here based in New York. And Mint Talent Group, we're a work booking agency, and we route tours for our client of artists. So, we work with artists everywhere from, reggae to DJs to jazz to Southern rock. And, we do a little bit more of that. And one of those things, of course, is branching out into NFTs, which we're excited to release one of our first projects today with Heidi at POA. Thank you.
Hi, everyone. Oh,
Hi, everyone. My name is Vanessa Gerlay. I'm an investor at CoinFund, one of the longest existing funds in crypto. We invested very early in NFTs and NFT platforms with initial investments in Dapper or the Rarible marketplace. We also have a vehicle that invests in NFTs and NFT platforms, which is a separated entity from our fund. And I'm excited to be here to talk to you a little bit about the trends we see from an investor perspective.
Hi, my name's Wendy Fetterman. I am a Broadway theater producer and film producer. I've done over 90 productions. I have 9 Tony Awards. And it has been a very interesting 18 months for the creative, not only the creatives in my industry, but for the over 100,000 people just in the city of New York whose livelihoods were affected by the pandemic. So this is an interesting conversation about how these technologies and working in digital space and with something like what Heidi has just started today, congratulations, could be something of useful, but to have another way for creatives to monetize their work that is not necessarily dependent on although live is coming back and will be stronger than ever, but to just know that there will be other ways for them to monetize their talents that will not only help the creatives, but may also help the productions as well. And that's why I'm here to talk about anything to do with Broadway and even with film, still having issues with having to have COVID pods and the extra expenses. It has been certainly a challenging 18 months indeed, but God willing, we're coming out of it.
Thank you. I'd like to tease out a little bit some of the problems that I think some of you have alluded to. I think, Jesse, in your bio, you say that you built a talent agency that rose out of the ashes in 2020. So maybe you can tell us a little bit about how the business has changed and what opportunities you see to make it better. And maybe you can dive in a little bit to the tech that you're using.
Yeah, totally. Well, I mean, we all know it's been a little bit difficult to see live music the last year and a half. And, the artists that we've been working with and artists just around the board have definitely been suffering from that. So, we started a year ago. It's actually our 1-year anniversary, and we all Mid-Talent Group, we came from larger agencies and decided to form this new one, hence that diversity I was telling you about the roster. And, over this last year and a half, we've had to get pretty creative with how we're working with our artists, especially since we formed our company to book live tours when live tours could not exist, right? So it's like, what do you do for those clients? Especially when live touring is the largest way they make money. So, we came up with things like, one of our acts, which has a really diehard fan base in that, Americana country leaning realm. We had them send emails out to all of their biggest fans, said, hey, do you want to host us in your backyard since you can't play in real venues? And we had overwhelming responses, and we booked a whole tour in, their friends in their biggest fans' backyard. So it's like thinking outside the box. Things like that is something that we've been doing. And then, moving forward, I think like the big thing is just being smart and thinking ahead. As agents, like things are so fluid and changing so much, with it seems like every week a different state has a different gathering restriction or vaccination requirement, or, that also boils down to the venues doing different things. And then the artists have different, says on if they want to play, show where it's testing only or vaccination only, et cetera. So it's like booking those tours and anticipating whether, we might have to push this back in 5 months or not. And then also when you confirm that show, maybe like reserving the same dates in that tour 5 months down the road in case it can't happen. And then you have those dates already reserved. So, those kinds of things are things that we've been really working on.
Wendy, I saw you nodding over there. So Broadway just opened. I'm sure you have plenty to talk about in terms of what's going to change in the future, what new what new strategies or technologies you've been able to utilize.
Well, I think something that we found that some shows were resistant to is that I think we're going to find more live streaming of shows, filming of shows to stream. I think the Zoom became a big technology. First, not only in our being able to communicate with each other, but also even being able to have a reading if somebody had new material and want to present it. Directors even got very creative in figuring out how to not make it look like 5 or 10 people in a box where you almost got bought into the world that you were watching, maybe not live performance, but that the actors in a more organic setting. So I think that's certainly going to be one way that with technology. I think what we've also learned is, right now, Broadway, New York City, we have incredibly safe protocols. You have to be double vaccinated. You have to wear your mask. That not only goes for the audience, but it goes for everybody working in theater. I think where Jesse and I are similar in that, in addition to our Broadway shows, we have the national tours, and that will be something interesting and challenging when we send our companies of 50, 60 or more people out around the country, and every state is different. We are a union kind of dictated to by a lot of the unions, with Actors Equity, among all the other unions. So safety protocols will be followed. And obviously, from location to location, there'll be a COVID officer, company manager with each tour. So that will all be decided as that goes along. And it's just going to be, we're going to learn as we're going. But what I'm finding interesting in my conversations about at the NFT world also is as another way for the creatives to be able to monetize their creative work. This is something that we're going to look into with Broadway and Broadway productions. Is it, a lot of times you write a new musical and there are songs that are written that don't make it into the show, but maybe that becomes an item. Maybe it's an experience. Maybe it's the playbill of a first show. Even though we live in New York City and have our exposure to Broadway, I'm always reminded about how many people don't even live near a city that has touring companies going through. So the opportunity is tremendous for what we can do. And again, it could be another way to ensure revenue, which was so lost during this time, but to ensure revenue for our creatives and even those of us that back the shows, to figure out how through this new way of bringing in this new income stream, how we can move that forward. So that's something that I'm finding interesting and exciting. Those two things, the streaming possibilities and this new way of this new kind of merchandise, this digital merchandise, digital experiences. I think everybody's gotten used to having more of these experiences at home and with groups, but not necessarily in the same room, or they just don't live near a location where they can be privy to theater, but maybe there's another way that we can bring these communities into our Broadway world.
Yeah, absolutely. As a consumer myself of some of the things that have been televised, thank you to you all for doing that. You brought us to NFTs, which as the Global Blockchain Business Council, I have to say I'm happy about. And we have two folks here who can speak, well, three probably, who can speak heavily on NFTs. So I'll start with you, Heidi. Can you tell us about the proof of art platform, sort of what you've launched, but also what does that mean for the creator? What's the opportunity there? Why would a creator want to utilize NFTs?
Sure. And I should also mention that there's a co-collaborator in the room that's walking behind us as well, Sandra Ro. Originally, when Sandra and I had met, we were asked about how can blockchain really help artists, and is there an opportunity to get rid of that phrase, the starving artist? And maybe in reality that's not possible, but why not pursue that? And so we look at POA as a place where artists can fund, and not just artists, but creatives of all sorts and fund and nonprofits and so forth, where they have an opportunity to engage with their patrons, with their fans, through NFTs, digital assets, and also through token mechanisms. And in particular, we see that what really excites me about NFTs is that an artist, perhaps for the first time in history, really has an opportunity to participate in his or her own success. So if you think about it, in maybe an artist like Picasso was so poor, and then when he passed away, that's when his work started to become worth quite a bit. Or even today, an artist might sell his or her work for $500, but then as that artist becomes more established, that same piece of work is sold down the road for $5,000, $50,000, $500,000, but that artist never gets a penny of those secondary sales. And that's what's really exciting about this space. One of the exciting things is, for as long as that NFT is in existence, that artist has an opportunity to really participate in his or her own success. So that's something that we're really excited about. We see that there's a lot of artists that have been suffering, especially from this past year. And not only that, but there's an opportunity to really connect with their community in ways that they may have never been able to do. Whether that's really engaging their fans to help them vote on maybe lyrics of a song, or using tokens as tickets to a fan event. In fact, I'll let Jesse speak about that a little bit more. But one other thing that I want to mention too is that we are strongly involved in the nonprofit world, and in particular, Afghanistan and the crisis that's happening there. And we're really looking at how can we connect with women from Afghanistan who are artists. And in fact, there's going to be an NFT gallery out in the hall. And one of those is an artist. And how can we help to fundraise, promote her, fundraise, and help provide funding for much needed cause. So there's really this opportunity for a 360-degree economy here. The artist, the project, and the patrons that are interested in supporting them.
Yeah, Vanessa, you work with a number of companies in the NFT space, and I think CoinFund has a very forward-leaning view in sort of long term. So maybe we're just kind of scratching the surfaces of where we are with NFTs now. Can you tell us a little bit about the companies you work with? And then also adding to that, sort of this idea of the convergence between physical and virtual space and what that means for the future.
Sure. Does this work? Yes. So I think, the emergence and the explosion actually of NFTs was a perfect storm that has been in the making for several years. So the technology has been maturing for the past 3 years. Jake, the founder of CoinFund, and I had been involved pretty early in NFT projects, some of which had failed because just the timing wasn't right and the understanding of the technology wasn't there. And then, of course, everyone stayed at home and, had to find new ways to connect. And art and creativity is always top of mind for that. But also, you have one generation that's digital first, and that is bringing everyone into that trend. And so NFTs are a way for people to express themselves, a way for people to connect, a way for people to create value, to create communities, for fan engagement, as you said. And so it's a really exciting time now. We see a lot of NFT platforms popping up left, right, and center with specific communities. The big platforms that have been there for a while are really Dapper and the Flow blockchain, OpenSea, Rarible, all these huge platforms where you can trade NFTs. And the general trends that we see is really digital first. So, we have our physical lives where we connect, we go to Broadway shows, we go to concerts, etc. But now the metaverse life and the digital life is really going to be where value is going to be created first. So if you're thinking about, connecting the physical and the digital, there are some, luxury good items that are sold for more money in the digital world than what they are worth in the physical world. And I think that transformation of our society is going to continue. And we see a lot of projects and investments, for example, buying land in the digital world, making tons of money just to secure in advance at the beginning this part of the new economy, the new digital economy we're going to see emerge. And right now in the NFTs you have the art, You have the collectibles, who are really the two main categories. But if you consider it from a technology perspective, NFTs are just non-fungible tokens, and anything can be represented by NFTs. So the next wave of NFTs that we're going to see beyond the creators and the digital artist is really going to be financial services and other real-world asset-related industries. I was lucky enough to be part of a project called Aura, which is a consortia of luxury goods company, including LVMH, Prada, and Richemont, that really spoke to that use case of linking the physical and the digital in the luxury worlds, and being able to identify for counterfeit purposes those items. But I think that's one use case, and unless it's a very specific industry or type of goods, it's going to be hard to link those two. There's another example with Microsoft where they have a hardware supply chain, which is high value. So think of like high value items, which you can tag physically and represent digitally. And you have to think of that link. And when that link is broken, what does it mean? So there's a lot of things to unpack there. But I think where we're going to see is the digital leading the physical rather than too many use cases linking the two.
I would just want to jump in. Thank you. That in the gallery afterwards, there will be on one of the NFT frames some metaverse. So if you're interested in what does the metaverse look like, it's out there. I actually think it's going to be a new form of art as well.
Okay, so we're talking about the metaverse. That's pretty out there for a lot of people. We're talking about digital and physical, but okay, from a practical perspective and in terms of attracting new audiences and allowing creators to broaden their audience, is it even necessary to explain that the ownership of an NFT might differ from buying a song on iTunes? I'm hoping maybe Jesse, Wendy here can chime in on what your audiences need. Sort of, how do you make this interesting and accessible to broad audiences, which is really what will ultimately, hopefully, benefit the creator as well.
If it's another source of someone who's of a fan base, having an opportunity to feel part of that show, if they're a fan of it, that they own another way to, it's not just wearing the T-shirt anymore. It's kind of like that next new level of having a piece of it. And I think for me, what's exciting for them is also if there's going to be the virtual, the experiential rooms, that maybe the token, having that token allows them to be in a space where they get a one-on-one chat, they get a creative, they get to, like I said, they get to hear songs that weren't in the show, they get to hear something in the background, something that makes it exclusive. And I think on the other hand, there's an audience, because the Broadway audience, it's starting to skew a bit younger, but it's always skewed older. I think it's great that, we're going to be bringing we can expand the Broadway audience to a younger generation that's going to be looking at the NFT market, and we can bring, let's say, the more traditional older audience and saying, oh, I can buy NFTs on my favorite, on an NFT for Hamilton, but learn about NFTs and then start experimenting into other arenas, seeing of what it's doing with art, and now that it's popping out with music. It kind of almost seems, I don't want to say limitless, but I think if the strategies are figured out correctly, it can only it's a way to engage the fan base even more. And once again, protect and help, give creatives an opportunity to get their work out to an even larger audience.
Yeah, you put it well. I mean, you could think of, I guess, in the music sense, if you were to release a song or any kind of item to fans. I mean, it's a status symbol. You can almost compare it to like the artist dropping a pair of like 10 sneakers or something. It's because we know sneakers are like something that you wouldn't necessarily like wear out, but you own it, and having those for some reason creates a lot of value. So if you were to drop an album, right, and each song was an NFT, let's say, and on the blockchain, and 10 different people bought those 10 songs, it would be interesting to see like how the value of each song went up, and how, I guess, the market, well, not the market, but like the overall fan base, like dictated what the value would be. So, and it's also just like, it's a key to the fan club, when, coming out with these, the fans, you own one token, and then you could say, okay, if you own this song, you're going to be the only one who knows about the next album. And then you can just build on with that album with different remixes, or, maybe only announce the tour dates to the people that own that album. So you can just kind of like, it's almost like an inception. You can keep going more in and more in and more in and involving the fans more that way.
Yeah, get early access to purchase.
Exactly.
Better tickets. Or what if there's a certain version of a song that's done differently, and only you can be the one that can own the version that's being done, in a different tune or in a different way. Yeah, that's it. But that's what I think fans more than anything want unique experiences, and it can only be good for our creatives.
Correct. Yeah.
Okay, so not a perfect tangent, but alas, we're still talking about sort of engagement and folks engaging, whether it be fans. And I think also we can talk about that in sort of the sense of like philanthropy and what you're doing with Proof of Art and the Afghan women and fundraising. Sort of what are the opportunities there? Could you like expand a little bit about what you mentioned with the Afghan women? And also, hopefully, Vanessa, you can speak to this. If we're talking about NFTs also and sharing payments, like, is there a smart contract layer in addition to that could improve the fairness and equity once we're kind of distributing that? So Heidi, we'll start with you, and Vanessa.
Sure. So the question is, how can perhaps NFTs help with equity?
Well, just sort of tell us a little bit about the idea with the fundraising on the Proof of Art platform.
Yeah, we have seen tremendous growth in NFTs. And I believe part of that is the excitement of the new space. It's the metaverse. We've been cooped up for the past year or so. There's a new generation of wealthy people who've made their wealth on crypto in early days. Also culturally, maybe this is a generation that's not as motivated for physical items. Maybe they're more interested in digital items. And we've definitely seen a lot of excitement, a lot of new art in this space. But we've also seen a lot of speculation. So a lot of these NFTs, you might look at them and kind of scratch your head and think, why are they selling for millions of dollars? And that's, really, I guess, art is in the eye of the beholder. But I say this because their NFTs are becoming, there's a category of NFTs that are very speculative. I think that there's an opportunity here, not only for these NFTs that you purchase for a couple $100, and then in a few days you've made a return on your investment a few thousand percentages. I think, I'm hoping anyway, and maybe that's the idealist in me, but I'd like to think that this generation, this crypto generation, is also about our community. And I would love to see something like a platform, whether it's POA or another platform, that really supports NFTs for good causes. So could you imagine right now these crypto punks that are selling, for a floor price in the hundreds of thousands up to the multi-millions, and these are used as avatars in many ways. Could you imagine, what if there were avatars that people bought that symbolized a life that you saved, or something that went towards the environment? And then those as well could become collectibles. I mean, maybe this is perhaps, a beautiful vision of something that could be, but at least it's something to strive for.
We want you to think big.
Okay.
Yeah, no, I think that would be very exciting to show like a donor status and the cause you care about through the NFT. I think that could be very successful.
Thank you.
On your question about royalties, so of course, like the promise of these NFTs and blockchain is that you're able to embed in the code these automated payments. And various platforms offer that capabilities when you create the NFT. So you can set basically the percentage of royalties that you receive each time that the NFT is sold and resold. Some artists set it at a very high rate. Some artists set at a very low rate, depending obviously on their market power. So I think reversing the existing situation where you only get one chance of making money as an artist when you sell. That is turning everything on its head, and that's very exciting. There are some issues from a technical perspective. When you buy one NFT into a platform, you sell it on another platform, sometimes the royalty breaks. So it's something that people are working on. So not perfect yet, but we'll find ways to innovate on that.
Yep, the space is fast evolving. A lot of smart, talented people working on these issues. And so I think my question to each of you to kind of close out here is, at the end of the day, humans are creating this technology, humans are creating these solutions. What role does the consumer or do the businesses play in ensuring that we create a fairer system rather than perhaps exacerbating some of the inequalities that already exist? Are we on the path to do that, or is there more that can be done?
That's a good question. I don't know if change ever comes from a business mandating something, or I think change comes from a cultural movement. And what greater cultural mover is there than the artist? That's the artist is the one who connects with us here. And this is what moves the world. More than this, it's this. So I think giving the artist a platform and opportunity to really connect with the world, perhaps that's really the opportunity that's going to help move more justice or equity. Again, maybe that's me being an idealist, but I truly do think that that's why I love art and artists, is because what moves me, and I'm always so inspired by them. So I'm going to say that it's really the artist that is going to move this space for us.
Yeah, I mean, you couldn't have put it better. It's like the artists have the biggest voice to the community, and they're the ones that are going to make the change and change the way that everyone thinks. And also the art will also have that effect too. So I mean, I think it's it's partly on the artists to make themselves heard, and not just put out music, but the communication between the artists and fans has grown exponentially, as we all know. And so just not just making the music that positive change, but actually doing it, not just talking about it. So I mean, one of these things is in NFTs, for instance. I mean, when you're selling these NFTs and tying in a charity component to this is something that a lot of artists are doing. And it's something that we're doing with POA and the Allman Brothers band with the NFT that we're dropping now. So that's one thing that's really important.
I've always looked for work. I think that there's something interesting in the entertainment world, because it's wonderful when we can just make people laugh or make people cry, but there's something in entertainment where we have the opportunity to sort of educate while entertaining, so people are really getting the messages across. I know I've worked on many projects over the years where that hit home to so many people, that caused conversation on very important topics. And the optimist in me would like to think that after the last 18 months, I've seen many acts of kindness and goodness and the fragility of life, and especially the fragility of to even be at an event like this where we're all in the same room together. So to bring people back to concerts, to bring people back into live theater, and our creatives are the ones who get to tell the stories and engage people in a way where the message for good can be sent out in a way where, again, because it's being done through an entertainment, or maybe it's being done in a way where, I'm going to buy the NFT because maybe it's an investment, but I love that artist, or I get that message. If underneath it all is this, our positive message is positive messaging going through, the way that you're helping people, the way that any of our again, the arts has the opportunity to really send a message across. I'm working on a film now about a woman called Lily Ledbetter, Fair Pay Act, and telling this incredible story of this real world. She's in her 80s now, but a true story, where she found out back in the 80s that at her job that men were being paid 3 times more than she was for the same job. And we're doing this film now, and it's going to be hopefully a great entertainment and do very well and award consideration, but the story is still in 2021. Women are still being paid 79 cents on the dollar to men in the corporate world. And again, if we can educate through entertainment, so much the better. If we can help get across wonderful messages through these new technologies, why not? And I think it comes from art and from the creatives to get that message out in a way where people aren't turned off, but that they're turned on, and hopefully take positive action because of that.
So I think the fact that it's just digital really opens up the world to artists. That being said, a little bit like what you said, that doesn't mean that, you put something on, you create an NFT, you put it online, you're going to be successful. It does take work and dedication to engage with your audience. And so the artists who are going to be the most agile online and know how to work this new audience are going to be the ones that are going to be the most successful. And it doesn't mean that intermediaries are going to be wiped away. I think they will still be there to help them market, etc. I think, however, that the economics are going to change a little bit in the favor of the creators and content creators, and that we're going to find new ways to remunerate things. So what I want to put the caveat that the NFT space is highly financialized. So it is an art market that is very much so a market. And so you have to come in with your eyes wide open there. And what, is successful or not will not only depend on the quality, but a lot of other factors that you have to take into account.
Brilliant. Thank you all so much. This has been a wonderful way to close out the day. I invite you all who are here in person to join us for a reception and a wonderful NFT gallery featuring, I should say, contributions from Coin Fund and Wave Financial, as well as Proof of Art and many of our other sponsors, as well as the Allman Brothers and Mint Talent Agency.
And Vogue.
And Vogue Singapore. How could I forget? So please join us. Thank you all also who joined us virtually.